Good morning to all those here in the room and to those who are observing online. Good morning, good afternoon, good evening, depending on where you are. Thank you very much for being back to the board December board meeting, second day. I'm happy with how the meeting went yesterday, and I think that we all have reasons to be. Thank you very much for your wonderful, amazing contributions. I hope that today it goes at least as well as it did yesterday. But just before I will give the floor to my Vice Chair, Laurie Ansley, to present on the experts' proposals, I'd like to reiterate, reinforce again the message that we will have to be very disciplined over these 2 days, mostly. The agenda is really ambitious and very challenging, and we will have to make sure that we keep ourselves within the time that we have for the discussions. So please, again, without preventing any kind of contributions, comments, or questions, let's try to be as focused as possible in our discussions. And with this, without spending more time on initial considerations, Laurie, the floor is yours.
Thank you so much, Gabriella. And we're very pleased to be here this week as we work toward finalizing, hopefully, the exposure draft on experts. The experts task force, which is made up of Cam, Luigi, Sanjeev, Sadia, Andy, and of course, always Ken, and I'm always amazed how many task forces he's actually engaged to. I think he has a body double somewhere, but we appreciate that. Are at a place where we feel comfortable with the draft, but we welcome comments today as we fine tune and move toward hopefully a vote on Friday on this document. So we're going to talk a little bit today. I'm going to go through the agenda right now. Brief recap on the project, task force activities since September. We're just going to do a highlight of the key changes. We're not going to go into them because what we're going to then do is go into a page turn, but we just want to highlight a few of those key changes. Some of them come from those of you here in the room, and we just want to, on the front end, make sure you know we've addressed those. And then we're going to talk about the next steps in the turnaround this week so that we are in a good shape for Friday. And we've got obviously task force meetings planned this week. So if we go to the next slide, the current code addresses very little in terms of independence for experts consulted on audit assurance, and it's sort of focused on that. It does not address external experts used in audit assurance, external experts used for NAS, or external experts used by PAIBs. The ISAs have some things, as we all know, around competence, capabilities, and objectivity of external experts, but some of it's very slim, especially in the objectivity space. It just states the need for objectivity. And it delves a little bit into how to use management experts in terms of from an assurance standpoint. So the desired public interest position that we're moving for and what the code should and will address as we move forward, at least in terms of the exposure draft we've got now, is independence for experts consulted on audit and assurance. Okay, that's fine. Competence, capabilities, and objectivity for external experts used in any professional service. More detailed, much more detailed than what's in the ISIS right now, adds that the ethical standards that we want. Additional layer of rigor around independence for external experts whose work is used in audit and assurance, including SAEs. And obviously that addresses the heightened public interest in that space. And then external experts used by PAIBs, and how do we think about that? Because that's a little bit of a confusing area, but obviously it doesn't have that same heightened public interest because it's usually internal use within a company. So significant move, the current position to where we are in the exposure draft right now. So what have we done since September? Task force has been extremely busy. We did an in-person meeting in October. We've had 3 virtual meetings. I feel like it was more than 3, like maybe a few calls in between as well. Maybe that's Cam and I, but and we've posted a draft December text, which was informed by quite a bit of activity. Most of you will recognize we did an offline circulation of the October text for participants, and thank you to those of you who submitted comments against that. We tried to incorporate those where we could, to the extent they came in time. A lot of coordination going on with the IESBA and sustainability and experts groups. around coordination, and we'll get into section 500 of our experts area, which fits into the sustainability drafts. And then an information session, which thank you for those of you who are able to attend. And I know some of you found it helpful. And if we need to, we'll go through the schematic again. We're not planning to, but if we are struggling a little with some of the definitional stuff, Cam has done a wonderful schematic, and we'll jump into that if need be as we work through things. Okay, so I'm going to spend a little time on the key changes. We don't need to go into the discussion here, because when we do the page turn, I think it will be best placed to do the discussion there. But I just wanted to highlight a few of the major things that have gone on. There's obviously a ton of smaller changes that we'll see in the draft, but these are the more significant ones that came from comments either in September or in the period October up till the time we released the draft to the board for consideration in December. So we had some comments around the approved project proposal containing considerations of ethics and independence for all experts. We've got some detailed explanation about how we approach that in the exposure memorandum, or the explanatory memorandum. But we've considered all experts, and you will see as we go through, some have been picked up, some not, because they're already picked up in other ways in the code. Okay, key changes and considerations since September. Scope of provisions refined to focus on external experts only. That was a big takeaway, I think, from the September meeting. We know that engagement team and audit team or assurance team members are already subject to independence, and the provisions do not apply for them, and that's been clarified. Internal experts of a firm used for NAS engagements already subject to a firm's internal policies and procedures, and also to the code. So that's under section 390. Under 290, this is the comment I made about PAIBs, often use the work of others internal to the employing organization. We aren't putting them through the CCO process because it's internal work that they're doing. It doesn't go to that heightened public interest area. I mean, that's helping management do their work, but and we're not going to use the word management's experts, but those are experts hired by the client, and that's sort of their option. So Cam will refine my language on that when we get into the actual sections. Performance standard include IEESB standards, already include extensive guidance on agreeing terms of engagement. So we did hear that feedback. We have some language in our draft, exposure draft, which talks about how the PA should go about defining terms of engagement. We've refined that language a little bit, but we've left it in because it's very important in terms of making sure that they're asking for the information that they need from the experts to make those objectivity determinations. So we've tried to avoid duplication, but we've retained the paragraph because it facilitates the evaluation of CCO by the PA, and they need information to make that evaluation, and they need to do it during the engagement period. Okay. Whether the CCO evaluation should be concluded prior to the expert starting work, we had long debates over this. I mean, I think generally we believe that in best practice that would be lovely, but the reality is often, as we know, time is tight. Certainly, I think it might not be practicable to wait until that evaluation has been completed to start work. We've made clear it has to be done before anybody relies on that work. The CCO evaluation has to be completed beforehand, but it can take place in parallel with the work progressing. I think, look, for most of us understand that's not really an ethics issue. That's more of a risk issue, because you run the risk that if you get to the end and you can't pass the CCO evaluation, you have a problem. So if you're smart, you do it earlier rather than later, but that's not necessarily an ethics issue. It's a timing and a risk-based approach issue. So that edit has been made, some clarity around that has been made. We explicitly set out which objectivity factors are specific to the external experts organization. We've had a lot of discussion around individual versus organization, and that language is flowing through. I'm not going to go through that here because we've got that language in the documents we're going to look at. But certainly there are things around the organization that could impact the expert's objectivity. And so therefore the expert needs to take into account interests and relationships at the organizational level as well as the individual level. And the factors are explicitly specified in the text of the language that we're going to go through. Expectations for the external expert with regard to its organization. And I think, Luigi, this might have been an advanced comment that we got from you. Yes, correct? Okay. Not anticipating that an external expert must set up or have in place an entire system of quality management. Some will not. We know that. I mean, these are not assurance providers. Keep in mind, these are experts in a particular area. So it's not enforceable or necessarily practical for us to expect that. Instead, at the time of in agreeing the terms of engagement, the expert has the opportunity to take the appropriate steps in good faith to gather the necessary information and provide it to the PA. And that's why, as I mentioned earlier, we've kept that language in the engagement section because it's important to support this. The PA needs to exercise professional judgment when taking into account those interests and relationships at the organizational level in evaluating whether the external expert is objective. So I'm going to pause here. We're going to move into page turn. We're page turning the drafts marked up, if I'm right, Kim, against September. Yes, so everything since the September meeting, including all the comments we received at that meeting, as well as all the comments we received during October, and against the drafts we sent out in October, and anything else verbally that came in that we could capture. So I'll pause there. I don't know if anybody wants to comment, or we're going to jump right into the page turn. Okay, Cam, take control of the wheel.
Esther, could we stop the, thank you. All right. So I have started screen sharing, as you can see. Okay, here we go. Okay, so as Lori mentioned, this is the glossary markup from September. The key changes here really relate to the first. We'll go through one by one. So the first one is expert, acknowledging that here we've removed individual or organization from the definition of an expert, and that is essentially because it's recognizing that whenever an expert does the work, it's an individual that does the work. However, we also recognize that an expert opinion or report or the piece of work that's actually issued could come from the organization itself. So that's why we've also added that sentence here, where appropriate, the term also refers to the individual's organization. As you'll note, this sentence here has been removed, and that's in response to the September feedback. We also considered a comment from an advanced comment from, not advanced comment, an October comment as to whether this term is necessary, given that the provisions now focus on external expert only. The task force did discuss this and note that this term is necessary. The term expert is used throughout the code, and it could cover essentially either its internal expert or external expert. And so that's why this term has been kept in, and it obviously builds onto the external expert piece. There's been no change in the previous proposed definition of expertise, and that's knowledge and skills in a particular field. With respect to external expert, there's not been many substantial changes. We've made sure that to highlight in the lead-in here that an external expert could also be engaged by the sustainability assurance practitioner. One advanced comment we did receive on the text is in the context of sustainability assurance engagements. I don't know if you can see you can see my cursor there. There was a suggestion to also add engagement leader here, as well as partner or member. That came from Sung Nam, thanks. And so we'll take that away and consider that, just to make sure that this is also applicable for those non-PAs under Part 5. And as you'll see, we've also removed the proposed definition of management's expert. This was essentially considered not needed anymore because obviously the proposed new sections 300 and 300 do not cover management's expert. So I will just pause here for any comments on the three terms.
Just a question. So, I mean, I'm maybe I missed something, but how come? I mean, an expert cannot be an organization. I mean, it's so it refers very explicitly. I'm sorry, the external expert. Whether you're talking about an expert or an external expert, couldn't it be an organization?
Just to respond to you, yes, it can be. And here in the definition of expert, where my cursor is over here, we do recognize that fact. Where appropriate, the term also refers to the individual's organization.
Yeah, you're referring to the individual's organization. But I'm saying, my question is, can the expert itself be the organization? I mean, you get my point. I think in that case, some things.
Yeah, I think the issue is in terms of using expert, it's always an individual. There's always some kind of lead individual on that, right? So it may be that the organization is signing, but there's an individual doing the work or a group of individuals, if that makes sense.
Okay.
And we want to make sure, especially when we get into assurance work, and we don't want to miss that we're getting at the individual's skills because they're the people doing the work. And right, same as, you know, if you take one of the big firms, they might sign big firm X, but there's a partner on that engagement and you know, staff underneath it. They're the ones who actually do the work. Okay.
Begonia, did you?
Thank you. I have a question because in principle, this project was referred to experts. The title is experts, but it has been narrowed down to external experts now. Could you explain better why internal experts have been excluded? Why is not a reference to them? You said it's covered already in the code, but it sounds a bit strange. Why this has been excluded?
Yeah, maybe we should pop those slides up because this is important. So Begonia, it's a very good question. It's something that over the course of this past year, everybody was struggling through. We've done a schematic. I think maybe it makes sense if we take people through that, because what we did was do a schematic that takes us through and sees how every other type of expert is dealt with, right? They're either already covered by the code, right? If they're an internal expert, but we've made sure, and how they're being used, right? And so what we've done is isolate it down to what is the missing bit that isn't covered anywhere already. So, and that's sort of how we got there. So Cam, maybe just go through this quickly and let's see if it helps answer your question. Hopefully it will.
It's more like a general question. So my question is.
It's a general question. I think we've had this question from several others. Well, I'm just for you right now. And I think if we can go through, we did this because we wanted to make sure there was coverage everywhere. We weren't missing anything. We weren't doubling up on anything or duplicating. Cam, I'm going to let you walk through that.
Sure.
So, well, some of you may recognize the schematic from the information session slides. So first of all, what we intended to do, as Lori mentioned, is to really set out the questions that one should ask themselves when they're identifying, you know, which bucket each type of expert sits into and what requirements would be applicable to them and where there was which gap we're trying to fill, essentially. So if we're using the work of an individual with expertise outside a PA's competence, that's an expert, as we've just defined in the glossary. Then we want to do is the individual engaged by the firm. Then if it's a yes, then there's we ask another question, is the individual performing audit procedures or in assurance procedures, assurance engagements, it could be assurance procedures. If it's a yes, this would be an engagement team member. And as you can see in the yellow box, that's already covered by independence under Part 4A of the code. If the individual is not performing procedures, is the individual providing consultation, such as in accordance with the ISA 220 ISQM requirements, where such consultation has direct influence over the outcome of the engagement? If it's a yes, this is an audit team member or assurance team member. This would be independence, again, required under Part 4A of the code. So you see those yellow boxes. And if it's a no, so not providing consultation that has direct influence in accordance with the ISQM or ISA 220, and the individual is not performing audit or assurance procedures, you ask yourself, is the individual performing work that has expertise outside of accounting and auditing, and this is quite key, to assist you, the PA or sustainability assurance practitioner, in obtaining sufficient appropriate evidence? If yes, this is where our this use of experts, we're narrowed down to focus on these proposed provisions, focus on the external expert, right? So that's independence through the lens of objectivity, and that's our proposed Part 3, 390, and also it'll be in the equivalent Part 5, 390 as well. Under question 2 above, you'll see, is the individual engaged by the firm? If it's a no, we'll move on to the next slide, and I believe that's the next question. That was the question essentially asked, and that was the internal expert. For internal experts, again, we go through the same sort of questioning process. If that individual is, if the individual who is employed by the firm, that expert that's employed by the firm, is performing procedures, that's an engagement team member. Independence is required. If the individual who is employed by the firm is performing consultation that has direct influence over the outcome of the engagement, again, as set out by the ISQM and ISA 220, then yes, that's an audit team member, right? And independence is required. If no, then obviously that would be what that bucket that we're talking about, that internal expert. However, that individual, that internal expert, is already subject to the firm systems of quality management and the other provisions of the code, because all firm members are also subject to the provisions of the code. And given the feedback received from the September board, this is why we've focused on the key sort of public interest and gap where we see there's no provisions currently in the code to address external experts. But for internal experts, you can see that because they're already employed by the firm, they're already subject to the provisions, ethical provisions of the code, and they're already subject to the firm's ISQM policies and procedures. So I'll pause there. Lori, do you want to add anything? I don't know if you.
No, hopefully that helps. I mean, you can, and if you go back, I think, to the prior slide, which is the external, because the internal's a little bit easier to understand. Their internal, you've got all the 4A and requirements already applying to them. But even for the external, if their engagement team or audit team members, the full independence is already taking place, because that's the heightened public interest. So it's when we get to the external experts who are not engagement or audit team members that we have a huge gap. There's just nothing taking place there. So as we went through this, Begonia, and it's really a difficult thing. I mean, it took us a long time to tease out all the elements. We came to understand that this is the piece that is missing and doesn't have ethical requirements around it, either for the expert itself or the firms using the expert. Hopefully that makes sense. And I know several of you had questions in the September meeting, and that was sort of what caused us to go at this. And Gabriella, I don't know if you want to mention anything.
No, thank you very much. I think that this clarification is very welcome, and I had already noted that in the preparatory session, because this is not a question, an isolated question. It's a more general question that we all may have. So it's very welcome, this clarification, and I think that going forward and to the external world, once we go out with the exposure draft, this has to be very clear, and this message that we are not leaving something out of the scope because we don't want to cover. internal experts, but that we are covering what is not yet covered, which I think it's important not to leave any doubt about the complete coverage of all the experts possible configuration. And thank you very much for these slides, which I think are extremely useful.
Yeah, Kamed and Nori, just wondered if, for the sake of clarity, if you could explain the position relative to an employing organization. So an internal expert with an employing organization within a PIB context. I don't know if that was clear enough in your exposition, or that's coming.
Talking about the proverbial management expert.
In a sense, yes, but in a PIB context, not in an
in a
audit or
PIB
actuary.
context.
Yes.
So yes, so we're not actually applying any of this to that, okay? Because that is, and we're not using the word management expert. We're using the language, and we'll get to that language in the markups to the code. Experts, external experts hired by a PIB to assist them in their work. Okay, it's not assurance work, it's not audit work, it's nothing that a PA in fact is relying on. It just becomes part of the work that is helpful to a PAIB in business, and they should be thinking about competence and capability, et cetera, when they hire them. But we're not going into the independence analysis because it's not really practical to tell a PAIB in business to go through and do that when they're hiring someone to do work just to help them in their, day-to-day work. If the assurance provider were to use that work, they would have to apply audit procedures to that under the IESBA, right? Does that make sense? Okay. Okay. Cam, you can go back maybe to the language. I think this was an important, thank you, Begonia, for that question, because I think this was an important distinction to get at on the front end. And if we have to come back to it later, we can do that again.
Rich.
Oh, sorry, I missed you.
No, just on the definitions, I think we'll cover this later, but the definition of expertise isn't the problem. It's how it's used when we start replacing words. I think we'll get to that in some other sections.
Yeah, you gave us an advanced comment and we've had a little think about that. So I think we can talk about that. Thank you, Rich.
Thank you very much. And this is very helpful. I think, and as I've indicated before to you, Lori, I think this flow chart is very, very good. It helped me really kind of organize in my mind how this all works, and maybe in the explanatory memorandum or even in the document itself. I think picture's worth 1,000 words, that kind of thing. If you were able to put a little bit of a diagram in there, it would help people get to the answer a little bit quicker. I wanted to go back to what Rania was talking about earlier, this distinction between individual and organization. It might be that most times you are actually dealing with an individual, but that's not necessarily always. In the case of, I'm thinking like mining and oil and gas, you might get a reserve report that comes from a company that has a stature and reputation, and you're going to rely on those numbers. The same thing with fair value measurements and valuation of financial instruments. You might get something from Standard & Poor's, and they're certainly an expert, and you might not get that from an individual. I'm thinking down the road where we get to the point of financial interests and those sorts of things. And does that organization, are you looking at that as an organization or the individual? And I think you're probably looking at it both ways. So this distinction between individual and organization, I wonder if we're just sort of setting up a problem down the road that we might have to deal with. So I'd ask what your thoughts are on that.
Yeah, I mean, look, we've been talking about this individual versus organization, Galen, and you'll recall this from the earliest CAG meetings since the beginning. We want to make sure we're not missing where we get into heightened public interest and independence issues that we want to look at, that we're not missing the individual element, but it may be the individual plus the organization, or it may be the organization if there, it could be, it has to be analyzed. But in most cases, the vast majority of cases, there's going to be an individual involved in some regard who's, sort of got the key expertise, and then maybe their organization as well. So we've tried to build the definition. So where appropriate, the term also refers to the individual's organization. If anybody has any suggestions, we can think about that. But I think we didn't want to miss not just the individual, but the team, any other team members as well that are working on it, because those independence attributes are very important, as we know, when we're in that space. Cam, I don't know if you want to add anything to that. Okay. All right. Anybody else? Ken?
Yeah, I just might want to just put in a quick reaction to Galen's comments. I think we have to be very clear when we're talking about external experts that we're not talking about data providers. So for the likes of S&P or MSCI that are data providers, we are very clear in our text. I think there's a particular provision, Cam, you can correct me there, where we make it very clear that data providers are not external expert organization. And really, when we're dealing with an external expert, it is really about using an individual expert who might render the report in their organization's name, and that is fine. But the work has to be done by the individual, because it is a commissioned piece of work, if you will. It's not a run-of-the-mill, I need data over a certain period, just get your system to churn out the data and give me that report. That is not it. It is a very targeted piece of work with a defined scope, with a defined objective, and the work and the individual is thereby engaged to carry out that work, understanding or having regard to their particular competencies, expertise, etc. And as I said, the report can be in the individual's name, or it can be in the organization's name. So the way it is characterized in terms of the definition is absolutely the right way. It shouldn't be in the name of an organization, because the organization itself isn't able to carry out the work. It needs to be done through the proper individuals.
If I could come back on that, Ken, yeah, I agree with you about pure data providers, the accumulation of data. But in some of these cases, like fair value measurements, you're talking about non-tradable financial interests, and they have this methodology, and it might be proprietary, sort of a black box, if you will. And they're using their judgment to provide valuation. And that isn't just data. That isn't just data that's accumulated. That is based on their judgment, and it's the organization that stands behind it. You may not ever talk to the individual that worked on that, or a team of individuals. That's all I'm saying.
Rania.
So thank you. I mean, Galen, I think you really were able to express what I had in mind. But perhaps what I'm struggling with is the following, and perhaps I'm referring to my own experience when I was in situations where we engaged an expert. I mean, not in this context, of course, but and when we were dealing with a company, an organization rather than an individual. And my question is two things. One, if the organization is lending its name and its expertise rather than an individual, sometimes the team can be very, very large. So the question is, then are you going to do this exercise for every person involved in that engagement? One. And second, are we, and that I don't have an answer to that, but it's, and just this is what basically I'm thinking. Can we assume, or may we assume, that the organization will give us all the information that we need in order to do this assessment or evaluation for each and every single member that is involved in that engagement? Or will they just tell us, you're hiring X company, Y company, etc.? So I mean, like, actually, I'm saying this because only 2 weeks ago I was in that exact same position. I was attending a meeting with, with a consulting company, and there were like 10 persons on the team, and they really didn't know who was going to be. There was a certain engagement that was happening in 1 month's time, and they didn't know really who was going to be in on that engagement, and everybody was attending the meeting. And so I'm just, perhaps I have that scenario in mind when I raise that concern.
And let me, when you have that scenario in mind, was that in the assurance and audit context? Yes, this rule applies in the assurance and audit context.
I understand, but what I'm saying is, are we certain, and I don't have an answer to that because I've never applied it in that, I mean, are we certain that this scenario will not be replicated in the assurance? I mean, and will they, I mean, let's say you're hiring a firm, I don't know, PwC, EY, whatever, and if you're hiring the firm, I mean, can we assume that they will necessarily provide us with all the information about the individuals on the team?
Well, yeah, so two points. And anybody who's an assurance partner can jump in here. I think 38 years in the profession, I've never had an assurance engagement where we used the expert, where we didn't know exactly who the expert was and who the team was. Especially in the assurance context, you're very careful about that because you have to make quality decisions about whether you can rely on that. So I would say, yes, you do have to know who that individual is, even if the firm, big company X, is signing the document, right? You have an engagement team. As Ken noted, it's a bespoke commissioned piece of work. So that would be point one. The second point, and we've been really clear about this, if we're going to have requirements around independence, around experts in the assurance and audit context because of heightened public interest, then if you can't get the information, then you can't rely on those experts.
Right.
So that will sort of self-sort out through the market. I see Mark nodding. He understands that. Yes, it will just be a piece of information that you have to get at. That's why we brought it up in the context of at the point at which you're commissioning that engagement, you need to be really clear up front about what you need. If someone says we cannot or we will not supply that information to you, we have a very specific provision, and we'll see that when we do the page turn, that you then cannot use that provider.
Fair enough.
Okay, good. That, I'm glad that answered. So Rich's gone down. Begonia.
Thank you, Lori. Well, in our view, in PIOB's view, the flow chart was apparently very clear. I agree with this. But in practice, we don't think that this is going to be so clear. This idea of objectivity plus required for the external experts, we don't see that this is going to be, well, implementable in a clear way, because I think the users, those that use the information, they want to be sure or convinced that all the individuals that participate in the engagement, in the final assurance or audit or whatever they do, fulfill the independence requirements. And this idea that has been introduced as objectivity plus, which is not the same for the engagement team, the audit team, and the external audit experts, we don't think that this is clear enough for the readers, for those that use the information later on. So frankly, we think that this new category that has been introduced will not satisfy the public interest in terms of the needed independence that we think that the users need. I don't know if when you prepare the ED, do you publish the ED, what the stakeholders may think about it. But our view is that this is not clear, and it's going to be complicated to make that implementable in real terms, because there are many different categories of individuals participating in the engagement, in the audit, or externally or internally, and they have different requirements. And we don't see that so clear from the perspective of those that have to read the information later on. That's our concern.
So I want to drill down on the lack of clarity, because we've pretty much lifted the language in terms of what the PA needs to collect. Now, keep in mind that in terms of assurance work, it's the PA that must be independent. And now they're going to do that assessment on the expert, and the language is lifted from 4B of the code. So pretty much, Cam, I mean, I think you can. So it's quite specific and enumerated what the expert has to comply with, and that the PA must get that information, cannot proceed without it, has to assess it in light of that. So is it just this language, independence versus objectivity? Because what's being asked for is very clear, I think. I'm trying to get a handle on it. Yeah.
May I try?
Yeah.
May I try? Because I know this is being a recurrent question and concern, and of course we want as much as possible to make it clear and operable, implementable, and etc. So it's useful that we spend some time on it to make sure that we come out with the right solution. But what I'm not completely sure on your question, going to the PIOB question, is it a question of clarity, or is it a question of not being enough? Because if it's about clarity, we can still work probably if we get an insight of what should be better explained and described and etc. on it. But we have a problem, an essential existential problem that we can't solve, which is this code as it is cannot apply directly to experts. We don't have that competence, that authority, whatever. We can't say that, we might say, but it would be useless. The expert has to be independent because we don't have that competence, and because there would be no oversight, which makes the rule even more fragile. So this cannot be done. That's the conclusion that we made at a certain point in Abu Dhabi, as far as I remember. This is not possible, so we will have to get to the same result through taking a different path. And the way that we found that as being the only possible is this way of requiring the objectivity to be addressed and confirmed by the auditor, because the code applies to the auditor and the oversight is applicable to the auditor. So what we are trying here is to bring the experts in without basically having understanding that we don't have the competence to address them directly. Your question, and I fully understand that we have a framework for audit team, engagement team, auditors, which is different because we require them to be independent directly, but that is because they are in the scope of the code, and we can't say the code can say you have to be independent, and you have to be independent, and you have to be independent. The code can't say that, at least. Where we are now, we can think about a different code. We can think about in the future making a significant change, which is not possible at this stage. The code saying you are an expert, you are an engineer, you are a priest, you are a psychologist, you are whatever, and we want you to be independent. And we or whoever is in charge of the oversight is going to check if you are really independent. This is not possible. So this is, so to speak, the best possible that we can achieve in terms of making sure that this space, which is the one, as Laurie was explaining, that is not covered, and we understood that there was a gap and we needed to cover it, but we needed to cover it with the tools and the instruments that are available. And we don't believe that at this stage, and with the code that we have, and the competence and the legitimacy that we have, then we can do it by addressing directly the expert. I don't know if I said something wrong, but I'm just trying to make it in the language of.
I think right, and I would add two things to that. One,
sorry, because I had the same doubt. I had the same question. I had the same question for a long time, and Laurie knows that, and the task force knows that, because I was like, maybe we could require independence. But then it's this path brought me to conclude that this is what the maximum that we can do.
Yeah, I think two things to add to that. One is that we know that none of the experts have systems of compliance around independence in place. So they don't have any of this information. So regardless, the PA must get this information from them. So this is the mechanism by which they take the independence attributes and get that information. But frankly, it's quite strong putting the PA on the hook for making this assessment and doing this work. And, you know, we know that they are governed by the code, and this flows into their own independence, because the PA has to be independent. So I think it is a mechanism. I do understand this is complex, But the question I had, and I think this gets, Gabriella, you said this well, is it a question of clarity or not being enough? Because I do understand we did this flow chart. It's actually complicated. All those bits, I think, are known within engagement teams and audit teams. They know what they need to do. I'm not sure anybody externally actually understands all of, I can guarantee they don't, right? Because it took us a long time to chart this out. Understands all of this. They just start thinking about, is the auditor independent? Is the assurance provider independent? It's up to us to figure that out. And we're trying to pull the experts in, the external experts in the context of, auditor assurance into an assessment that is commensurate with what exists around people who are covered by the code. So I'll stop there, Begonia, because I think we've been saying a lot of words. But so I think Gabriella's question is it clear to those people on the outside, maybe or maybe not? I think our goal is to make sure it's enough. And I think that's where we want to get to. And then we'll have to use education, explanatory memorandum elsewhere to try to get that clarity out there. But I'm not sure how much that clarity will ever stick, because we're putting the responsibility onto the PA in addition to their own responsibilities for independence within their firms and how they use people to look at external experts in the assurance and the audit. So I'll stop. I hope that helps.
Well, yes, but I mean, you ask me if it is a question of clarity or not enough. We don't find it very clear. That's clear. This looks very clear, the flow chart, but the whole text is complex to follow. In any case, so it is not enough. We hope will not be less independent, the external expert, than the others with this new independence plus criteria you have introduced. But we hope it will be the case, because we don't want them not to be independent. We would like to see them independent, right? But you said, Gabriela, that the code cannot impose, does not have authority over those experts. And then I question, what about the non-practitioners that do the assurance of sustainability reporting? Will the code be able to have the authority over them? Because in that case, to me, there is a sort of contradiction, because these people in many cases will not be accountants. So how can you impose in part 5 of the code independence to those experts, but you cannot do it here to the external experts? I don't really understand that. That's my question.
And it's a very good question, and I'm happy that you are making it, because it allows also to explain a few things. Because this is exactly the reason why, for instance, we are not developing profession agnostic standards for sustainability reporting. The difference to sustainability assurance is that the regulators have already said, yes, we want these people to do this. And for that, of course, they will have to create the necessary supervision. And that's the decision that, for instance, in Europe, the jurisdictions are making. Some of them say, yes, we are going to follow CSRD, they are going to be allowed, and we are creating the necessary structure to oversee them. It's already prepared in France, for instance, where they created a totally new structure where the non-PAs have to register with the oversight authority and be subject to some supervision. I think that in New Zealand, it's already in place a similar. So it's now taking place these individual decisions at the jurisdictional level, whether the non-PAs will be allowed or not. We don't impose it. We provide a framework that in each jurisdiction will be applicable if the regulators make the decision that, yes, they will accept the non-PAs. We are not imposing to the non-PAs, whatever might be, because we can't do it. We are just offering the regulators, under a call from the regulators and decisions already made, something that they can use if they will decide to take this on board. So, and I think it's important to understand this. There is always a lag, which is not for us, which is the regulatory legal lag of the thing. So on sustainability reporting, this was one of the reasons. It was not the only one, to be honest, but it was one substantial reason why we decided not to do it in a professional agnostic way, because then who was going to oversight that if there is no one yet yet saying, yes, we want it to be like that, and we are ready to oversee that framework. This is the same for experts. I doubt that regulators will ever say, yes, we want to regulate and supervise and have the experts on board, because the complexity that this would bring in terms of the diversity of experts, expertise, etc., would be so incredible that I doubt that this will ever happen. But it may happen. We are just working with what we have currently.
If I might add as well, Begonia, the distinction between an external party who's used as an external expert and an external party who is carrying out an assurance engagement, in non-PA, for example, as you refer to, an assurance engagement on sustainability information, is that these individuals, on the one hand, they are commissioned to carry out a bespoke engagement, leveraging their expertise. And on the other hand, the individual or the organization is engaged to carry out an assurance engagement. In the latter case, the individual or the organization is taking responsibility for the assurance opinion on the sustainability engagement. So that firm is carrying out an assurance engagement. And whoever is carrying out an assurance engagement under our code is required to be independent. That is a very simple principle. That is a distinction. An external expert is not carrying out an assurance procedure. If he or she is engaged to carry out an assurance procedure, they are automatically scoped in under the concept of an engagement team, and they're subject to the full range of independence requirements. If they are not engaged to carry out an assurance procedure, they perhaps might be engaged to carry out evaluation. For example, as Galen said, maybe it's evaluation of a particular asset or liability, as case might be. That is a piece of bespoke work that then is subject to the evaluation of the auditor or the sustainability assurance provider. And the auditor or the sustainability assurance provider has basically the power to determine whether or not to use that work. And that's where the code comes into play in terms of bringing in the rigor of independence, as we call it, understanding that what we need to put out in, to include in the code and put out as a standard is a set of provisions that will be operable. It would not be in the public interest to put out a framework, an approach to independence that will not be workable in practice. And for all the reasons Gabriela has articulated and Nori as well, external experts are not in the business of assurance. If they are required to be independent, they would essentially would be a call to them to implement all the sophisticated systems of monitoring independence that audit firms have. And that is not going to work in practice. And what's going to happen is auditors and assurance practitioners will find that they will not be able to have any external experts available to meet the requirements for independence as one would hope or wish could be in place. And therefore, the way the task force is approaching it is to try to find a practicable way to bring the rigor of independence to those individuals, those external experts, in a way that meets the public interest expectations for independence, because they are involved in engagement, but they're not involved in carrying out assurance procedures.
Thank you, Ken. And Andy, waiting for a long time.
That's fine. This is obviously a very important issue, but I just want to say that I don't think we're taking a practical approach, or we're in any way cutting anything as a compromise because of independence issues with the expert. I just think it's not relevant. That an auditor makes a risk-based assessment. They're the ones that forms the audit opinion as to whether the financial statements or whatever are in compliance with the framework. And in doing that, the auditor has a blank sheet, and they start and get a pile of audit evidence. And that audit evidence comes from both the internal records of the entity itself, which is about as intimate and not independent as you can get audit evidence from the company. They get representations from members of management, also in the company. They get written representations. They also observe things with their own eyes. That's more objective. They might get outside evidence from written confirmations from third parties, or they might look something up in a newspaper for market values. So I'm saying is an audit process is a process of evaluating both subjective evidence from internal sources and a more objective evidence from external sources. So the auditor must make that overall assessment to get sufficient appropriate evidence, and they keep putting this evidence on a scale till they have enough. The external expert is part of this evidence process. They are not the ones forming the opinion. They instead provide evidence to the auditors that the auditors put on this scale. And the process developed in this paper is to help the auditor evaluate where in this subject objectivity range of assessment this evidence falls, from books and records, management representations, looking something with their own eyes, getting something from the outside. It's just part of that pile. It's not the pile that report that's titled Report of Independent Auditor. It's not those people who make that assessment. So for that reason, the external experts it's just not relevant for them to be independent. What's relevant is that the auditor who forms the opinion understands the objectivity, background, and expertise, the competence, capabilities, and objectivity of that expert, so they can appropriately weight it on the scale. So I just don't, I appreciate the notions that we can't impose on the experts and they don't have the systems in place. And I'm saying if we could snap our fingers and give them the systems, I just don't think it's relevant. I think what we need to do is make that assessment so that the auditor, who is not the external expert and forms the opinion, understands where they form. So I really don't think we're taking a shortcut. I think we're taking the right approach.
No, and in fact, I think to Gabriella's question, is it enough? When you look at the attributes being looked at, it's a massive shift from nothing to a very, very detailed list of information that has to be obtained and assessed to get there, which doesn't exist today. So that's the delta, and that's why we enumerated each of those points picked up from part 4 of the code to pull them in, even though the experts don't have those systems. We, at the point at which we use them, are going to force them to provide that information so that we have it. And that will be obviously in the audited files, which get inspected and everything else. So we're sort of dragging them in that way. So it is, on the question of is it enough, it's a very significant change from current practice. And I don't know if anybody else has a comment around that, but I do think it's a fair question. Oh, Mark, there's you over there. Sorry, I didn't see your thing.
Thank you. No, I want to come in very strongly in support of where the task force has landed, because, to my mind, there's something very clear. Firstly, in an audit engagement, or as we have done in a sustainability assurance engagement, the legal presumption is that the provider of that engagement is independent to be able to do that work. And we in the code have a framework to be able to assess and evaluate that independence and to ensure that provider can do that work. It is a very different thing for the use of experts, because ultimately, I think as Laurie has made very clear and Gabriella has said, ultimately this is a decision not about being independent to participate in an engagement, but it's, can you use the work of that individual in support of your engagement? And I think we need to remember at all times, it is the engagement partner or engagement leader that is ultimately tasked with taking that decision. But what we're doing is we're using the flexibility of the code, which allows us to assess independence, to say, can you use this person? Can you place reliance on their work for the purpose of your engagement? And of course, the route that Laurie and the task force are taking us down effectively builds on the existing provisions in ISA 620 and closes the gaps that already exist to ensure that in this case, the external expert, there is a consistent high standard. So, I'm very comfortable with where this lands.
Okay, thank you, Mark. Chana, please.
Thanks, Gabriella. I also endorse Mark's comments. I'm not part of the task force, so I have read through the documents. I don't see where the complexity is. So it would be helpful if the PIOB can identify the paragraphs that are complex, because I see the writing as very similar to the rest of the code. And I mean, if this is complex, maybe if you look at the financial instrument standard, that is much more complex. This is fairly easy. Thank you.
Thank you all. Oh, sorry, Rich.
Yeah, I also support where the task force has gotten. We need to remember that today, largely the only guidance is in the ISAs. It says you have to assess objectivity, and it doesn't say another word about that. And I particularly find that when we get to the section, I think it's R390.8, that has the requirements for when you have an audit. As you look through that, that is independence right there. And so I think that's an important element, and I think this is a significant advance in protecting the public interest in terms of the objectivity and the capabilities and competence of and thus the independence of the expert. Thanks.
Thanks very much, Laurie.
I think we're going to pause there. Sorry, I got to turn my mic on. Cam, do you want to jump back into the language? I think we're going to get into the text because obviously we have a lot to get through in the next few hours.
Okay, so maybe if no more comments on the glossary, we'll move on to section 390, and that's 320, sorry. So all the text in part 3. So just wanted to make sure. Okay, so we'll start with, this is the markup from extant, section 390, professional appointments. Because we're now introducing the new section 390 on using the work of an expert, accordingly, this extant section has been withdrawn, and this has been there's no change from the September draft here. In terms of other considerations here, again, there's no change from the September draft. Given the change in scope, where my cursor is highlighted, we'll be adding the external to make sure that it's clear as well. Now moving on to the proposed new section 390. As we've been discussing earlier, this section now focuses on essentially using the work of an external expert. So it's an external expert only. As I scroll through these here, you'll see that the title of this mini section has been changed to general, and that is in response to a comment that the guidance that follows the previous title was broader than just circumstances where an expert might be used. 390.4A2 was added to illustrate that the use of the work using the work of an external expert is a potential as an action that might be a safeguard to address a self-interest threat to compliance with integrity or professional competence and due care if the PA performs a service for which it has insufficient expertise. In terms of the examples, the circumstances where an external expert might be used, the edits here are essentially to streamline the streamlined examples. There's been no change in substance. The key change has been the removal of the second last example on accounting for specific matters, and that's essentially in response to the observation that an external expert, as defined, does not have expertise in accounting matters. Okay, I'm going to move on now. So for section 390.4A4, it does look like there's a lot of markup from September, but actually what we've done is essentially for this paragraph, make it very explicit that the subbullet A and subbullet B, which are not new concepts from September, but it's really to highlight that in these two circumstances, these provisions do not apply. This section does not apply in these two circumstances. So what are those circumstances? The first circumstance is when the PA uses the work of an expert that is employed or engaged by its client to assist the client itself to prepare financial and non-financial information. And the reason is essentially that work is part of any other information that is to be provided by management to the PA. It's no different, right? And the sub-bullet B, this was some enhancements in the drafting to highlight that. And I think as Ken highlighted earlier as well, the use of information provided by individuals, organizations that are external information sources for general use are not within the scope of these provisions. So those are those that provide industry data, benchmarking studies, etc. Laurie, did you want to add on to here?
Yep. I don't think so.
Okay. If I don't, Chana, yeah.
Can we go back to A3? So just go up a bit. It's the last bullet point. Cybersecurity. I was wondering why cybersecurity, like could it be IT security? Because it's cyber too narrow. Could it be broader? So that's just a suggestion. And then when I look across to 5390.4, 5390.4 has an additional bullet. And that additional bullet talks about accounting for specific matters such as financial instruments or carbon credits.
Yes, that is in part 5. So you picked up on the difference between, because this is the proposed section 390, and then the one you're mentioning is for proposed section in part 5.
Yeah, but financial instruments would be relevant to 390 as well. And then the issue is the very first bullet also talks about valuation of complex financial instruments. So I think there's a bit of I either cover financial instruments in one bullet and then have IT security or something a bit broader than just cybersecurity. That's it. Yeah.
We're later today. Thank you, Chana.
Okay, so then we'll move on to this paragraph here. Since the September draft, we've removed R390.5, and this requirement, if we recall initially, was essentially the hook that we had the task force had intended for a PA to use this section. So if the PA doesn't have expertise to perform the professional service, the PA shall identify an expert for this purpose. We've withdrawn it because in replacement, and I scroll up again here, as I've mentioned in 390.4A2, we've essentially added that hook back here. And this is consistent with the rest of the code, with the upfront sections in the code, in essence, that using the work of an expert is one of the actions you could take if you don't have sufficient expertise to perform the work. Okay, so moving on, in terms of agreeing the terms of engagement with an external expert, the key changes here, they would be 2. One is in the lead-in. So this has to do, and Laurie mentioned this earlier in the sort of high-level changes slides that that she went through. We've added in the lead-in, if the PA has identified an external expert to use, then to the extent not otherwise addressed by law, regulation, or other professional standards, the PA should agree the terms of an engagement, which we've set out in A and B. And the reason why we've added this sort of qualification is in response to coordination with the IASB staff who've reviewed the draft text and also provided comments from that coordination perspective. It's reflective of the ICES currently also contain quite substantive guidance already on agreeing the terms of the engagement. And so it would be confusing if there were, duplications there. So therefore, this terminology, this phrase was added. So to the extent not otherwise addressed, the terms of engagement that should be agreed with the external expert. So that's A, the nature, scope, and objectives. And B, sub-bullet B here is the new bullet point that we've added. So in the context of audit or other assurance engagements, the information needed from the external expert for the purposes of assisting the accountant's evaluation of CCO, competence, capability, and objectivity. And so as you'll note, and as a few of you pointed out already, R390.8 requires the external expert to provide a very long list of information. So this is to facilitate that provision of information. Okay, I don't see any cards raised, so I'm going to move on. 390.5A1, this is application material to support the previous requirement that we've just been discussing. And no big changes in substance. From September, the new bullet point was the last one, and that's expectations regarding the external experts' communication in respect of any no-CLAR committed by the client. And that was responsive to some feedback from the IAASB's ISA 5000 roundtables in respect to their provisions on using the work of an external expert. So again, I don't see any cards raised, so I'm going to move on to the next section, the next big section here. So we've been discussing a lot about evaluating the external expert CCO, competence, capabilities, and objectivity. So the key requirement here, as you can see on the screen, R390.6, is that the professional accountant shall evaluate whether the external expert has the necessary competence, capabilities, and objectivity for the accountant's purposes. Now, the edits here were made to achieve two purposes. And the first one, as Lori highlighted earlier, the task force did have quite a long discussion with respect to whether or not the CCO evaluation should be concluded prior to the external expert starting the work. But in order to facilitate the ongoing CCO evaluation in conjunction with the external expert starting its work, this requirement has been refined a little bit, and this also aligns with ISA 620 paragraph 9, which helps the interoperability between the two standards, and as well as the concept that we raised earlier. So if no comments on this key requirement, we'll move on now to the guidance with respect to competence, capabilities, and objectivity. Oops. Okay, so there's been a lot of, it looks like there's a lot of red text that's been withdrawn. So, and that's essentially because this was initially text that wanted to highlight what are the different buckets of experts that could be used by a PA. And as we could see in the schematic that we just went through earlier today, and as suggested by Galen, we would be including this very detailed explanation and schematic in the explanatory memorandum and any other educational materials that are needed. And so therefore, to make sure that this draft text is not complex and is easy to follow, we've removed it, and we'll put that in the explanatory memorandum. And so going on now, you can see 390.6A1 is, there's been some refinement to the text to recognize that a self-review threat could also be created, and some other editorial refinements. In terms of evaluating the competence of the external expert, here you can see that there's not been any substantial changes from the September text. The key change has been the removal of the last bullet, and that is because, as we've mentioned earlier, this new section is only is not only, but this new section focuses on external experts, and therefore this bullet point is no longer necessary, because this initial bullet point was directed to where the expert is employed by the accountant's firm. With respect to capabilities, the key change here, well, there's been an edit here to change adequate time to sufficient time, and that is to align with the IAASB's standards. It's used in ISA 620 and also the ISQM standards. We've received an advanced comment, and I believe this also was mentioned in September comments as well, is with respect to capabilities and why, for example, time is a factor necessary to evaluate capability. And that is, I mean, really time and resources in respect to evaluating capabilities, that's outlined in the ISQMs. That's aligned with the ISIS and the IAASB standards. So if you don't have time, you might have the competence, but you won't have the capability to actually perform the engagement. Yeah. Okay, Rich. Yeah.
So time is in the concept of they can make the resources available, not that the deadline. You know, I wouldn't think you'd allow an engagement to be issued if they said, well, you have to issue by this date and the expert couldn't get the work done by then. So you're saying the expert doesn't have the resources to make available in the time period in which, and therefore they don't have the capability. Okay, thank you.
Thank you, Chana.
Just an editorial comment for the task force's consideration on the one above CAM 396A2, the last bullet point, whether you say that whether the external expert has performed similar work and delete track record. Yeah, has performed similar work.
Okay, well, thank you, John. Yep.
Yeah, I think we take that back to reflect on. I'm not sure it's we wouldn't be losing something there by the reference to track record. Just because somebody has performed similar work one time, to my mind, doesn't necessarily signal competence. But on the other hand, having it, if you will, a long trail of having done similar work over time, it to me reinforces or strengthens that assessment. Anyway,
do you not like the words track record? It's that, right? It's very colloquial as opposed to, I think that's what you're getting at. So we need to capture it a little differently. Okay, that's fine. We can do that.
Concerning the CCO evaluation, so I'm not sure if it's in there, I may have missed it. And just a suggestion, perhaps you may want to highlight or include the fact that it should be an ongoing assessment. So you may reach a conclusion at one point, but then new information might come to light. And so might change that evaluation.
Yeah, so we do have that in there in the audit and assurance context, as opposed to the non, where you're sort of using it as work. But we'll take a relook at it, Rania, just to make sure it's clear enough. But we agree with that point, by the way. And in fact, we have an obligation in there for the expert to continue to supply any new information that comes to light to them, for instance, around a conflict of interest or something else that they become aware of. Okay.
Yeah. And also as part of the conceptual framework, that requirement has to apply. But as Laurie mentioned, we'll take a look at it. Yep, absolutely.
Yeah, I understand it's we're aware of it, but perhaps you may want to include it more explicitly in that section, specific section.
Okay, so competence, capabilities, and now we're in objectivity. These are the factors to evaluate objectivity for all external experts. So those external experts that whose work is used in a NAS, audit, or assurance. And so there's been, again, no substantial change from the September draft. The last bullet was withdrawn because previously the last bullet was directed to experts employed by the PA. Okay.
Yes.
If I,
Chana.
oh, okay.
So the first bullet point about the professional body, the ethics standards could be issued by a national standards setter, board professional body, or even could be a regulator. So I think in PI you would see wording about applicable bodies issuing standards. So maybe make it like the PI wording.
Sadia, did you want to, okay. Back to you, Cam.
So just to check, no other comments here. 390.6A5, again, no substantial change here. This essentially is to supplement the paragraph above to provide examples of what could be previous judgments or activities performed by an external expert. Now we have information about the external experts. So this paragraph here, 390.6A6, this paragraph is to provide guidance as to where a PA could obtain information about a external expert CCO. So the list of potential sources is listed here. There's been no substantial difference from September with other than the addition of the last bullet here, systems of quality management of the professional accountants firm. And this aligns with the ISIS. So ISIS 620 paragraph A15 also highlights this as a potential information source, potential policies and procedures within the PA's firm. Okay, so if no comments here, so this concluding, these two paragraphs here, concluding on using the work of an expert, caused a little bit of confusion in the September draft. So what the task force has done really is to replace it with a requirement that we'll go to as I scroll down a little bit later. It's R390.12. We've replaced it with that requirement, which we believe is much more clear and succinct, and highlights that requirement is part of the CCO process. So we're not removing any substantive requirement in that aspect. But before we reach that R390.12, we have a section, as I mentioned. So now we have specific to external experts used in an audit or other assurance engagement. We have additional requirements, right? And this is because, and this is paragraph 390.7A1, stakeholders have heightened expectations regarding the objectivity of an external expert whose work is used in an audit or other assurance engagement. And that was that last bucket in the schematic that we went through earlier this morning. Okay, so this lead-in was added to make sure that it's very clear to stakeholders why we have an additional slew of requirements with respect to these external experts. Then in R390.8, we've, essentially just streamlined the paragraph. The reason why we change disclose to provide, in our coordination with the IESBA staff, they had suggested that potentially the use of the term provide is a better word, essentially. So, okay, so we've made that change. And as Lori highlighted earlier, we have very detailed requirements here. R390. Gabriela, you?
Sorry, Galen, please.
Yes, if I might, and my comment is kind of generic. I want to go back to 390, is it 6A1? And when we use the word in that, the addition of the additional words that are added there, in the second line, it says whose work is used. Don't we mean rely? The word use and rely, I think, are not the same. We're relying on the experts' work, not using it, because we can always use the work, right?
All right.
Whether it's in the
Which paragraph
context
are you
of,
on? Sorry, which paragraph are you
I'm on 396A1. 6A1. It starts with stakeholders have heightened expectation. Am I reading it correctly? 390. Oh, I'm sorry, 7A1. 7A1. It's hard to read the strikeouts sometimes up here. So in the second line where it says whose work is used, don't we mean relied on in an audit?
So the term use is essentially aligned with what the IESB standards are using as well. So it's using the work of an external expert. The responsibility is on the PA to actually evaluate that work, that thereby you can use it. I do recognize there's a nuance between rely and use, but we're aligning between the two standards.
So it's basically the alignment that you're focused on there rather than because and I've had this issue all along. We can always use the work. We might have to audit it more, but whether you rely on it is a different matter. But if it's if we're only talking about syncing up with the ICES, I understand. But that's my comment.
Nothing else, then we will.
Wonder if we rely on it, isn't it something that has an influence on the audit and then it falls in another back bucket? I mean, here we're speaking about recurring to experts to form your own opinion, not to rely. Because if you rely, I would argue that it's under how do you call that, influence on the audit? No, I don't see really the frontier, but this is what I would.
The concept in the assurance standards, the audit and assurance standards, about using the work of an external expert. It's not about relying, and the auditor may have different uses of the external expert's work. It's not just about reliance. So whatever the auditor or the assurance provider intends relative to the external expert's work is for the audit to determine, but for purposes of gathering sufficient appropriate evidence, as Andy has explained earlier.
Yeah, I think also I agree with that comment. So I think it's a very good question, but I think also when assurance providers or auditors use the work of an expert, they may, in fact, they're using, and I won't have you pull that chart back up, but they're using the work to provide evidence, okay? They may, in fact, do many additional procedures on that work, obtain a second opinion, do all kinds of things, or they may not. I think it just depends on the nature of the work and the extent of it, et cetera. So I think the word use is probably appropriate, but it is also aligned, Galen. So we're sort of, we've spent a lot of time, trying to get that done, but it may or may not be material. It may or may not be significant. It may or may not have additional work done by the auditor. So.
What if the information is contradictory? I mean, that's in that context. I think we always use the work, whether we rely on it or not, is a matter of expert information or input is a different matter. But again, if it's simply to align with the ICES, I certainly understand that.
Andy's got his card up too. We'll take these two and then we'll see if Andy looks like he's responding.
No, I was just going to say that the points you're raising, Galen, are spot on, but I think they are performance standards for the auditing context in terms of where it goes in this weight of evidence, not for the ethical construct of whether the expert is TCO. With respect.
Maybe if it helps, could you include something then in the basis for conclusions that explains it a little bit?
I think that's good.
I think that can help. Okay,
rather than
yeah,
split.
that's better. So we will break now for 20 minutes and then we will get back to the long list that we still have to address. So we'll be back at 40 minutes. Sorry, 50 minutes past the hour.
40 minutes would be very generous, Madam Chair.
No, 20 minutes. No, sorry. It's 10:50. That's what I meant. 50 minutes past the hour for those who are not in New York.
Yeah.
So thank you for being back. I know that we are still missing some people, but we are getting very, very late, and we really have to finish going through these proposals this morning. Laurie,
Yep.
I'm going to give you immediately the floor.
Okay, so we're going to jump right into this list of independence questions that need to be asked. And Cam, you're gonna pull that up, yes? Okay. Okay.
Okay, so this is the list of the independence considerations here. This is under R390.8. And as you can see from the markup here, we've made explicit which factors apply to the external experts organization. And that's recognizing that, of course, the interests, relationships, and circumstances that impact the external experts organization so that the external experts organization and the entity at which the external expert is performing at, those interests, relationships, and circumstances that are between those two, those would impact the external expert as an individual's, that expert's objectivity. That sounded like a really long sentence. But the key point is that it's been very explicitly highlighted now, which factors apply to the external experts organization as well. So A is direct financial interest or material indirect financial interests. So bear in mind the list of these factors. What the PA must do is to, when agreeing the terms of the engagement with the external expert, the PA must be able to agree that the external expert must be able to agree that they will provide details, information about all these bullets. So A2, we'll get down to the bottom of the list. So this list, again, is for the external expert to provide the information on, and that information will be assessed by the PA. So what is this information that the external expert must provide the PA? It's any direct financial interests held by the external expert, immediate family, or their organization in the entity. Bullet B is any loan, guarantee or of a loan made by the entity to the external expert. Again, we've highlighted explicitly here the external experts organization, so this factor is also applicable to those. C is any loan or guarantee of a loan accepted by the external expert. Again, highlighting where the external experts organization is relevant. And D, the same. Laurie, did you want to?
Yeah, the only thing I would add in addition to the organization, we've also ensured, and this was a point picked up from some of you, immediate family members as well, which is common, normal practice in the independence analysis that we do with our own people on engagements.
Thanks, Laurie. And then E, that's any close business relationship between the external expert, their immediate family, or the external expert's organization. We've received an advanced comment here that in accordance with the extant code as well, the independent standards, it's that it's not necessarily always the case that there's a financial interest with respect to this. So we'll revert back to any or look at that wording again. And then F is any previous or current engagements between the external expert or their organization and the entity. G, how long the external expert has been associated with the entity. In terms of associated, what the task force intended by this is essentially any type of association, right? Any type of, previous service, etc. One advanced comment was also to consider the external experts organization in this association. So we'll take that on board at our task force meeting later. In terms of bullet H, it looks like this is entirely new, but I would like to just highlight that it's not. The reason why we moved it up is because we didn't want to have a I II and III in terms of the sub-bullets. So what is new is that here, this triple I here, H triple I, that's the new sub-bullet. So any position as a director or officer of the entity, and I won't read the entire lead-in, but this third sub-bullet is new. So I want to pause here if there's any comments. I know there was an advanced comment received to kind of consider this second sub-bullet here in terms of the period, whether or not the position previously held by the external expert, whether or not there should be a qualification or if it should just be similar to the third sub-bullet, which is left open and just any position previously held by the external expert. So we'll take that on board and consider that as well. And Lori, did you want to?
Nope.
Okay.
I think that's good.
Yeah.
And I think let's pause if there's any points. I'm not seeing any cards up, but it's a pretty detailed list. And that is a huge uplift because right now none of that exists in terms of the analysis. Rich is nodding his head. Yes, he's taking on a lot of extra work.
No, but that was what I was trying to say. This is a dramatic shift from the current frameworks, both audit and independence. And so I do think this is a very positive approach. Thanks.
Okay. So refinements in editorials, and again, highlighting the external experts organization. J, again, highlighting the external experts organization. K, and this was in relation to, this is a new bullet added, and this was in relation to comments made in September. And I believe that was, for example, a comment made with respect to in some ESG experts, those might be actually remunerated by donations, etc. So we covered that under benefits. Yeah. And then in terms of L, that's a conflict of interest, again, highlighting the external experts organization. And then M, the nature and extent of any interest and relationships between the controlling owners of the external experts organization and the entity. No significant change from September, except to highlight that it's the external experts organization is also very relevant. So that's the list, A to M, of all the information that the PA must obtain from the external expert in order to be able to evaluate the external expert's objectivity. Laurie, did you?
No, I would just say some of those at the end are a bit catch-all, and they're intended to force the expert to think about any other things that might compromise their objectivity. Okay.
And then this was R390.9. Again, this is to ensure that for these specific factors, A to M, for an external expert used in an audit or other assurance engagement, all this information must be requested of all the external experts team members as well, and must be evaluated for all the external members, external experts team members as well. So conceptually, that's also aligned with the independence standards, where all the audit team members, all the team members of an audit team or engagement team must be independent as well.
And Rania, this is the piece that addresses your point, and the next one addresses, I think, your other comment about ongoing. The expert needs to be providing any new information that comes to light during the course of the engagement that might impact. I couldn't remember the name when you, or the section number when you raised the point. Okay.
Laurie Chana wants.
Oh.
Yeah, I just have editorial. If you go up, so if you look right at the bottom, the information in 390.9, the information set out in paragraph 390.8, is it better to move it to right after provide, and then it's consistent with 390.10 as well? So you end with the engagement period. Yeah.
Thank you. Galen, please.
And so that long laundry list that you just went over about financial interests and so forth, just so I know, I mean, so this applies to individuals on the engagement team, not the engagement team, the external experts that are being used by an auditor. Does it also apply to their organization?
So it applies to the external experts team members. And in terms of the organization, the external experts organization, the piece of work that is issued by the external organization, external expert might be an organization, right, that signs it. But however, this list is applicable to the external expert as an individual and all the external experts team members. And as you can see in each factor for all the individuals, it's also applicable to the organization. So interests and relations between the organization and the entity. Lori, I think you wanted to.
Yeah, there's a few that it wouldn't, Galen. So for instance, board positions or management positions, which wouldn't be an organization, but it's intended. But I do think what we'll do tonight is go through again and make sure we just haven't missed any things that an organization couldn't do, we wouldn't attach, but otherwise it should apply. Does that make sense, Galen? Absolutely. Okay, good. We'll just make sure and do a health check on that one more time.
Okay.
Okay.
And Rania.
Thanks. So my question is this long list. So, I mean, are we saying that each one of those items impairs objectivity, or are we saying that they should be evaluated, collectively? Just because that I don't think that is clear.
The PA has to get the information and then evaluate it. Okay.
So I mean, one of those conditions might exist, but it does not necessarily impair objectivity. I'm just
sure.
Yeah.
You could have had 5 years ago a board position, and you could look and say, yeah, the time is long enough. Yeah. It might not, but I think we want to know about all of it.
Yeah.
To make the judgment.
Okay.
Yeah.
Yeah. I mean, I agree with you.
Yeah.
All I'm saying is that it might appear, again, just something for your consideration.
Yep.
It might appear as though we are saying that these conditions should not exist. And so I'm not sure. Again, just some food for thought.
Okay.
Because again, this is not independence, it's objectivity. And so you want to evaluate them all together collectively. So just. Thanks.
Okay.
So we are now at 390.10, R390.10, which Lori just covered just now, and that's the communication of any changes in facts and circumstances. So R390.11 is also to recognize that there are instances where the client is not, the client of the PA is, or sustainability assurance practitioner is not the entity at which the external expert is performing the work. So in those cases, the PA should also request the external expert to disclose information about the interests, relationships, and circumstances they are aware of between the external expert, their immediate family, or the external expert's organization, and the PA's client. So that is that requirement there. And then in terms of the application material 390.11A1, this provides examples of what the external expert can disclose with respect to these interest relationships or circumstances between the external expert and the client. So they're listed here. You'll see it appears that there's a deletion of the close family members or other close relationships, but it's not what the task force thought was that this is actually inherently included in the following bullet point, any interests or relationships. So it's more all inclusive in that respect. And again, we've added conflicts of interest between the external expert, their immediate family or organization with the client, as this is obviously will impact objectivity. And an additional piece of guidance is to recognize that there are, besides from requiring the external expert to disclose such circumstances in relation to its in relation to the client, this information could also be obtained through inquiry from the client itself. And if you'll note here, the latter part of the sentence is if disclosure of the use of the external expert to the client does not undermine the intended purpose of the PA in using the work of the external expert. And so that really was to also recognize that there are instances where an external expert could be engaged by the PA to, for example, for forensic purposes or whatnot, and where you can't disclose to a client. And so therefore, this is guidance, and where appropriate, if it doesn't undermine the purpose, you can actually inquire with the client about these interests and relationships. So if there are no comments, I'm going to move on to the next big section.
So, do we want to include in there anything about like adverse relationships between the expert and the client? Like, for example, a lawsuit, or like sometimes you might be biased for, but sometimes you might also be biased against. Just again, just a suggestion.
Yeah, actually, let us take that on board tonight. We'll have a think about that. I mean, clearly in the audit context, if you have an adverse relationship, that can be an independence impairment. Okay, thank you.
And so this is the conclusion we were talking about before, where in terms of the assessment of CCO, competence, capabilities, and objectivity, whether or not it's an external expert used in an IAS, an external expert used in an audit or other assurance. Again, bear in mind for audit and assurance, you have that additional list that we went through, A to M. The PA must evaluate whether or not that external expert has met CCO. And what it is that this is a very clear prohibition in using the work of an external expert if, number one, the accountant is unable to obtain the information needed for the evaluation, right? Or the PA determines from its evaluation that the external expert is not competent, capable, or objective. So that's a very straight no, and that's a clear prohibition. There's no sort of exception or qualification to that. Lori?
I just was going to add, someone asked the question earlier about if you can't get the information, what does it mean? This is the section that applies in that case.
Just a tiny comment. So, I mean, I certainly agree with part A. And part B, I mean, if you determine that the external expert is not competent or capable, but when it comes to objectivity, okay, so I'm just thinking out loud. Could it be that if the professional accountant does some extra work that puts them in a position to evaluate the work better, then that might be sort of a mitigating procedure?
Yes, so let's go a little further. We'll pick exactly that up.
Yeah.
You're right on that. So there's several steps that could augment or get you around that additional work, another opinion, et cetera. And we'll go into that. Just not in that section. We'll go a little further.
Yeah. So in the section that Laurie was mentioning, we're moving into the potential threats arising from using the work of an external expert. So what this is that this is under the assumption that the PA has already, this is in addition to the competence, capability, and objectivity evaluation. So again, you cannot use the work of an external expert if the external expert is not CCO. And additionally, when you are using the work of an external expert, you must identify, evaluate, and address threats to the fundamental principles, and this is in accordance with the rest of the code. And as a result of some helpful feedback also from the October draft, the task force has added a paragraph here, 390.13A1, to explain why we still have this section even after the PA has done the CCO evaluation. So hopefully that's clear to everyone and is helpful and helps the flow of the document. Lori?
No, I'm just
checking
any comments.
Okay. Yeah. All right.
If I might, a couple places in the material, and I don't know exactly where it is in here, we refer to safeguards, and I was looking earlier at the definition of safeguards, and it's really in connection with the fundamental principles. But usually you see safeguards associated with independence. I wonder whether or not safeguards, and Rania just mentioned it, mitigation, would mitigation be a better word to use in connection with objectivity as opposed to safeguard? Because a safeguard, well, again, I think I stated the question.
Great, we'll pick that up. Sorry, we'll pick that up tonight for discussion. Cam, do you have something you want to say? I feel like I want to do a search on safeguards and see, and then come back. No?
Ken, go ahead.
Go ahead, Cam.
No, just as part of applying the conceptual, so safeguard is not just for independence. Safeguard is also part of applying the conceptual framework, right? And addressing threats. You can apply a safeguard to reduce the level of the threat, or you can eliminate, or you can end the service, etc. So under this section, specifically potential threats arising from using an expert, a potential way to address the threat identified is to use a safeguard to lower that the threat identified. And under the CCO evaluation specifically, we're saying that there are no safeguards. In essence, if the PA has evaluated that the external expert is not objective, you cannot use that work of an expert. So there's two different concepts here.
Yeah, because of that, then I think we should look specifically at the use of safeguard and maybe consider Rania's, I think, her suggested mitigation.
Just to be clear, safeguards are not just relevant to independence, addressing threats to independence. Safeguards are basically actions to address threats to compliance with the fundamental principles, including objectivity or threats to independence. So that's an integral part of the conceptual framework.
That's what I said earlier, but a safeguard is used to reduce, right? Or come in compliance with the fundamental principles.
Yeah.
But then, as Jen's pointed out, you can't use a safeguard in this section to say that the expert is objective. So it's a little bit of a conflict.
This section is not dealing with the expert's objective. We are beyond the CCO evaluation. This is about threats to the PAs.
Yeah.
Compliance with the fundamental principles. So this is a different, we've shifted to a different chapter, if you will.
Yeah, and I think when we get to the back end of this discussion, we have a section called addressing threats that Galen, let's see when we get there, but that'll go into some of the things that might take place to address threats to the fundamental principles with regard to the PA.
Okay, so now we move into this gear, if you may. So identifying threats, 390.14 A1. So we have examples of facts and circumstances that might create threats, and as Ken pointed out just now, to a professional accountant's compliance with the fundamental principles, right? So this is not the external expert's CCO. This is threats to a PA's own compliance with the fundamental principles when using the work of an external expert. So we've provided several examples of threats that might be created here: self-interest threats, advocacy threats, familiarity threats, and intimidation threats. What's changed from September essentially is the key change here is in self-interest threat. We've added that a PA self-interest threat could be created if a PA has insufficient time or resources to evaluate the external expert's work. An advocacy threat might be created if the PA promotes the use of an external expert who has a known bias towards conclusions which are favorable to the client. And I just also wanted to highlight here in familiarity threats. I know there was an advanced comment raised with respect to potentially this threat might indicate that where an external expert, because that external expert has been fully evaluated to be CCO and all that cannot be used. Again, this is under the conceptual framework, right? So the onus is on the PA to, there might be a familiarity threat. Then the next step, you need to evaluate what the level of that threat is and whether or not you need to take actions to address that threat. So it's not, it may or may not be the case where that level of familiarity threat might be at an unacceptable level. So if no comments, I'm going to move on to evaluating threats here. So we've tried to streamline this list a little bit because as you'll recall in September, there were some comments that the list was quite comprehensive, if you may allow me to use that term. So the second, in terms of the substantive changes, you'll see the withdrawal of these bullet points. And we believe that these are essentially incorporated in, for example, the second bullet point, the impact of the external expert's work on the professional accountant's engagement, or the nature of the professional service. And the deletion of multiple experts, that was deleted because we have a whole subsection below that discusses multiple experts. And source and reliability of the underlying data that is covered in this bullet point here, where my cursor is over. So as you can see, we've kind of gone through with a detailed eye and just tried to take away those that appear to be duplications. There were two actually advanced comments with respect to, and I think it was this bullet point here. Oh no, it was respect to the professional accountant's ability to understand and explain the external expert's work and its appropriateness for the intended purpose. So we did receive two advanced comments in respect of whether or not this bullet point would be better placed under sort of assessing the competence of the PA. However, this is since the previous section on CCO, that really has to do with the external expert's competence, and therefore it doesn't have to do with the PA's. So therefore this bullet does belong here because this is with respect to threats to a PA's own fundamental principles. For example, a threat to professional competence and due care. Yeah, so again, there's some editorial refinements. Rich?
Thanks. I'm actually, I want to make sure I understand where we're at. We're in a section that has to do with threats to the PA. So it could be for audit or non-audit services, right? So under the prior paragraph, 14A1, we have this familiarity threat that talks about the use of the same external for a long period of time on multiple professional services. I would observe that that could be a very common scenario because you find somebody who is one of the top experts in the world in a field, and they get used from time to time, maybe not every year, but over time you use them on multiple clients. What I don't see in here is how does one, or are we just leaving it open as to how you evaluate whether that threat is one in which it's not at an acceptable level? Because we don't seem to have, we say we have factors to evaluate the threats, but I'm having a little bit of trouble with that. And my second point would be, should paragraph 15A1 not say factors that are relevant, but rather factors that might be relevant? So.
Yes, so in terms of the guidance on how a PA might evaluate the level of such familiarity threat that you pointed out could be a common scenario. I mean, I don't want, that guidance is here, factors that are relevant in evaluating the level of threat. I do take your point that, okay, so how would you take these factors and then come to a conclusion? And Laura, you might want to.
Yeah,
here.
I mean, I could enrich, I think I won't come from a different position from you and saying that usage over time sometimes is because they're the best or the only, I get that. And that would be, and maybe we need to incorporate a little bit, a statement about that in there. I think it is a potential familiarity threat. It's used as an example. And maybe we can get a little more clarity around that, because I can see times where it would actually be a positive that you secured the best firm out there, for instance, and everybody's using that firm because they're the best, right? That's what you were getting at. I'm sort of asking a question.
Yes, for example, sometimes as part of audit support, there are some assets that there are very few people out there that really have the right expertise. And so whenever you would encounter that and value was relevant, you might want to have that person do the evaluation of whatever management gave you in support of it.
We'll try to pick up a bullet in that longer list at the back end, Rich, to pick that up. Okay.
Yeah, no, I'll have a brief comment, Gabriel, in response to Rich's point, and maybe that's a point for the task force to further reflect on. And that's the concept of a familiarity threat. And in the code, it is defined relative to the client or employing organization, not so much relative to an external expert. It is a technical point, but the definition of a familiarity threat does address the concept of being too accepting of a third party or one of the parties' work, so to speak. But in the code, it is defined relative to, as I say, the client or the employee organization, and not so much an external expert. So we might just want to take kind of a look at the language as to whether we can refer to familiarity threat or something that is close to it. But the concept essentially is, will the PA have been exposed to the work of the external expert over such a long period of time that the PA becomes too comfortable with the work of the external expert, and therefore doesn't put in the level of due diligence or analysis or evaluation, if you will, of the expert's work before deciding to use it.
Yeah, I would agree with what Ken just pointed out, and just use kind of the flip side of what you're talking about, Rich. Is we remember a number of years ago the savings and loan debacles, and you had valuation experts that were providing the companies over and over again with very high valuations, and so over familiarity, I think, as well as is the situation you're describing. It can be a problem. So I think that wordsmithing might be appropriate.
I think it's more about describing the risk we're concerned about in terms of the words, and not just that you might have used them before type thing. Because I agree totally with what Ken said and what you said.
Thanks. So just concerning advocacy threats. So a professional accountant promotes the use of an external expert who has known bias. First of all, I think that the threat is basically that the bias is not known. I mean, we're assuming that the accountant has done their, supposedly their due diligence, but then there is something that is hidden out there. So, I mean, I would remove the word known. Who is biased. I mean, and then towards conclusions which are favorable, it could be that the conclusions are favorable or unfavorable to the client. Again, to my earlier point regarding, I mean, bias could be for or against. So that's the first point. And the second point is when we talk about identifying threats, I think one threat that should be in there, which I think is sort of covered when you're evaluating the threats, but it's not identified in the threats themselves, which is hiring someone or contracting an external expert who really does not have the competence. I think that's one of the major threats, especially when it comes to sustainability. So you're not really in a position, or you seem to be hiring someone or contracting someone who really isn't the right person for the job. But then you cover it, because then you talk about the scope of the work and the accountant's ability to explain the work. But so yeah, I think I think I would include that.
That's getting at the professional competence and due care fundamental principle, and we'll take that on as a consideration, as well as we'll relook at that language around advocacy threats and see where we get. Ken, you look like you want to say something.
Yeah, no, it's
Is it-
more the latter point that Rania has raised. And if I sort of understood you, you were more thinking about a threat that the PA might use an external expert who doesn't have the competence or capabilities to actually perform the work. But the presumption is you would have completed the CCO evaluation, or in other words, you would get to a place where you would have reached a satisfactory conclusion as to the competence of the external expert. Okay. So therefore, you're already using an expert on the understanding that they have the appropriate competence. So yeah. I'm not sure where I would be seeing the risk coming in.
Okay, but then if I mean I understand what you're saying, but then you should exclude advocacy threats because you've also done your CCO, yeah, evaluation. I mean, if we're saying, okay, we're at that point in the process where we're done with the CCO evaluation, then I think you should also take out advocacy threats. You get my point?
Yeah, I think this goes to an ethical threat to the fundamental principles relating to the PA, where they may be in an advocacy position seeking out an expert that helps their client. Right? So it's almost bias on the part of
the PA.
The PA, right? Like, okay, we're doing this, you want to get in this range, this is the expert who can do that type problem.
I mean, yeah, just it wasn't so clear.
Okay.
To me. Yeah, just point.
All right, let us look at that again. Okay.
Okay, so on this list, just before I move on, I think I wanted to raise that I just took a relook. The advanced comments we received was whether or not this factor here, the external expert's ability to explain the inputs, assumptions, methodologies, and conclusions of the external expert's work, whether or not this factor is actually better placed in the evaluation of the external expert's competence instead, because obviously if the external expert can't explain its own work, is it really competent? So we'll just also take that on board. And I do note though, Rania, that also touches on your point. You hire an external expert who's not competent in that essence. So I'll move on now. We went through identifying threats, evaluating threats, and now we're on addressing threats. We have an example of an action that might eliminate a familiarity threat. Is identifying a different external expert to use. Examples of actions that might be safeguards that can lower the level of a threat to an acceptable level, and that's consulting with other qualified personnel or using another external expert to re-perform the work, or if it's a self-interest threat, because the PA didn't have enough time, agreeing with the client, additional time or resources to complete the engagement. So if I see no comments, I'm going to move on. Okay, so we have other matters now. External experts in emerging fields or areas. There's been no significant change since the September draft. So I will, again, no comments, I'm going to move on. Okay, using the work of multiple experts. The reason why the task force sort of withdrew the factors that are relevant in evaluating the level of the threat is because actually when we re-looked at this requirement, if you see the accountant shall consider, in addition to the threats, whether the combined effect of using the work of the external expert might create additional threats or impact the level of threats. This is essentially saying what the latter two bullet points were, so we didn't, so that's why we withdrew it for simplicity. Okay. And then inherent limitations in evaluating external experts' competence, capability, and objectivity. And this, again, this is to remind the PA that it does have the communication responsibility if it has limitations inherent in the in its professional service. So it's really a reminder for the PA to communicate with the relevant stakeholders what those inherent limitations in engagement are, especially with respect to using the work of an external expert. Okay, so now we have our last two mini sections. And so one is the topic of communicating with management and those charged with governance when using the work of an external expert. Minor editorial refinements here. I mean, I guess the editorial is really just to focus the scope, as we've now changed the scope to external expert. And then in terms of documentation, it was a geography switch from the last bullet point to the first bullet point, and it seemed to flow more logically. You document the results of the discussion, the steps taken by the accountant to evaluate, and the significant threats identified. So we've reached the end here. Laurie,
I don't have anything else to say. Let's. Oh, sorry, I keep forgetting. We're going to pause quick to see if there's any tent cards up. If not, I think we're going to move into section 2 and section 5, because those pick up a lot of this and just slightly tweak them. For instance, part 5 for the sustainability stuff, but it's the same information, just tweaked for sustainability. That should move a little more quickly. We'll assume anything we work on in part 3 that gets revised or changed will flow through. So I don't think we have to raise those points again, but look for them through the eye of PAIB and then sustainability. So Cam, if we want to move into part 2, that would be great.
We've closed the chapter of part 3. Part 2, this is a markup from the extant code, the section on section 220, preparation and presentation of information. So this is on the section of using the work of others. What we wanted to do in this PAIB section, acknowledging that the use of work of others is quite broad, right? It could encompass the work of an expert, it could really encompass the work of your colleague, it could encompass the work of data providers, etc. What we wanted to do, because we've now introduced a new section for external experts engaged by a PAIB's employing organization, we wanted to highlight that, therefore, we do have this new section. So therefore, we added this paragraph 220.7A1. For the purposes of this section, the work of others excludes the work of an external expert. And then therefore, when you use the work of an external expert, the requirements and application material in section 220 apply. The changes from September are in yellow highlight, and that was really to make it clear, with regard, as opposed to, aside from the expert, it's really to make it clear that when we say the use of the work of others, it's only for the purposes of this section that we want to delineate that others into external experts and point them in the right direction of 290. So this is not an exception to the requirement of 220.7. Okay. Accordingly, some numbers have changed because we've added the new paragraph. Okay. And now we've moved on to the proposed new section 290. This is a markup from the part 3 that we just went through. Okay, so any markup there is change from part 3 to come to this new section. I'm scrolling down, so if you do have a comment on a specific paragraph, please put your tent card up, because I'm going to go to the next major track change otherwise. This part here, 290.4A4, we've removed subbullet A because it's not applicable to PAIBs.
Mark?
Just on the 4A4, you've got a bullet that is currently sitting in 296A7, which is about inquiry of management and the employing organisation, and that seems to be something that would sit more happily in A4 rather than in A6, where it sorry, rather than in A7 where it currently sits. The one that's about inquiry of management and the employing organisation, and if different, the entity at which the external expert is performing the work regarding any interests and relationships. That might be better sitting in A4 because it's about the evaluation of objectivity.
We'll pick that up tonight. Thank you.
Okay, so we were at 290.4A4 here. And then moving on to agreeing the terms of an engagement with an external expert. So the requirement 290.5. Obviously, there are no relevant performance standards for a PAIB, so that this highlighted bit, my cursor, that has been withdrawn. And again, given that there's nothing specific to audit and other assurance engagements, little sub-bullet B has been removed. No other specific changes substantive to PAIBs here. And then we move on to the section on evaluating the external expert's competence, capabilities, and objectivity. So the biggest change here from part 3 is with respect to the factors relevant to evaluating the objectivity of an external expert. That includes whether the external expert or their organization has a conflict of interest or other interests in relation to the external expert at which the entity, in relation to the work the external expert is performing at the entity. Then 290.6A5 explains what those other interests might be. I just wanted to point out also that, however, this is not significantly changed from the September draft. Mark, in terms of your comment just now on inquiry of management and then of the employing organization with respect to the interest, I think you were suggesting to move it up to objectivity here, right, as a factor? Okay, to consider. Okay, got it. Then no other changes at this point that are significant. And of course, this section here on audit and other assurance engagements, this has been removed. It's not relevant to PAIBs. And then no other changes that are specific to PAIB section that are significant. And we are now at the bottom of the document.
Let's pause quick. Any tent cards up, Brania?
Okay, so I just want to reiterate a previous point I mentioned, which is, I mean, using the work or not using the work, if it has been determined that the external expert is not objective, and especially in the area of, I mean, sustainability. I'm just wondering if you may want to like reconsider. I mean, there might be certain circumstances where you may have to, I mean, because here it says very plainly, you may not use the work of someone who is not objective. And I'm saying that practically speaking, there might be some, you know, circumstances that sort of constrain your options. And so just, I mean, just something to think of.
Yeah, and Rania, we'll take that back with the task force again, but I just wanted to highlight that this point has been kind of deliberated extensively by the task force, is essentially whether we can, I mean, essentially what we're saying is that can you lower the threshold of objectivity to accommodate the lack of external experts out there on the market? Can you use an external expert in terms of ethics for that? And the task force has said no, but we'll take that back.
Just to react to this, I certainly agree. For example, if it comes to competence or capability, definitely. But when it comes to objectivity, then perhaps you may bring in a second opinion. You may do some extra work. I mean, there may be some other procedures that, again, mitigate the risk of lack of objectivity. I'm just saying. So I'm not saying to lower the threshold. I'm saying compensating with other types of procedures.
And I hear you. And for example, what you mentioned in terms of performing additional procedures, etc., these are highlighted in ISA 620, right? When you do, these are more performance procedures. Because remember, the use of the work of an external expert, that use is
agreed. But
evidence,
then if we agree to this, then is it appropriate to put in the standard so plainly a prohibition that you may not use the work of someone who is deemed not objective? You get my, I mean, if we are in the backs of our minds, if we're referring to that other standard in the ISAs, then we're contradicting ourselves. You get my point? So it's either we agree with that or we don't. I think that's a very plain prohibition. I mean, all I'm saying is that there may be certain circumstances where we feel that we are constrained. Of course, we don't want to lower the threshold, but we may be able to work around them without lowering the threshold, just from a practical point of view, and just something for the task force to consider.
Okay, thank you very much. Begonia, please.
I was worried about Rania's suggestion, because all this exercise is to get, my understanding, the independence of the external experts without calling that independence through the objectivity. But if then, because of practical reasons, we go down in this requirement of objectivity through the lens of independence, or the other way around, then you will not get the same conclusion. So I'm concerned about this possibility. Sorry.
I agree, and I think especially in the assurance and audit space, it's one thing if you're, doing it non-audit, non-assurance. Let us take this way, but Begonia, we're very. This was why we had the strict language in the standard around that. So, yeah.
I mean, this is very much to what Andy was saying. It's like you're gathering information and you're putting it on that scale, as you put it, and then you're evaluating. Yeah. So, I mean, obviously, the degree of reliability is going to vary, but you're not relying. I mean, I'm just like putting all of this together. You're not relying on you're using it as a source of information that you will want to corroborate with other sources of evidence.
Okay, I think what Andy was saying, it's different. The PA has to make an objectivity, a CC and O determination. They have to make that determination on the record whether they view that person as objective.
Okay.
If they don't view it as objective, and in particular when you're in the audit or assurance space, I don't think you can get around that. I don't think there's any way. That's a scope limitation type situation, because I just don't think you can get around that. I don't know if anybody, Marcus, you might comment. He's nodding. Yes. Yeah.
But Ken.
Well, I don't know that I'm in a different place, because precisely because we're in an audit or assurance context, really, it's independence is so pivotal to public trust in information, and as we're talking about external experts, it's objectivity in lieu of independence, but through the route of independence, we get to the same place. But I would argue that's probably more an audit or assurance question as to whether on the side of the assurance standard, the relevant standard setter in this case could be IESBA, for example, might determine whether there might be other avenues to address a situation where the expert is basically considered not independent. But up until now, it's basically always been that in order to be able to go ahead and use the work of the external expert, the CCO evaluation has to be completed satisfactorily. Otherwise, the auditor is not able to use that work. And if that is the case, there are options under the auditing standards for the auditor to address this. And one of the options could be, yes, I mean, the auditor has to conclude that there is a limitation of scope, as Laurie has said, or the auditor can go in and perform alternative procedures. But that's more, as I say, that's more an audit or assurance question.
That's why I was saying, I mean, it seems to me like you're completely, very categorically prohibiting the use of the work, not the reliance on the work. Again, I mean, we're talking about different degrees of reliability, and you're looking at I mean, in an assurance engagement, you're really looking at the pervasiveness of the evidence, the alignment of the different sources of evidence. And so I'm just wondering, I mean, again, we're using experts, and not necessarily they are going to be influencing, correct? I mean, just the engagement is just you're using their work as one piece of information. So for example, if you feel that this expert is competent and you have no reason to believe that they are necessarily, they have an incentive to misstate the evidence. It's just that you're not very comfortable with their level of objectivity. You may say, okay, we'll take that piece of evidence and look at it very, skeptically, and we'll keep that in mind. But if that's the only source of information, you just, you're using it. You're not relying on it. I'm just.
To borrow one of Galen's favorite phrase, it would be good if you had the concept of partial independence. But Galen, I know you have a very strict view about this.
We're going to pick up section 5 now. We're getting into marks and sustainability team space. Come on, off we go.
Five. So with the equivalent part 5, we've made the appropriate replacements in terms of professional accountant and sustainability assurance practitioners. I'm going to scroll down and just please raise by section, and please raise your tent cards if you have comments. So we go into the general section here. And then the section on agreeing the terms of engagement with an external expert. The section on evaluating the external expert CCO. And this is the section with the heightened public interest. So that's sustainability or other assurance engagements, where the external expert is used in these engagements.
I think our sustainability gentleman across the aisle from me might have a comment.
Yeah, we are not sure whether it's a question for Mark or.
Okay.
So it's just the heading. It's just before. Oh yeah, there it is.
Yep.
What are other assurance engagements?
So what we intended for is because part 5, the equivalent part 3 of part 5, that's applicable to sustainability assurance practitioners, right? So sustainability assurance practitioners can perform sustainability assurance engagements, of course, but actually they can also perform other assurance engagements, and that's what the whole equivalent part 3 in the part 5 is about, as workstream 2 will discuss at one of the other sections.
For accountants, they should go back to 4B.
So this is in part 5. So those meeting the criteria of part 5 engagements. So the sustainability assurance practitioners who meet the criteria for sustainability assurance engagements, they go into part 5. And then for these sustainability assurance practitioners, they then apply these standards. It could be that those sustainability assurance practitioners who perform engagements that meet the criteria of part 5 could also be performing other assurance engagements, but that
Yeah.
are applicable to those,
These are
which can also,
non-accountants.
it can be
Sorry,
accountants and
I'm gonna jump in here.
Yeah.
If they're accountants, they don't get to skip out of
Yeah.
the code into
Yeah.
this section. These are for non-accountant sustainability, yes. So,
So just to say, it's because we've taken the wording of the code because it's equivalent all the way
Yes.
through, and therefore we'll take an action to pick this up in when Sylvia and Keith and I go through this
Okay.
afternoon,
okay,
because
good.
it is one that's from there.
Great. We'll leave that to you and you just pop over to us if there's anything that you want tweaked, Mark. Make sense?
Yeah.
But you guys have already looked at this generally, I think,
Yes.
and provided comments. Okay.
Yeah, and Nora, if I might jump in briefly here, I think this is a very fine point that I think would be very worthwhile to explain clearly in the explanatory memorandum as to why we have this reference to other assurance engagements. Because, you know, if Jan is on the board and is not clearly seeing light of day on this one, I have doubts as to whether others would really understand it.
okay, I will continue my moving down to the next section then. Which is the potential threats arising from the use of a work of an external expert. Identifying threats, evaluating threats, addressing threats, and other matters. And before I just call out all these section names, can I just ask if anybody has comments on this document, maybe? Okay. All right, Lori? Yeah.
Nope. So let's move on to consequential amendments. We're in the home stretch on this read through. So Cam, dive in. A lot of these we talked about last time, so this should be relatively short.
Okay, so these are the proposed consequential amendments, and they arise from the proposed new definition of expertise in the code. And that's, we've defined expertise as knowledge and skills in a particular field. And therefore, we've proposed some changes to the extant code where the term expertise is used in conjunction with, say, the term knowledge and or skill, because it seemed the thinking was that it was already incorporated into the term expertise. We did receive, and as Lori mentioned and Rich pointed out, we did receive advanced comments on this, on these consequential amendments in the sense that knowledge, when it's used in those contexts, knowledge or skills could be broader than just those that we refer to in a particular field for expertise. Unless Rich or Laura, you want to elaborate further, we'll take that back at the task force and you know, we can communicate more our discussion outcome. Yep.
I just wondered, sorry, Cam, I just wondered if you could maybe just use an example to just help us look at the point.
Yeah. So knowledge, the word knowledge and skill and the phrase knowledge and skills is used in a number of places, starting with 110, I think it is, and 113. And these changes in this section 200.6 and a couple below it, in the 200 came from the technology task force, where the concept of knowledge was not the same as the definition of expertise as it's been defined as being limited to a specific field. The idea would you would take in the totality of your knowledge of the organization, professional standards, disclosures, the nature of the business, et cetera, besides perhaps having particular expertise in an area. And so those were put in intentionally and working in the technology task force. And we're also not changing it throughout the rest of the document, the extant code. So I just think you should leave the word knowledge in there and just not delete it out in those places. I also don't think we should be making edits to NOCLAR around knowledge, because again, if you read those paragraphs, they are not specific to being an expert in a specific field or area, which is how expertise is defined, which I don't have a problem with how expertise is defined, but.
So, Rich, I think it's a really good point. We'll pick that up tonight. I don't think our intention was when we drafted the expertise definition, it was very much in the context of use of an expert, not to have a knock on. And my own read, and I think I need to sit with my other task force members, but my own read is having that language knowledge in those other sections isn't problematic for us. So I think it's a good catch.
Yeah,
Ken,
no,
I think you agree.
I agree as well.
Yeah.
This is really an excellent point,
Yeah.
and I'm really grateful that Rich was on the technology task force. But more than that, I think this is one of those finer points, and a very fine nuance that needs to be explained in the explanatory memorandum and eventually in the basis for conclusions, etc. Because yes, there will be questions as to why in other parts of the code we continue to refer to knowledge juxtaposed against or vis-a-vis expertise. So Cam, if you can pick that up and explain again that fine distinction.
Okay, we'll pick that up tonight and run that through, Rich, and have you have a look at that. So I think I would like to pause there. We've gotten through all the amendments to date. We'll pick up all your comments. We're meeting today and again tomorrow, and we'll turn around a draft for everybody to look at. Obviously, during the course of the week, it's very important that if you have things, right, grab one of us and we'll keep working through those so that we get to the finish line by Friday. I do note that I think the discussion was long at the beginning, but very important, because in that first section 2, which flows over into the remaining sections, we're dealing with the hardest issues, many of which have very strong public interest implications when we're talking in particular about the impact on audit and assurance. And so we've really tried to have a significant heavy lift in what's expected of the PAs in making these assessments, picking up a significant amount of information that they have to obtain, assess and be accountable for in their determination of objectivity, but also competency and capabilities. It's a big change from where we are today. It's quite significant. And I think, one of the things that as we go to exposure draft, I know around the table, everybody has different viewpoints. We're trying to find something that, and by the way, we considered significantly the public interest framework as we went through and did the framework elements as we went through and drafted this standard. And I think it's very important to consider things like both practicality and these public interest elements, especially when you get into areas of heightened public interest. So I think from our standpoint, it will be very interesting for us once we are in the exposure draft status to see how these are landing. We've had a lot of external feedback and socialization on this. We think we've got it at a reasonably comfortable level with a lot of attention to public interest. I think, there are things I hear from practitioners that, this has gone too far. I think it's very helpful, Mark and Chana, given both of you sit with standard setters and regulators in your own jurisdictions, to hear that this is landing somewhere in a place where you feel it moves the needle in the public interest significantly. Not just a practitioner point of view, because that's not the goal of this at all. We want an enhanced obligation here. So we'll be back at the midweek with changes. We welcome continued comments, questions. You guys all know that when we work through drafts like this, we are heading for a finish line, and exposure drafts, it's important that we have this very high quality product as close as we can get to where we think we're going to land. And that is definitely our goal right now. So your voices are very welcome. And then Gabrielle, I'm going to hand over to you in case you have any comments.
Well, you said it so well that I don't have much more to add, but of course I need to add my gratefulness and respect for this task force, because you may have forgotten that this task force and this work and this project started much after the other ones on sustainability. So it came a little bit unexpectedly, but we felt that we needed to address this topic at the same time, and that leaving it for a later stage could create a lot of disconnections and inconsistencies with the sustainability work, but also because we came very quickly to the conclusion that this was going to be extremely necessary for the sustainability reality in the use of experts. So you really had, and you will have still, mostly because I heard you 14 times, I counted it, saying we will take it for tonight. So I wish you a very good night. But it won't finish there. But it's really a very important work, and as you mentioned, Laurie, this is something that we knew with the help of our stakeholders and etc. But this is necessary for the public interest. The distance between where we are now and where we are going to be once this is finalized and approved is very significant in terms of the service that we are providing to the public interest. So with all the complexities and the difficulties, and we know that there is still we all a road ahead in terms of making it clear and simple and very visible. What's the purpose? What's the result? Where we are going to land? What the difference does it make? Why these experts are different from those in the engagement team and the audit team and etc. This is complex by nature. Nobody thought that this was going to be easy or simple, but we hope to, with your very great help, to get to a good place in this respect. So
I just want to thank everybody for their comments today. I thought it was leading up today, we had a lot of advanced comments, and that was very helpful for those of you who provided those, and we're not in the room. I think very helpful to help us keep kicking this thing and get it to where we need it. Thank you.
Thank you very much, Laurie, task force staff, all of you. And I think that we will break now for 1 hour and 15 if you...
Yes. The planning committee needs to meet over lunch to go over the revisions to the SWP in light of yesterday's board discussion. But also an administrative matter relative to the board photograph on Thursday. It will take place over lunch or just before we have lunch. And technical advice and as an unofficial observers are equally invited to be part of the photo session. So if you could bring your IESBA sweater, your brand new IESBA sweater, that would be wonderful. And I would include staff as well. So we're all part of a big family.
Yeah, staff is fundamental here. So let's break, and I suggest that you take a substantial lunch, because nobody is gonna leave this room before we do what we have to do this afternoon, and there will be no food, no drinks, and the door will be closed. So get ready.
I want it noted that we finished 15 minutes early, so whatever happens this afternoon is not my fault.
Thank you, Laurie. So thank you very much for being back, and I apologize for the slight delay in restarting the meeting, but we had a substantive planning committee meeting and we couldn't start on time, and I apologize for that. So again, what we have ahead of ourselves this afternoon is an important, very relevant and massive piece of work for us to address. And we will have to do it. We have no alternative. So I will ask for your no. We will have to do it. So I ask again for your best efforts, dedication, and focus to make sure that we will be able to get where Mark and the task force want us to be by 5:45. I think it's the time that we are planning to finish. And without any other comments, although I would have a lot on this extremely important topic and work stream, I will thank the task force and the staff for the immense work done, and give the floor to Mark. Thank you.
Thank you. Well, we're going to start off by me giving the floor to Sylvia, because we've just got three overarching slides on our joint work, and then we'll move on to the work stream 1 independence draft.
Thank you, Mark. Yes, indeed. So we saw that we would start the session with a report back on the coordination and outreach activities that workstream 1 and workstream 2 have done in this quarter. And first of all, we would like to talk about, if I can change the slides, I can, great, about the coordination activities. So a couple of coordination activities, and as a start, I think I would just turn to Chana to talk about the work and the coordination with the sustainability reference group.
Thanks, Sylvia. So we had the third reference group meeting in early October. We were joined by Professor Kenneth Amishi, who is a new SRG member, and I think John is going to speak a little bit later about the movement of the membership of the SRG. We talked to them about the outcomes from the September meeting. Sylvia informed them that the proposed independent standards are premised on having ISQM1 or equivalent quality management standards. We got some feedback from the SRG that conformity assessment bodies or CABs are subject to ISO standards that are also similar. John also informed them about the work undertaken with IAF to map ISO requirements to the IESBA requirements and ISQM1. We talked to them about group engagements and how that would apply, and we noted that 5000 ISSA 5000 doesn't directly address group engagements. And we also talked about the work of another practitioner and why we would need section 406. We didn't sort of get a lot of pushback, but they did say that there would need to be a lot of implementation material and training for people to understand all of that. We discussed the value chain and also within the value chain, which Mark will get to later, the reason to believe principle applying, and they did support that. Then I think Laura provided them with an update on the ethics standards part. We talked about NOCLA with them as well. And with respect to the various examples they gave us, we explained to them the examples that were taken in and some examples which we may keep for implementation guidance later on. We also asked them for a few things with at that point, the deadline for them to provide input to the independent standard had not closed, but we discussed a couple of things with them about the value chain and group engagements. We said that we will get back to them probably in Q1 of 2024 once this board meeting process is complete to have the next meeting. So that's what I had, Sylvia. And I now pass on to John.
Thanks, John. Yeah, I just wanted to note a few changes in the composition of the SRG since we last met. So Anara, Olivia De Lima and Kate Akery both ceased their SRG memberships due to work and other commitments in terms of their ability to... Sorry. And then subsequently, Christian Kokbegard, who's from the Confederation of Danish Industries and also an EFRAG Sustainability Reporting Standards Board member. He recently joined the SRG. So Christian was previously shortlisted by the task force, and it was in that list of candidates that we discussed at the June board meeting. Then the task force reviewed that list again during the October task force meeting and agreed for Christian's appointment. So there's still one position which is vacant at the moment, which is being held for a South American representative, which is being under consideration at the moment with the task force still. So Sylvia, I'll pass back to you for the IESBA and ISO updates.
Since the beginning of this project, there have been a close coordination between the IESB and the IESBA staff regarding the progress of the two standards. And although the IESB published their ED for consultation in early August, we had a couple of calls with the IESB staff and the sustainability team. We mainly focused on our part, we reported back on the progress on the proposals that relevant from the assurance standards as well. And IESB staff kept us informed about the feedback they received from the roundtable, the IESB roundtables. John will talk about that later. And I think 2 weeks ago, we had a meeting with IESB staff where they could provide us a high-level overview of the early comments. But of course, we cannot really report back on that. So I think we can talk about the feedback that IESB received regarding the issues that is under coordination, probably around the March meeting. The next item is the coordination with the ISO. So ISO is developing its own standards on the validation and verification of sustainability information. There are actually two ways of this communication that IESBA staff members are part of this working group. They are developing the standards. And also we have scheduled, I think, 2 calls since September between the ISO staff and IESBA and IESB staff where we discussed the issues for the coordination. So I think ISO is also at the stage for finalizing their comments. They don't have public consultation, but consultation with the national members. So we will continue in the first quarter as well our coordination with ISO. And I would pause here and turn to John to coordination with AIF.
Okay, thanks again, Sylvia. Yeah, there's been quite a lot of activity in relation to the work with IAF since the September meeting when you had the presentation from Emmanuel Ribber and Matt Gantley. So Ken, Jeff, Keith and I met with the IAF representatives in London. We had a 5-hour meeting. We went through the initial mapping that had been undertaken by IAF in terms of the IAF and ISO requirements compared to the IESBA proposed Part 5, and then how IAF were intending to fill any identified gaps and how they might pick up IESBA requirements. We then later received a more completed or finalised mapping, and there was a bridging document as well, which identified where there were gaps and where the additional IESBA requirements that would be needed, that the conformity assessment bodies would need to comply with. And they also included references across to the IESBA application material. Undertaking analysis of this mapping and this bridging document highlighted a number of concerns that we had with the approach, and we met with IAF representatives again in early November. We identified that there were a significant amount of gaps between the frameworks because of the different approaches within the frameworks, but also with IESBA being a lot more comprehensive and robust and those sort of aspects. And essentially the way that their bridging document was coming across, it was actually looking at almost requiring the conformity assessment bodies to comply with all of the IESBA requirements as well. So essentially almost requiring a compliance with two separate frameworks. We also noted there was a risk in just referring across to application material, because obviously the application material is very important as an aspect in understanding the requirements in the IESBA code. We approached them or provided an alternative option for maybe that they could approach in terms of the conformity assessment bodies complying with the IESBA code, and then for the IEF to consider that mapping in a reverse order in the sense that as the code is more comprehensive and robust, that if they were to comply with that, where that compliance would actually mean compliance with the ISO and IAF requirements. So the IAF representatives agreed that this was probably a more practical implementable approach, and they took this issue up with the IAF executive, and the IAF executive met in early November as well, and they've welcomed the cooperation with IESBA, and they've supported this in principle, this co-opting of IESBA's Part 5 and having a reference to that within verification and validation programs. And because they've essentially accepted that the gaps between the two frameworks are too large to create a meaningful analysis and to try and fill those gaps in another means. So this still needs to be formally approved via a ballot vote, but the intention is that there will be a joint IAF and IESBA public statement towards the end of this year or early next year. So yeah, very positive development for IESBA and really a high recognition of the work we've been doing with Part 5. But I'll just see if Ken or Gabriella wanted to add anything in relation to that.
Yes, thank you, John. No, this is a very positive development from my perspective, and Gabriella, you can share your own views as well. We've been working very closely with them, as John has indicated, and from talking to IAF, and I think they might have mentioned as much when the chair of IAF and Matt Gantley, who's the co-convener of the Sustainability Working Group, came to the board in September and spoke about the work at IAF, that they're very keen to make clear that IAF is not seeking competition with IESBA when it comes to the ethics and independence standards. They see a clear need for a global baseline of ethics and independence requirements for sustainability practitioners, including the conformity assessment bodies, as John has mentioned. And they see the IESBA code or the proposed Part 5 as providing that baseline, that global baseline of ethics and independence standards. So they have really effectively embraced the work that IESBA is doing, and they are keen. They've indicated that they will provide a letter of intent, first and foremost, to IESBA to really formalize that intent to take up Part 5. And from there, they would be willing to work with IESBA to issue a public statement in terms of their initiative to adopt Part 5. So we are awaiting that letter of intent, and we will communicate with the board as soon as we have it.
Yes, I don't resist making a comment here because I think this is really a relevant and very positive outcome. And this really shows the importance and what we can get back when we take risks, if we are to take risks, and the benefits of keeping our doors open to these people and our minds also open. We could have taken a different approach, and we saw at the start that there was some hesitation about if we should or not take this very open, collaborative approach. There were risks along the way. There were moments where we were seeing things having two possible different ways, and not both of them were great. But I think that first it was an incredible work done by the team in connecting with them. I had a meeting with the chair in June last year in Rome, which somehow set the scene, but it was mostly the team's merit to get here, but also the luck that we were working with people with also had open minds and clearly and very quickly realized that this was the only way and was not insisting on competing just for competing. So going forward, I think that this is a lesson for us because not everyone if you look at others, they don't. Not everybody has the same approach and take a very reluctant reluctant attitude with respect to opening the door to these non-professional accountants representatives. But this is for me the evidence that we decided to take the right way. So I'm really happy and very much waiting for that statement, if it happens. But I hope it happens the quicker as quick as possible.
Okay, thanks, Gabrielle and Ken. You just go to the next slide. I'll just give a very brief update on the IASB roundtables as well as the IEEE. So with the IASB roundtables on ED ISA 5000, so board members and staff attended all of those, the roundtables, New York, Japan, Malaysia, Belgium, South Africa, Brazil, Australia and Canada. It's obviously a really good opportunity to be involved in these roundtables and great opportunity to maintain coordination between the two standard setters. So we got report backs from all those that attended. I was just going to highlight a few things that were of, I guess, mutual interest or relevance to the IESBA and our work. There was a common response that the ethics and independence standards are critical to underpinning sustainability assurance. And the importance that it's the same across the ecosystem, so for PAs and non-PAs. So that was good feedback. There was a lot of discussion and requests around the clarifying what it means around at least as demanding as the IESBA code and who's going to enforce that, and then an urge for regulators to work together on this. Some concerns raised about quality and practicality of the least as demanding in relation to the ISQM1. In relation to non-PAs in particular. The view that profession agnostic standards, because they're being applicable to all sustainability assurance practitioners, that there will be a requirement, for additional guidance material for non-PAs who might not be familiar with, terminology and concepts, those sorts of things. Some stakeholders expressed the view there's a need to deal with communication or connectivity between the auditor and the sustainability assurance practitioners. Obviously, but with respect to confidentiality. And there was some queries around group sustainable assurance engagements and value chain and another practitioner, but these guys will go through those issues soon. So that was a brief overview of the IAASB roundtables. And then just very briefly, Ken and I met with John Havens, who's the sustainability practice lead at the Institute of Electrical and Electronics Engineers. We provided respective feedback, but John's work is more predominantly focused at this point, I guess, on the reporting frameworks and the impacts of the entity on ESG elements. So accordingly, we've connected John with GRI and EFRAG, reporting their reporting frameworks, and we'll reconnect with IEEE down the track when IESBA starts to look at expanding the sustainability reporting to be profession agnostic as the next phase in the project. So. Gabriella, I was going to go to you next with any of the updates. So there's a number of those there that related to yourself around the PIOB and UAE. And please, if you wanted to provide a bit of
well, I will probably not address them all with the same level of detail, but just make some mentions. With respect to the meeting that Ken and I had with EFRAG and with Patrick de Cambourg, well, I think that the main takeaway is, again, that EFRAG, just like the European Commission, the ISSP, we still have to work with them to make them understand why the ethics standards are necessary in addition to what they have. They generally tend to understand that what they have is enough. The standards that they set were enough to address the problems. And I think that something different, well, of course, they are not. That's my conviction. I think our conviction, but there's still some work to be done to explain them why they are not enough. And for that, we need to do our own work and homework, which is to compare what they have and what they don't have. I think it's going to be easy because in terms of ethics and independence, it's very narrow but anyway, we can't keep on saying that it's necessary without demonstrating in a technical way why it's necessary. So this is the outcome with the meetings with the European Commission is more or less the same. But I had the impression in the meeting with the monitoring group in Bern 2 weeks ago, I don't know, something like that, that there was a slightly different understanding of what is coming. And what is coming close is the fact that the sustainability standards reporting standards will be available by the IESBA, by the European Commission, etc. The assurance standards will be made available by the IESBA. And at the same time that this all gets enforced, they will need the ethics standards, which will be there as well. But these stakeholders are starting to realize a little bit late that this will be needed, and this is the uplift and the effort that we will have to make over the next few months, is to make them understand first that this will be needed. Secondly, that ISO 5000 refers to our standard. So in one way or another, they will have to take it into consideration and understand it. So the meeting with the monitoring group was really a good one. I had the impression that, at least it was my perception, that they were following very attentively what we are doing and what we are what I was saying, with a very particular attention put on the ISO and AIF topic. Very interested on what's happening, and I think that very happy with the outcomes. With the PIOB, and Begonia is here, can confirm, I hope, what I'm going to say. It was not an easy meeting. The PIOB had many questions and many considerations and many topics to be addressed on the different, on sustainability experts, tax, strategy and work plan, and etc. I think it was a good meeting. It was very substantive, very challenging, but I think, or at least I hope, to have been able to address the topics in ways that PIB was more or less happy with what was said there. One of the most the strong considerations about the PIOB is on the clarity of the scope of the projects and what we are addressing, what is in, what is out, and the reasons for us to make some cuts. And so we are trying to make this as clear as possible going forward. And in our communications, after the exposure draft is out, we will for sure work on this very carefully with the help of our consultants and everything, to see if we can have a message that everybody can understand, which is part of the success, of course. I also had a conversation with Martin Maloney, which is also very interesting. What basically Martin Maloney said is that they were going to issue a letter supporting the IEESB 5000, which happened 2 days ago, I think this Monday or last Friday or something like that. And that, of course, they will be available and open to do the same as soon as our exposure draft will be out, but of course, depending on the analysis of the quality and reliability, understandability, etc., of what we have. An additional mention was made on the need for us to think about capacity building. And this was a message both for us and for the IEESB, that this is something that the stakeholders and the market is requiring very insistently, that ISSB is doing a big effort in that respect, but with the help of IOSCO, and they would be open, of course, if we were to provide some resources to accommodate themselves, some kind of capacity building initiatives to bring this forward. So to create somehow a capacity building hub with IOSCO, ISSB, and well, this is something we will have to think as well going forward. We have the capacity that we have, but something will have to be done. Then I'd like also to refer and finally to the meeting with the Lee White. As you know, Lee White is still the CEO of ISSB and has been appointed as the next the upcoming IFAC CEO. And basically what I have to report to this board is that it was a very good conversation, and I hope that going forward, Lee White has a considerable background experience knowledge and the market understanding that he got throughout the different positions and roles that he played. So I think that he's in a very good position to understand what we do. I try to make him as much aware as possible of our dynamics and our objectives and vision. And he was very supportive and seemed to understand very well the importance of ethics. So I hope that going forward we will have a significant support from IFAC in bringing our message to the external world, and something will improve in that respect. And I think that UAE outreaches. Just gonna mention that I was there in Abu Dhabi for the UNCTAD meeting. It was a big meeting. I was on a panel with other standard setters like IESBA and IOSCO and IESBA and a couple of people. It was a very interesting thing, but also because of the side meetings that Linda and I had there, again with Ada, that you will recall. It was a very good meeting, and this time it was with His Excellency Sultan something. So the chair, who is also the chair of the UAE federal government or federal regulator, which means that our code has been adopted in Abu Dhabi, but it's now being brought to the other countries' jurisdictions which are part of UAE, and it means, of course, that it leverages the impact and recognition very much. We are trying to stabilize some kind of relationships there because it's going to be important to keep this proximity to this part of the world in terms of ethics. And I'll stop here.
And really, just very quickly before we move on to the main thing, I also met with a forum of firms, a lot of interest in the work that we're carrying out, and obviously an interest in actually getting to see the exposure draft and comment on it. I think very supportive of the direction of travel. And I was also recently in New Zealand, where what I would say from that is, again, a lot of interest, particularly they set enormous importance in the work that IESBA is doing on profession agnostic standards, and the work that Ken and John and others have been doing with the IAF, showing how the IESBA code can be used by those who are not professional accountants, really struck a chord with a number of the people I spoke to down there, and it is a really important piece of work. But the main thing for us to focus on this afternoon is the exposure draft. And we're going to take you through that. Firstly, a couple of opening words from me. Pay real tribute to Sylvia and Keith for all the work that's gone into this, and to the task force. So Channa and Jens, but David and Masahiro as well. And I think, particularly with me being missing in action for most of November, the fact that they've managed to carry on and deliver all this is absolutely fantastic, with a lot of support and advice from Ken as well. So we're really pleased to be in this position. I got my early Christmas present from Sylvia. You'll notice we have no slides. No slides, a theme. And that's because the really important thing is that we take sufficient time to turn the pages on a very significant chunk of material that will form part 5 of the code, and which will go out to consultation. So in agenda item 5A, you've got the text. The text includes it includes material in respect of both work streams. Sylvia's going to focus on dealing with work stream 1, and obviously we'll take any questions. Just to be clear, the document that you've got has yellow highlighted text. The yellow highlighted text is what has changed since the board saw the initial draft for the first read at the September meeting of the board. Since then, there have been 2 iterations, as we've had comments from board members, and we're very grateful for all of the early comments and the ability to be able to deal with those. As we talk through, we'll flag a couple of things where the task force is continuing its deliberations just to finalise certain things. And given the volume of what we've got, the way we're going to deal with this is Sylvia's going to go through and turn the pages, and we're going to do it section by section, and then we'll pause at the end of each section in case there are any questions or comments or things that members, board members want to go through in more detail. So I hope that that will allow us to use the vast majority of the time that we've been allocated on the agenda to spend our focus on the wording and what we've done in response to not only all of the outreach, but all of the detailed comments from members and technical advisors. So with that, over to you, Sylvia.
Thank you, Mark. So as Mark has mentioned, our plan now is to have a section by section turn of the document, and I would start with section 400, so 5,400. And the plan is that I would just quickly go through the changes we have made since September. I wouldn't provide a detailed explanation because all explanation is already provided in the gray boxes of the document. So it would be just kind of a reminder to let you know that what are the changes since the September meeting, and I would pause at the end of the section to ask for comments. So I also wanted to point out at the beginning that regarding section 400, we didn't propose or introduce new issues or any significant issues. The changes are based on the comments we have received from the board to addressing the issues that has been raised. So it's mainly clarifications or providing further information to the approach that we have already presented to you before in June or in September. So the first topic is regarding the scope of the independent standards. The changes mainly that we introduced a reference to the international independent standards in part 5. So whenever there is a reference to the requirements in this part or in this part, it's going to be international independent standards in part 5 further on. That of course would mean that now we have 2 international independent standards. One is part 4, one in part 5, and they are referenced accordingly within the standard.
Yeah. So Sylvia, if you don't mind enlarging the screen,
yes,
the text a bit on the screen.
It's just there are a lot of documents to scroll down, so I will. I would recommend that you follow your own text if you have. Otherwise, it's. So the other change that we introduced, it is in 400.3c. It's really a provision that explains that the part 5 is applicable also to reasonable and limited sustainability assurance engagements. And in the context of reasonable assurance engagements, in part 5, we are referring to an assurance opinion. However, in the context of limited assurance engagement, these assurance opinion also includes the conclusions. So it's really just a clarification that when we are using the word opinion in the context of reasonable assurance, that also covers conclusions in the context of reasonable limited assurance. The next change that I would like to highlight is regarding the changes to the quality management systems. It's in 500.cf mainly. It really explains that it is on the sustainability assurance standards to require the firms to have a robust quality management system implemented. Given that part 5 is a framework neutral standard, the code sets out that it is on the sustainability assurance standards to determine which quality management system the firm should use. And in the text, as you can see, we included a reference that ISSA 5000 requires the application of ISQM1. But this is only an example to one of the standards that is out there regarding sustainability assurance engagement. The next change that we introduced is, I believe it's regarding the PI section. So the public interest entities, again, no change to the concept that we have discussed in September. We just introduced a new application material in 400.13a that would address the issue when the auditor decides to voluntarily use the PI provisions. It's really explicitly addressed and explains that if the auditor voluntarily applies the PI provisions for the audit engagement, that doesn't mean that another firm carrying out the sustainability assurance engagement needs to apply the PI provisions in this context. This is not a new issue. This is something that we already addressed. However, it wasn't explicitly explained in an application material, and that's what Workstream 1 proposed to do now. The other changes also just a clarification regarding the prohibition on assuming management responsibilities. Regarding the examples to the management responsibilities, we presented in September a couple of examples, a couple of sustainability specific examples, and we received some comments from the board. So based on these comments, we streamlined these examples just to ensure that there is a distinction between the non-assurance services and management responsibilities that are prohibited in this section. And for this reason, we rearranged a couple of bullet points under the section of the prohibition of management responsibility. And I think the final changes that are not editorial is in relation to the period during which the independence is required. This is in paragraph 5400.30 and the relevant application material explaining that the firm needs to or shall maintain the independence during both the engagement period and also, as you can see in point B, the reporting period selected by the sustainability assurance client in accordance with the applicable reporting framework. Regarding point B, we discussed that I think already in June, in September, that the Workstream 1 didn't propose that we use the reference to sustainability information that some believe would be equivalent to the period covered by the financial statements, given that sustainability information, the forward-looking nature of sustainability information, that wouldn't be appropriate to cover such a long period. In September, in point B, we included a reference to the period covered by the sustainability report. However, there were some questions and concerns regarding that period and whether that is clear what that period would cover. So Workstream 1 really went back to the original intent, and that's why we are proposing to refer to the reporting period. In the application material, in A2, we really explained that what that reporting period would cover, and it might be the same as the period covered by the financial statement. So this is one of the clarification we propose. That doesn't mean that we are proposing any changes to the period, it's just we refine the description. And I think regarding the section 400, it was the last significant non-editorial change that we introduced to this section. So Mark, unless I would pause here.
Yeah, so if we pause at the end of section 5400, are there any questions or comments that board members have? As Sylvia's explained, most of the matters that we've addressed are refinements to the text to make it clearer in response to feedback. And really the sort of the positions that were explained at the September board haven't changed, but this is an opportunity to comment on that first section.
Thank you, Mark and Sylvia. Sunam.
My question is about 13A, the discretionary treatment of PI. I understand the change, but on the other hand, I'm really struggling to understand this new paragraph because it said in the second sentence, in such circumstances, this does not mean that another form performing a sustainability assurance engagement for the entity is required to treat that entity as PI. So the other way around, is it possible for the other firm to treat the entity as a PI, such as making a discretionary decision?
Yes, so what it is it's picking up on the flexibility within the PI definition for an auditor to voluntarily treat a client entity as a PI.
Yeah.
However, if they choose to voluntarily treat that entity as a PI for the purposes of the audit, it doesn't mean that it's automatically a PI for the purposes of the sustainability engagement.
So it means that sustainability step can make a choice, make a decision.
For the purposes of the audit, yes, but we say that where it's a voluntary choice, it shouldn't effectively force the hand of the sustainability assurance practitioner to treat the engagement as a PI engagement.
But my question is about the SEP as sustainability assurance practitioner. Are they allowed to make a discretionary decision?
Yes, they can.
Okay.
But again, it doesn't bleed through.
So we should be very clear in our basis of conclusion about that. Yeah, in reading this main text, I'm struggling. It doesn't mean something, so I'm not so clear from this. So we need to be clear.
Yeah.
In this.
Thank you, and we'll flag that obviously for the EM.
Okay, my second question is about, I believe, paragraph 25. It's not question, but it's a difficulty we may face in the future. This paragraph relates to transparency disclosure, transparency requirement. In connection with audit file revisions, we've come a long way in implementing or in operationalize the requirement. But with this new requirement, we'll have further very high level of difficulties in operationalizing this requirement. We need to deal with IESBA, other standards that there's, not to mention non-PAs. So I believe it's a real challenge. It will be a real challenge for our board in make this requirement complied with. Just my comment.
Thank you. And I should say that there is probably two things coming out of this. The first is the task force is thinking about what do we need to cover off in the explanatory memorandum. One of the other things that we're thinking of, because we are mindful of this, is where is there a case in due course to also consider non-authoritative material to help with the application, particularly by those who aren't professional accountants. So that's really helpful. Thank you.
Thank you, Songnam and Mark. Andy, please.
Thank you, Chair. And first, I want to thank the working stream one, or actually both task forces. I mean, I can't imagine and I don't want to actually imagine the amount of effort it took for the people to go through to produce these documents, and because I know how much it was for us just to look at and read the documents. So I want to say that now, comments coming up notwithstanding. But I do know, and I am sincere in that. And then the second thing I'd like to do is, I don't want to be too crotchety this. I'm going to demonstrate something now. If the task force and others could do this, at least I would appreciate it. It's a 248-page document. So I have a comment on page 105 of the PDF. And if it's possible to ask people to tell me what page of the PDF you're looking at, it will at least help me navigate through this much quicker, because people are making comments and I'm trying to catch up with where they are in the document. So page 105 of the PDF, which is 5400.3F, is an important item that we've discussed, and I want the task force's view on this. You've got three sentences.
I'm sorry for interrupting
Yes.
you, Andy. I think that Sylvia and Mark did not understand well which paragraph you are speaking about.
If
3F.
you can If you can just add
5400.3F on page 105 of the PDF.
what the paragraph number and
5403.
3F. Thank you. Thanks for interrupting. That's good because I don't want to be discussing something that's you've modeled what I have. So it's three sentences, and the first one is quality management within firms is integral. I agree. The second one, sustainably, and we're not setting QM. I understand that, and I certainly heard that. The second one is a statement of fact that sustainability assurance standards are premised on sustainability practice having a quality of management. And then it says, for example, IESBA 5000. So that's an example of a particular framework. And how do we state that other frameworks, because we can give an example of this framework is premised with a quality management, but if it's an important part, how do we know that sustainability assurance standards are premised on quality management? And that's, I'm going on this journey because I believe that the practitioner will have quality management and they will adopt ethical standards. And this isn't a drafting point. This is really a substantive point that if it's premised on this, we know that premise is valid for the IESBA because we see the requirement there. But are we sure that middle sentence will be operational, and what are the implications if there's another in our framework neutral world? What will be the implications if it isn't true? Thank you.
Thanks, Andy. And two things I think on in response to that. Firstly, I think we can probably include a question when we go out to consultation to make sure that we have got things framed correctly. But I do know that from some of the work that's gone forward with the IAF, there are quality management arrangements in place around ISO work. It's just that those are different quality management arrangements, but it might be helpful for the task force to think about how we incorporate those.
Thank you, Mark. Galen, please.
I wanted to talk about the same paragraph because you raised the point in the information session on the word premise, and it's somewhat related to what Andy's talking about. Would expectation be a little bit stronger? The premise just, it seems like a question mark when I'm reading this, and it needs an answer. To what Andy's talking about when you're talking something outside of the ISSAs. And did the task force consider something other than premise?
It's something that we'll further think about. I suppose it comes down to my background as a history graduate using arcane terms, but no, I sort of take the point, Galen. It's do we have to be clearer about the fact that there is an expectation? Because certainly, if we use the two examples that we know most readily, ISSA 5000 and also the ISO quality management requirements, the expectation is that you do use both of them. So, perhaps a more certain term is something that the task force needs to include here, because I suppose now you've raised that question, it premised might suggest that there is an optionality to it, which there isn't. So I think that's really helpful. Thank you.
Thank you, Mark. Yao. Hi, sorry for the pronunciation.
Sorry. Thank you. And I'm looking for the page 103 and 5403A. And just for the brief comment regarding the scope of the IIS, the term general purpose framework is included in the glossary and in the code, and it's necessary for the sustainability assurance practitioner to determine that whether it falls under the general purpose framework. So in terms of the clarity, it's useful to include the guidance, what kind of the framework specific frameworks included in the general purpose framework, such as, the ISSB standards and TCFD, and in order to apply the consistent application. Thank you.
Thank you. And it is something that we've given quite a lot of thought to. And the problem is that we can't give any sort of exhaustive list of frameworks, and we intend the standard to be framework neutral. So we did experiment with the idea of trying to provide more examples about what would be a general purpose framework. But then I think the difficulty is that you are always going to leave things out, particularly if you're looking at the frameworks that are potentially used by non-professional accountants. And so therefore, on balance, we decided to just retain the reference to general purpose framework, which I think we touched on in both Abu Dhabi and subsequent sort of discussions in the margins of the board. It may be something that the task force has to look at, how it presents this in the context of the explanatory memorandum again, but thank you.
Thank you.
Thank you, Ahai and Mark. Luigi.
Yeah, thank you. I'm referring to 3C, and in particular to the box where there is the changes to paragraph 3C. The last two rows say workstream 1 proposed that part 4A also clarify this point in the context of a review engagement. I do not understand why it is necessary to process this change with respect to the extant code, where there are no issues in terms of understanding or in terms of correct operational approach to this part. Here in part 5, I agree that it was necessary to explain that this part also applied to limited assurance. Well, there is no need to do that in the extant part, and I don't think there is a need to a conformity amendment. And then I have other comments, more granular than that, and I will send them to you after this work.
Thank you, Luigi, and we'll discuss that comment tonight. It was the intention that it was a conforming amendment, but it may not need to be a conforming amendment. So we'll discuss that tonight and revert back to the board.
Thank you, Mark and Luigi. Sadia.
So interestingly enough, I had a point on the exact same one, the 3C. I think it's needed. And I actually think it should be elevated to the glossary so that when you read reasonable, it means limited and for this part, so that anyone looking at the glossary can easily identify. I was also wondering if the word audit, and I've tried searching the 200-page document, still remains. And when we say audit, do we also mean review? Then we need to put that glossary definition of audit back into it so that people understand that audit and review are the same. I have a question on engagement period of engagement period. Are you taking comments on that, Chair?
Yep, please.
I apologize if you've discussed this and I missed it, but I want to know why we didn't draft the new B as the reporting period in accordance with the applicable reporting framework. Why is there a need for selected by the sustainability assurance client? I feel like this is the first time where we asking the assurance client to set independence requirements for the auditor.
We'll take that away and discuss that one, Sadia, but my initial reaction to it is that you're probably right.
Sorry, Sadia, maybe I couldn't quite understand your point. Could you explain it again?
I was wondering why B doesn't just read the reporting period in accordance with the appropriate reporting framework. Why is there a need for selected by the sustainability assurance client?
Because reporting frameworks don't specify reporting periods. That's a simple matter of fact.
But wouldn't that selection of that reporting period be in accordance with the reporting framework, and not, you wouldn't be setting the engagement period for independence, you'll be setting the reporting period. I feel like it's a small technicality, but if you read it cold without that correct understanding, it might seem like we're saying that the assurance client will be setting the engagement period.
Correct. That's what the reporting entity is supposed to do. But reporting period, what we mean by this is it the annual reporting period? For example, it could be on a calendar year reporting basis, could be over the past 18 months. That is a reporting period, and that is not specified by the reporting framework.
I think probably, and the reason we did it, Sadia, is because we're mindful of the fact that, as in an audit, you can have an annual audit, but you can have a short period of accounts and a long period of accounts. Perhaps the way that we address it is the reporting period, the reporting period for the engagement, because then it doesn't matter whether it's a 12-month period, a 6-month period, or an 18-month period. It's still relevant.
Well, yeah, thank you. And I suggest that you discuss it a little bit further. Luigi, do you still want to add something? Okay, so Begonia, please.
Thank you, Gabriela. Well, my question is about 5403A, and this, to which engagements the independence standards in Part 5 apply. And I was thinking in the SMEs that are in the value chain of other companies, larger companies normally, they are not, I'm thinking about European standards. In principle, they are not obliged to prepare this information, but they will be required to prepare some information either for the suppliers, for the customers, or for the banks. And in that case, EFRAG is preparing some voluntary framework, and it's going to be, well, so is that included here when you talk about a general purpose framework required by law regulation? Would these SMEs company that would use the voluntary SMEs standards prepared by EFRAG and in some way endorsed by the Commission but not published by the Commission because there will be an EFRAG recommendation? Will they be covered by this or not? That's a question.
So it would depend on the status of that reporting. So in the case, like the jumping off point for this is that these requirements apply to those entities that are carrying out a sustainability reporting engagement. In order to report on their value chain, entities will place reliance on companies that they deal with to provide them with information to support material reporting in the value chain. In many examples of where that happens at the moment, the information that is specified and the form that it's specified in very much is set by the entity that's asking for the information. However, the EFRAG development is an interesting one because it offers a route to say you don't need to report this myriad of different requirements. Here's one way of reporting. Now, that would be, for consideration, but these requirements apply to the entity carrying out the sustainability reporting engagement in that first instance. And it may be that as over time we see a broader range of information or reporting subject to law or regulation, in which case it could be brought within. But at the moment, the focus is actually on the entity that's carrying out the sustainability reporting engagement as required by law or regulation. But it is something we'll discuss further because the EFRAG initiative is a really interesting one because it's trying to remove burdens on the SME sector to ensure that you only report once in one format and it's usable by anyone.
Yes, sorry, I thought that Begonia hadn't finished.
I have, but if it's about that, you can please.
Okay, Jens.
I just want to add, we are then with the SME standards in the scope of this, because under A is a reported in accordance with the general purpose framework. That would be the case. And under B, it would be publicly disclosed. So that's the requirement under the, hopefully we will read it, but as far as I know, the EFRAG standards are for publication. So also SMEs then will publicize these reports, and by that it is under the applicability of this paragraph. So that would be my interpretation, but we have not seen the standard. They will be published in the next few weeks, and then we will see whether that is appropriate, yes or no. So we have enough time to perhaps also discuss or adapt after publication of that standards, whether they are applicable under this regulation. But in my thought process, I would say yes, they are.
Thank you. And my other question is about the concept of another practitioner. So what is the difference really between this another practitioner and the external experts? Or are there another practitioners, those that are doing the assurance of the value chain companies? If this is the case, why not to make it more clear? So, and finally, in the definition, in the glossary, we are not sure that is consistent, the glossary with the text in the here, but this is something that can be, first of all, is understanding better the meaning of this another practitioner. Sorry.
So we'll pick up on the other practitioner point later on, and we'll cover off the glossary point when we come to the glossary after this.
Okay, wonderful. Ken, please. Andy, please.
No, that's fine. This is so big to deal with. So I've been, as we're page turning, I'm trying to think where best to insert comments I have about other practitioners, value chain and components and groups. And that seems that they're coming up later on, but the section that we have here does have the issues about the reporting boundary and the value chain. And so it sounds like it's best if I just wait until we get to it later instead of coming in now. So
Please, Andy, we've got a specific section that will cover off value chain, and we'll make sure that we cover off any comments about that.
And that's fine. We're doing what typically a page turn means that when paragraphs go by my screen, that means they go by my screen. If that's not the case now, and value chain and components will come up later, I am perfectly willing to play ball that way.
We'll certainly, they will come up. They will come up later on. I appreciate it is extremely challenging when we've got a document that's 200 plus pages to be page turning. But we will make sure that we pause and refer back to this section when we're discussing the piece on components and also value chain to make sure that we don't miss anything.
I didn't want to fail to communicate, give a false impression. So thank you.
Thank you, Andy and Mark. Ken.
Yeah, appreciate your diligence, Andy, and thank you for being so studious about the text. If I may take the board back to paragraph 5425 on page 114. We touched on this earlier in the discussion, and that's the point about transparency of the PI requirements that have been applied in the context of a sustainability assurance engagement. And essentially, this transparency requirement mirrors the approach relative to audits of financial statements. And my question is whether we've coordinated with IESBA, and maybe that's more a question to the team as to whether we've raised this with the IESBA team, because as I look at the approach in ISA 5000, there isn't a corresponding, let's say, operationalization of this transparency requirement in the assurance report. And given that IESBA just finalized track 1, whereby it now will be requiring a disclosure of the application of the PI requirements in the context of an audit of financial statements, I would imagine that it would be essentially just a small step for the audit board to apply a similar approach in the context of sustainability assurance engagements.
And we have raised it with the IESBA, Ken, and it's on the let's say, a list of open issues that we continue to discuss with them.
Okay, thank you, Ken. And Mark, I don't see anyone else, so we can move forward.
So then we would continue with the section 405. Just give me a moment. And it takes a while to get to the section. Okay, so section 5405, the group sustainability assurance engagement. So based on Workstream 1 discussed the comments we have received regarding this section, and as it is explained in the document itself, Workstream 1 believes that the standards that will go out for public consultation should include a section that addressing the group situations, and we believe that we need to seek input from stakeholders regarding the potential issues and operability relating to that section, if there's any. So our proposal for now that it should be part of the ED based on the reasons, the rationales the Workstream 1 has raised and communicated before, and also included in this document. The section itself does not include a lot significant changes since the September meeting. One of the key issues that we have already touched base at the end of the September meeting is the definition of the component that relates to that section, and it's already in a defined term in the context of sustainability assurance engagement in the glossary. And that would explain that the concept of the component is really equivalent to the concept of the component in the case of the audit engagement, and it wouldn't include the value chain entities. So the component definition does not include value chain entities. This is something that we have presented during the September discussion as well, and now it is in the glossary. So that's one of the changes we have introduced. The rest of the changes are mainly clarifications. In the introduction and the general part, we really reworded this application material to explain that this section applies to group and component firms and individuals, so team members from the component firms who are under the direction and supervision, and review of the group firm, because who are not under direction, supervision, and review, section 406 would apply. So this is a clarification in the introduction and the general part. We also made a couple of changes in the section that addresses the communication between the group and the component firms. These are also not significant changes, also clarifications to ensure that there is equivalence to the audit standards regarding the communication requirements between the group and the component firms. And I think those are the key changes we have made. The rest of the changes we introduced is really consequential amendments arising from the other changes we have introduced, for example, in section 400 and other places. So Mark, I would stop here and ask for comments regarding section 5405, so the group, and also if you have any comments regarding the component definition, I think it's we can discuss that here as well.
Sorry, I would just add very quickly, we have discussed this approach in their staff liaison meetings with the IESBA staff, and they understand why we're specifically addressing groups when ISSA 5000 isn't, and they're sort of content with that. They're not suggesting that we are wrong to do so, so they don't have any concerns with this approach.
Rich, please.
Yeah, this is more maybe not so much a question as a clarification that will become relevant when we get to the next section. In this situation, you have a component and you have another practitioner that you can provide direct supervision or review. Is that correct, what 405 is applying to?
Apologies, Rich. So there is a component firm and there is no direction, supervision, and review?
No, there is direct supervision.
Yeah.
That's 405.
Yes, that's correct.
Okay. But you could have components where you don't have the DSR, in which you cover in 406, I think. Right?
Yes.
So they're required, the component auditor is required to assert that they meet part 5. It says this part in here. Is that only with regard to the entity that they're providing the sustainability on? Because if you were in a pie, the parent would be a related entity, as would other related entities like sister companies and equity method investees. So are we requiring that? I think we are, but I just want to, because I don't think it's clear.
The short answer to that, Rich, is it should parallel to the situation you have in an audit of financial statements. So the independence requirement should apply in the same way to the parent and to those other entities. But we need to make sure that that's clear in the text.
Yeah, I think because that's going to get to my last question. Then why do we need known or reason to believe if they have to assert that they're independent with regard to all related entities? We shouldn't need that because they've already asserted that they're independent with regard to those entities. Because that's that we're talking about full independence if they're a component where there's DSR because they're part of the engagement team.
Yeah. If they are part of the engagement team, that the same rules apply to the component firms that currently applies to in the context of the audit. So there is full independence.
I agree, but
yes.
Why do we need the known or reason to believe sections in here then?
We need a known and reason to believe for component firms that are non-network firms, and we introduced that.
If they're a non-network firm and there's DSR, they have to be independent of the entity and all of its related entities to be equivalent with the IEESB standards of an audit.
That's not the approach that we currently have in the audit standards either, and we are just equivalent. So if it's a non-network component audit firm, there is also an element of reason to believe regarding the certain related entities. So there is independence, it's just based on the knows or reason to believe. And this is the same approach that we have in
It's exactly the same approach as in the context of group audits. Because again,
people who work with the IEESB have told me.
This is what's in paragraph 5405.11. You know,
I got you.
Yeah.
I just.
We have to.
It's not, I tell you, it's not at all clear how we're dealing with this situation. When you stand on the entity that you're providing sustainability assurance for, what entities are you assuring that you meet part 5 with regard to?
It's what's in 405.11. That's the same approach as in the context of a group audit. There's nothing different. The reason to believe comes into play in paragraph 405.12 and 5.5.13. So again, it's the same exact approach as in a group audit.
I'm okay. I'll hold for 406.
Okay, Luigi.
Yeah, thank you. Well, frankly, this paragraph is creating me a lot of concerns. And well, I really do not understand why we are proposing.
Sorry, Luigi, which paragraph?
Sorry, the section, the entire section. And the reason, well, I already commented in previous meeting and with previous comments, of course, but and maybe I'm repeating something I have already said, but and this is for various reasons. First of all, the experience we have about the new rules of group audit, we have no experience at all. The new rules are coming into effect next week, basically, and we are experiencing a lot of implementation issues that led also the staff to prepare 32 question and answer, which proves that the implementation is pretty problematic. And there are certain aspects of this implementation that are more problematic than others, like, for example, what is a component at which an audit work is performed, and transferring this concept, which is problematic under an application perspective, to the component in a sustainability work. Frankly, I don't know how to deal with it. Also considering that when we had to define this concept under a group audit standpoint, we had to work with IESBA, and we came out with a solution using the ISA 600 revised, but there are nothing compared in the world of sustainability. So we are consciously creating a lot of issues, a lot of implementation issues with this equivalent approach, which is not equivalent because we do not have a performance standard underlined, so it cannot be equivalent. Then another matter is with respect to other components that, let's say, FAQ had provided different scenario, but still the implementation is problematic there, and I think almost impossible here until when we would have a performance standard, which we do not have so far. And then let's say, this lack of performance standard also required some substantial amendment of the wording. The wording is not the same. In certain section, we change the task force and the board, if the board approve, change substantially the wording in order to incorporate concept like taking the responsibility and something like that, which is not in the group audit standard, but it is, they are included into ISA 600 revised. And again, we do not have a corresponding standard, and therefore the task force was forced to change the wording of the standard that is going to be effective. So we do not have experience at all. Another point that concerns me is it is true that we are putting forward this section in order to receive feedback and comment from stakeholders, but the question that I saw in the material that it was distributed are not complete or well prepared, because they do not mention in the question the fact that this approach is not equivalent to the group audit due to the fact that we do not have an equivalent performance standard. And I think this is important to be exactly clarified in the question, because simply asking, are you in agreement that this section should be incorporated is not sufficient, because we are not completing the information by saying that notwithstanding, we do not have a performance standard, and therefore the application of this standard would result in a patchwork of different approaches, inconsistent approaches, not homogeneous approaches in the market. Think about identification of components. Maybe the PA may make some sort of reference to ISA 600 revised. Non-PA, I don't know what they will do, but probably they will not refer to ISA 600 revised. So I'm pretty sure that in the same circumstances, we would have different outcomes and different independence provision, different independence standard applied. So I have other reason to be worried about that and concerned, frankly, and I will provide you the full list and the detail about that after this discussion. But frankly, I'm really very concerned in terms of possibility of implement this standard in a consistent way across various assurance provider in an homogeneous way, and well, with an operational difficulties that I think it is very close to impossible.
So I think a number of points on that. Firstly, it's been very clear from all of the outreach and engagement so far that we were told to not cover off a group engagement would be a significant gap in whatever material we developed. So, we were given a very clear steer to do that. I think, secondly, the IAASB developed 5,000 in the way it developed 5,000. Ultimately, one of the next steps for them might be to think about how they take 600 and bring that into further assurance standards for sustainability type engagements. And we have ongoing discussions with them about where their next steps might be. But as regards a myriad of different requirements, effectively, we only have three. We have a situation where you have direction, supervision, and review. You have a situation where you don't have direction, supervision, and review, and you have particular considerations in the context of the value chain, which of course isn't a component for the purposes of the group engagement. So, one of the things that I agree with is that this is an opportunity to go out and get feedback on the basis of a consultation. But I think, one of the things that has driven the task force is that to go out with a consultation that excluded any sort of consideration of group would not have then allowed us to put something in to deal with a group scenario without going out to re-exposure. We have included material for the board's consideration on a group scenario, and that will allow us the opportunity to respond to whatever feedback we get as a result of the exposure period, in order to make sure that we're able to deal with any stakeholder issues and concerns. So there is, and there, make no bones about it, there will be implementation challenges for sustainability type engagements, across the board. But we are looking at it in a way that delivers the equivalence with an audit of financial statements, which has been, the predication for all of this since our March meeting.
Thank you, Luigi and Mark. Andy.
Thank you. So I think I'm largely in agreement with Luigi, and I've expressed these views to the task force, and I do appreciate the consultation issues. But plainly put, I can't support the inclusion of the group and component aspect within the ethical framework. But there are a couple of things that I just maybe wanted to add is the special considerations for group audits that ISA 600 added was to close off some differentiations in performance by auditors in the performance of audit work. Now, again, as I'm saying all this sure sounds like I'm talking about audit performance standards, not ethical standards. It intersects with ethical questions because the people doing procedures are the ones subject to ethical requirements. But a sustainability report is a report prepared by management, and then it's up to the auditor, assurance provider, forgive me if I just mix those terms together. It's up to the assurance provider to get sufficient appropriate audit evidence. Where they go to get sufficient appropriate audit evidence sometimes leads them to a division, to a separate entity, to a different country that produces that evidence. And they attempt to identify whether it's significant, whether it has risks to it, and then they pile that up on their scale that I mentioned earlier for this audit evidence. And prior to I've been auditing for 45 years, and prior to the advent of group auditing, there was a difference. What if another firm does auditing procedures? Can we rely on that other firm to provide audit evidence? What if they issue a report and that report says they followed the same auditing standards we did? Can we rely on that? Now, there was a difference of opinion as to how much that could apply. And rather than answer that specific question or give prescriptions about it, ISA 600 was developed with the process of look to see where information that boils up to the report goes, and go there. So the whole aspect of whether or not there's a component is for purposes of doing auditing procedures. I understand the sentence of some sustainability reporting frameworks already require reporting on a group basis. I think it's a little bit of a misnomer in this context. Some reporting frameworks might require combined or consolidated financial statements, but those are required decades before there was any mention of group or audits. A group or a component is a part of the process of where auditors go to look. Components are where auditors go to look for audit evidence, how they identify materiality considerations. And I just fear that putting this in the ethical framework before there's a performance framework is not the correct order of things. And I certainly don't mind asking in the consultation questions like, what if an auditing framework includes group audits? How does that handle? But it should be unassailable that the people who are issuing the audit report, the assurance report, need to be independent of the entity they're issuing the audit report. We need to be able to answer that question. And I don't think we need to use terms that are not organic in the world of corporations, of group and component, unless there's a framework that includes those. So I'm not at all suggesting that the people who issue the reporting assurance not be independent of the entity, but they can still be independent of the entity without the added complexity of group and components. And so, you know, I mean, I'm just saying I disagree with you guys, and it's nothing personal, but I think it's just a professional disagreement, and for many of the reasons that Luigi mentions. But I did want to make sure that I at least convey what I think is my view of the world, that a reporting framework can't impose components or groups upon an assurance provider. A reporting framework can require a combined or consolidated financial statement. That could still be, I can have a consolidated financial statement and all the records for that could be over here in this file cabinet and this PC. So whether or not I choose to have different auditors go gather that evidence is a decision I'm making as the engagement partner. Now, maybe that other PC is going to be in another country. So maybe I have one of my auditors fly to another country. Maybe instead I contract with a firm in that other country. That's all just how I manage the control of my process of being an auditor. And so, but for that reason, I believe the group and component concepts are concepts that are performance based upon audit. We had to mention them in our we converged with the IAASB with the terms. That was the project we issued, the one that's now related to 32 questions. It's added so much complexity to it, but we didn't do that organically ourselves because those terms existed in the ethical construct of professional accountants. It was to respond to something in the auditing framework. So I've probably now babbled way too long, but I wanted to kind of adopt Luigi's comments. I understand, and to let the task force know that the easier approach would have been not to do what I'm suggesting, not to put it in there and ask the question. Instead, you made the hard approach of putting it all in there, and it just pains me to say that I can't support that. But I think we need to. I don't think would be short shrifting the independence. I think it would still be a high bar, and I think we need to respond to a performance framework from that perspective. So I'll stop now.
Thank you, Andy. Mark, since this is more or less along the same lines, do you want to take one more question or do you want to react immediately? So, Chana. Oh, sorry. Okay, Sadia.
I want to let Chana go. Maybe I have two questions and maybe this helps the conversation. The first one is that the IAASB ISS 5000 just closed for comment. In there, they had a question on whether the standard helped with group engagements. I know what my organization's response to that question was, and I'm wondering what other responses were, and if we have a litmus test of if they have an early indicator, if it was available, and also whether it met professional accountants and professional agnostics test. The next thing I want to note was, and the question is to the task group, we say we're going to put it out and we'll see what comes back. what are our options when things come back? If we get lots of questions on the operability of it, is this something that we would say we're pulling out of part 5 because we're going to use it as a different project? Is that an option after exposure? Or if we put it out on exposure, then this is something that we would have to conclude as part of this project.
So that's a really interesting challenge, Sadia. And I think, you know, the one of the concerns from the task force's perspective has been not to go out to consultation with a gap that we could then not fill without re-exposing. Whatever the answer is at the end of the consultation period is a matter for the board to decide. And, you know, it may be that the answer includes a further piece of work in order to address particular considerations. But I think, you know, what I would say is that it is, in terms of the sort of whole group question, it is easy to look at this solely through the lens of ISA 600. But equally, we are developing the code to be framework neutral and not to purely hang off ISA 600, which I think the task force has done. And we are already aware from the outreach that has been carried out and the engagement with, amongst others, the reference panel and others, that to not address the fact that sustainability information will be reported on a consolidated, combined group or other basis would leave a hole in the code in respect of the independence arrangements that should apply. And if you remember the earlier discussions that the board had, in order to ensure the relevance of the code, we were very aware of what the requirements of the European Commission were in respect of CSRD, which is we take the which is, you know, my words, not theirs, and it may be a slightly unfair description that Jens may well correct me on, but we take the arrangements in the audit directive and we passport them over into the context of a sustainability engagement. And therefore, what we have done is entirely consistent with that. Now, if we need to do further work to refine it for application purposes, we can do that, but we can do that with the benefit of having carried out a full public consultation and outreach, because if we don't include it, we have no basis to do that. And I don't want to be in a situation where, you know, maybe the IASB decides it is going to develop a further performance standard that applies in a group stroke consolidated stroke combined engagement. We will have nothing. And so I believe that what we're doing is we're maximizing our flexibility and ability to pivot to reflect the fact that people will be reporting using a number of different frameworks and a number of different performance standards. And we are ensuring that we cover all of those off. Whilst it is absolutely important that this can be operationalized in the context of professional accountants and auditors, it is equally important that it can be operationalized by others. And we're trying to strike that balance.
Thank you, Mark. Chana.
So when you look at the various countries have come up with, you know, the first tranche of entities that will do group audits, will do sustainability reporting. And, you know, even in Australia, they've published, there's like a 3 or 4 year framework, and they have given the turnover numbers of who are the first entities, and essentially it will be like the top 100 all of them are groups. Whether firms like it or not, they'll have to deal with it, right? They'll have to deal with the group sustainability reporting. So this is the practical reality that is already passing legislation. So the first round is going to be groups. So I think it's in the public interest that we address groups. And if the feedback comes back, and as Mark says, it gives us the maximum flexibility to pivot if there's a problem.
Thank you, Shannon. I think this is an important point. Andy?
Yeah, no, we can agree to disagree. That's okay too. But I did want to say that I don't believe it is going to create a hole, because that's something I clearly would never propose doing. I don't believe it's going to create a gap not to do it, because again, that's something I would not propose doing. So I just wanted to make sure that no one misunderstood my comments. The independence of people who perform assurance procedures should be unassailable, and that could be described in a way that doesn't use highly technical buzzwords like group and components. So, and again, there were group consolidated, combined financial statements for dozens and dozens of years, and people were independent of those entities and getting sufficient appropriate audit evidence before the added complexity. I would say there is nothing simple about ISA 600, and I could go off on all sorts of descriptions about that, and I don't mean to be leaving my prejudices for that statement. But the performance standard is that the people who provide assurance must get sufficient appropriate audit evidence to form a basis for their opinion. The ethical construct is that they need to adhere to the fundamental principles, and they need to be independent of the reporting entity. I hate to say it, but that's, if we can just now figure out ways to operationalize those couple of sentences, we can do that. I fear that if professional accountants who have had to deal with these terms for, I think my rough math is 14 years now, are having issues with operationalizing it. I do fear that if they're not a professional accountant, it's even going to be harder, because group and components are not organic terms. It's basically, where does the information go that I need to get assurance about? So anyway, I just wanted to elaborate that I would too could be concerned if there were gaps and holes. I really don't believe there will be. I think there's a way to ask these questions without doing it in this fashion, which I think is unwise. So thank you.
Thank you, Andy. Luigi?
Thank you. I was following the explanation and the need to have a standard which is agnostic and that could operate with different framework and different performance standards. But I don't think this was the decision and the choice of the task force. The task force repeated exactly the group audit standard, the group audit independence requirements, with some amendments due to the fact that there are no performance standards to make reference to. But the point is that in doing that, the task force decided to indirectly apply ISO 600 revised when speaking about components and speaking about all the construct behind that, and decided to apply the rule we adopted for audit. So basically, this is no longer an agnostic standard in terms of performance standard. We already decided to go into one direction. And maybe we may discover that other performance standards prepared by others even don't speak about component or like that, similar things, or define in a different way the same entities or the same situations, circumstances, and so on with different consequences. So we are basically saying, we rely on ISO 600 revised construct. We put forward this proposal, and we believe that it is professional agnostic and performance standard agnostic, which is not, unfortunately. So this explanation gives me another reason to be concerned.
Thank you, Luigi. Sadia?
Again, trying to be helpful, But how are we going to explain this here in our explanatory memorandum? Because we just said we based this off ISA 600, but the IASB actually hasn't said that you should be using ISA 600 for a group sustainability engagement. On that explanatory memorandum, I think I can see how if we clear on we are trying something, we know that there isn't a reporting framework, we know there's no assurance framework, but we're trying to construct an ethical framework or independence requirements. And my biggest question would be on operability. Because I think it's clear if you look at it hypothetically, but the operationalization of it is where the complications and the issues will come through. And I don't think even in during exposure period, we're going to be able to identify those. It's not long enough time.
Thank you, Sadia. Ken.
Well, I suppose I'll get straight to my point, and that is that I'm fully with the task force or Extreme One on their proposal. I do take a different view than Andy and Luigi and Sadia as well on their arguments. Andy, I do believe that you have effectively argued that this sport shouldn't have spent the last 3 years or however long it took to essentially put out ETJ. Essentially, there was, well, I mean, I'm sure you can come in, but essentially there was a big gap in the code in terms of how the code should be addressing independence considerations in the context of a group engagement. And if you were to take your argument to say, well, we could have made it very simple to say the component auditors who are involved in a group audit engagements, well, they need to be independent of the entity. And there you need to lift the lid. And then you still need to start to dig into the very, very intricate issues we spent the last 3 years addressing. So I think your argument is essentially arguing against having a group standard, setting out precisely the independence expectations in a group audit engagement. As to Luigi's argument that the approach is not professional agnostic, I do take a very different view. Frankly, I do not understand what is complicated in terms of the requirement for the group engagement leader to take responsibility to have, well, first of all, to have the communication of the relevant ethical requirements, including independence, passed along to the component sustainability assurance firm. This is a straight communication goal in order for the other firm to understand what the expectations are. And in return, to have the confirmation sent back to the group engagement leader so that they can determine whether or not they can go ahead and use that work. What is complicated about this is beyond my comprehension. And the point is not so much that there needs to be an equivalent of ISA 600 in the context of a sustainability assurance engagement. The point is, are we achieving the same objective of ensuring that the communication happens and that the relevant ethical requirements conveyed to the relevant component sustainability assurance firms so they can understand what they need to comply with? And in return, they have to come back with a confirmation. That is all there is to it. And in everything else in section 5405, there is equivalency with section 405 in the context of an audit. So I think that Workstream 1 has set out basically the full rationale, the basis for why this is in the public interest. And furthermore, I would argue that the board would not be meeting the public interest if essentially it leaves the question hanging as to what firms should be doing when they have, precisely to what Jana's point, start to carry out group sustainability assurance engagements. What requirements do they have to fulfill? If this is confusing, I just don't know how much more confusing it's going to be when there is nothing for them to follow. So my point is very simple. I think the Workstream 1 has absolutely the right approach. It is right for the board to go out with a proposal to collect feedback, and as fully subscribe to Mark's perspective that it's incumbent on the board to go and collect that feedback and then to determine what refinements might perhaps be called into play to move forward.
Thank you very much, Ken. I still see Andy and Luigi. And of course, I'm going to give you the floor, but I'll ask you to keep it short if possible.
I will. I just certainly have no problem with people having disagreements with me. In fact, that's my professional life is to have people swear to tell the truth and the whole truth, and that Mincer is wrong. So that's fine. I just prefer people not to tell me what it is that I have said. I think I made very clear that the ETGA was in response to conforming with the definitions that came from the IAASB standards. Had the IAASB standards not been modified, I don't think we would have needed an ETGA. So I wasn't effectively telling anyone that they wasted time, and I kind of don't appreciate that. But in fact, I'd mentioned that in my remarks that I think that was necessary because we were conforming to a specific framework and that aspect of group and audits. But I just not sure how people can be performing a group sustainability assurance engagement if there aren't a construct or standards for them to do that. They'd be performing an assurance engagement. And in the same way that we incrementally developed ethical standards, which in part responded to other standards, we can do that here. So, I mean, I think we do have and I only have the public interest in mind, and I'm not trying to find a loophole to allow anyone not to fall within the public interest. So I just wanted to make that clear. So I think it's also in the public interest to have something operational, clearly understandable, and that will provide a proper framework for an ethical construct. There's a lot of heavy lifting that needs to be done by the audit, the assurance standard setters, as well as the reporting standards. So anyway, I just wanted to clear that up. I think we were responding to something to conform our definitions.
I think that's helpful, Andy, because, and I suppose the reason that we've looked at it through the task force in a slightly different lens is because in a number of jurisdictions, we've got reporting frameworks that are reporting on a group basis. I accept the fact that one of the principal assurance frameworks that's being proposed is not on a group basis, but nevertheless the reporting frameworks are. So I do sort of believe that because the reporting will be driven on a consolidated basis, the demand for assurance will be on a consolidated basis, regardless of what the performance standard says or not. So I think the reason we are where we are is because in a sense, the reporting frameworks have come first. There is an assurance proposal, which is one of a number of assurance proposals from different professions or providers. But in a sense, the sort of slightly stood back consideration from an ethics and independence perspective has been to ensure that it provides that high quality ethics and independence to support whatever the reporting engagement is, because in a sense that's what we've looked at this from. How do we underpin public trust and confidence in information that is being publicly reported? So I take the point about the lag in terms of the performance standard, but I hope that sort of adds another layer to explain one of the reasons that we've got to where we've got to.
Thank you, Mark. Luigi.
Just to provide some clarification to Ken, because probably my comment before were not properly formulated, because I understand that he did not get what I was saying. I was saying that there are several reasons for which I'm not really in agreement with this approach. One was the fact that the task force had to change the wording of the group audit provisions. I'm not saying that there is something not reasonable in asking confirmation and receiving confirmation at all. This is what happened Sorry, this is what for many decades happened between the audit firm, as you probably know. What I'm concerned with is the fact that apart from changing the language of a matter that we had done for many years and we continue to do on the basis of the new provision of group audit, there are many other matters that are undefined at the moment. A more significant example would be what a component is. The definition in the glossary is not sufficient to solve this point, because what a component is a matter of professional judgment on the basis of certain evaluations that are described in a performance standard, which do not have so far. So my point is not the language, is not whether a confirmation is required or not, is reasonable or not, but the fact that this will not be operable in this way.
Thank you, Luigi.
Sorry, I just wanted to add a few comments on the terminology that we're using. First of all, I don't think group is a highly technical term. I have a lot of friends who are not professional accountants, don't even get remotely close to accountancy, and they perfectly understand what the concept of a group in a reporting context. And I think it's a term that's very much in general use. On components, I can understand that that is a term that is coming currently from 600. And one of the reasons we're using it is to be able to help demonstrate the equivalence when people are doing a read across, if I put it that way, to see how is this equivalent to audit. We do give a definition of component. I think it's fairly clear. If we to follow the IESBA 5000 route, yes, they don't use the term component, but they use the term entity. And they define an entity as the legal entity, economic entity, or the identifiable portion of a legal or economic entity, or a combination of legal or other entities or portions of those entities to which the sustainability information relates. And there's some application material that says a portion of a legal entity could, for example, be a single factory or a single waste fill site. So we could use entity in place of component, but then I think you then have the sort of indirect problem then the fact that entity is used in quite a lot of other places throughout the code, and I don't think you would necessarily read it in that same way, because you'd have that definition then that doesn't necessarily align with all the other uses of entity within the code.
I mean, the other challenge I have is that remember, Mark, when we got together in May, we looked at some volunteer group reports from large mining companies. Those are done by the Big Four. How are they determining groups and components now?
Thank you, Chana.
The last one. I promise the last one. The issue is not how they are determining the component now. The issue is, in the same circumstances, what different practitioner will do in determining what a component is without any definition of component, which is not sufficient, the definition we have in the group audit. Because what a component at which we perform an assurance work is a matter of broader definition that takes into consideration risk, materiality, and many other things that so far are not defined. So what it is sure is that we will have a number of inconsistent application and therefore a number of inconsistent independence provision applied. This is my worries.
Thanks, Luigi. And what I might do actually, Gabriella, is propose that we pause for a break now. But my sort of final comment is that in a sense, it doesn't matter whether or not we use the term component or something else. What actually matters in the context of what we're proposing for the code is whether or not that individual or that firm that is providing the service is under the direction, supervision, and review of the sustainability assurance firm or not. And those are the two, in a sense, those are the two buckets that apply in the context of the engagement. Are they under the direction, supervision, and review or not? And in a sense, if we get to a something else, it will always be a proxy for a different form of language. But those are the two key considerations. component has become a proxy for that in the context of this. It was intended to be a helpful proxy. A lot of stakeholders that we spoke to certainly didn't object to that proxy. If there is a better proxy, then we're very open to it. But that ultimately is the key consideration.
Okay, Mark, and I think that's very useful, possible the way to find a way out. But let's see. Andy, I see that you were almost about to say something, but it's okay. Okay.
I could keep chatting, but it's not productive at this point. Thank you.
So, Begonia, I'm sorry, you have been waiting for a long time, but I did not want to cut this discussion.
No, thank you. I was very interested in all the discussion. And I just want to add that following some prior comments on that, from the public interest perspective, we understand that having this in the code, it's important. So having some guidance, some standards on independence and ethics, even if this is not covered by the IEESB, it is important. So it's perhaps a pity that is not covered by the other board, but it doesn't mean that should not be dealt with in this case. So we don't have any problem with that. On the contrary, we think that this is a good approach to work towards these definitions in the code, even if some have to be modified because they need to be modified in order not to go go a step further. But I wouldn't say that component is a strange word either. But anyway, I leave it up to you, whose English is better than mine. Thank you.
Thank you, Begonia. Ken.
Thank you, Gabriela, and don't want to belabor the discussion beyond what's necessary. And I know that we need to get views from the other board members who have not weighed in yet on this matter. Maybe 2 points. One is in relation to Luigi's concern that the concept of a component might not be sufficiently articulated or defined in the proposal. I would just caution the board about really seeing where the boundaries are in terms of where the ethics standards are and where the performance or assurance standards ought to come into play. The definition of a component or the specification of a component, however that concept might translate in practice, really is a matter for the assurance standard to specify, whether it's on the basis of a risk assessment, whether it's on the basis of significance or materiality or other considerations or criteria. That is an assurance matter. It's not for this board to determine. As long as the practitioner has determined that there needs to be the involvement of another firm or another practitioner in carrying out assurance procedures in another part, or we use the concept of component in the proposals, but another part or entity or whichever term you might want to use, that's where the code needs to come into play in specifying the applicable independence requirements or provisions. And my second point is really, we just have to remind ourselves as to why this board undertook the ETJ project. And that wasn't to conform the code to ISA 600. And I just want to make sure that we don't miss the original objective of the ETJ standard. It was not about conforming the code to the fact that ISA 600 uses terminology like components or groups or related terminology. It was about clarifying the independence expectations for any firm that's involved in a group audit engagement, whether they are the reporting firm or a component firm, or actually the individuals who are involved at the firm level or at the component firm level. So that was the original purpose. It was not a simple matter of a conforming exercise.
Thank you very much, Ken. I still see Sonam. Sorry, Sonam, can you speak a little bit closer to the mic? I think it's not working.
54053 somewhere. Yeah.
That's right. On page 131, on the third row, I believe across the code, we have used ethical requirements in general, right? But in this particular section 4.5, the word requirement has changed to provisions. I'd like to know what consideration in particular avoiding requirements but changing to provisions.
Thank you, Sungnam. We were considered that the original intent was that we are covering not just requirements, but also application material. So it's a broader concept, but we will definitely discuss that within the task force if we need to return to requirements. But I think the provision, that's what we aimed for.
Yeah, I would say to my mind, the simple answer, Sungnam, is the term relevant ethical requirements. It is a term of art in the IEESB standards, and that is why it's used in ETGA in section 405 for group audit engagements. And given that we are now in the sustainability assurance context, using the term relevant ethical requirements when we don't have precisely an equivalent of ISO 600 would seem a bit odd. So that's why I think that Workstream 1 is using the term relevant ethical provisions, including independence.
Thank you for the question, Sunam, and for the clarifications. We will take a break now, but I think that after the break, we will have to clarify the position of the board with respect to this proposal. So I recommend that you take a chamomile or a coffee, depending on where you are. Take a step back and get ready to make a position, which of course it's not a definitive one. It's just an indication to the task force. Will be still subject to many things, but I think that from what we heard here, it's better to have the board's inclination clear. So 15 minutes, 20 minutes, or we'll be back in 20 minutes. Okay. Okay, thank you for being back, and I hope that you had your tea and your coffee and that you are now ready to resume the conversation. Of course, we have to move forward and go over this discussion. But before that, I think that what we heard around the table was extremely important from everybody that spoke. And this kind of discussions is exactly what makes any decision strong, be it whatever it will be. I think that everybody enjoyed the discussion. That's my recollection from the break. Everybody enjoyed it, and this is a very good sign. Nobody takes things personally. This is just clearly the clash of two different perspectives or interests, which are clearly on the table. And of course, that creates different approaches and etc. We heard from the task force about the reasons why the proposal is being made. And it's mostly because of two reasons, because we have to create we need to create an equivalent framework for sustainability assurance as the one as we have for financial audit. That's what we are aiming for. And the second, probably more relevant, is the fact that in reality, the facts show that most of the sustainability assurance reports are done within groups contexts. So just like China highlighted. On the other hand, we had considerations and concerns about burden, about complexity, and about not being profession agnostic, namely because of the concepts and of the framework that is being proposed, which can be of extreme complexity or some complexity, mainly for the non-professional accountants. So all the reasons and arguments are absolutely valid. I haven't seen anything here that was outside of what we should be discussing. We have to assume that there are two interests, so to speak, which are opposed. But we need to give the task force a direction, because we heard from the task force about the reasons. We heard from some members, board members, who are not fully happy with this proposal and consider that, have difficulties in living with it. But we haven't heard from the whole board. And this is a critical aspect, critical enough for us to have some comfort from the board with respect to where to go. I don't know if there are still any considerations that any board member may want to make. I see Sung Nam with his flag up, but I think it's just because. Sung Nam, do you want? Okay. So first thing, I'd like to know if there is still any board member that wants to come in on this topic of groups. And if not, we are going to have a show of hands to give some additional direction to the task force. Before that, I'd just like to alert for the following. This is an exposure draft, and of course, after the exposure draft, we will do what we have to do, depending on the reactions and the feedback that we will have. So this is the stage where we are now. The second thing that I'd like to alert board members is we won't have time for more than one exposure. So what we will expose, it's what we will expose. If we expose this proposal, then we will deal with the feedback. And on the limit, we may be forced to step back. If we don't expose, the opportunity will be gone, and we will not have time or any kind of opportunity to get back to this topic. So with this, and unless anyone else wants to add something, I would suggest that we go for a show of hands, and the show of hands is from the board members who is in favor of proceeding according to the task force proposal, even if some changes or some tweaks may have to be made. Sorry, and who is not? Okay, so we can start. So who is in favor of proceeding as the task force is suggesting? Sorry? On the groups, on just on this part of group audits. Sorry, not audits, issues. Is someone counting?
16 board members.
Okay, 16 board members, which means that well, we have a clear majority in terms of direction, and this is what it is. This is not a vote. This is not a definitive decision. This is nothing except that the task force will bring this, will move forward as proposed, and of course accommodating and trying to integrate any comments and suggestions that board members may still have. It's no use proceeding with this show of hands. Well, I would have some considerations in addition to this, but I think that we don't have time for many more considerations. I think it's very important that we have these discussions. This also prepares us better for what the future reactions that we will have, and also forces us to step back and reconsider if what is being suggested is really what we need to do or not. With all my understanding, and you noted that I showed my hand in favor, and the reason why I did so, and I'd like to be very transparent, being the chair of this board, it's because I really think that there is there will be a gap, a significant gap in terms of the coverage and impact and usefulness of the code if we don't cover a situation which includes most of the sustainability reporting that this code will be dealing with. This said, I'm of course sensitive to the topics of complexity, topics of profession agnostic framework, neutral, and etc. that were raised, and fairly enough by Andy and by Luigi, above all. And of course, during the exposure draft, we can try together, not only through the documents that we will expose, but in the conversations that we will have with stakeholders, outreach, and etc., try to get input of how, if we keep it, to make it simpler or alternative ways of describing things or of alleviating something which does not necessarily has to be there. So this is not the end of the road, not even close from that. This is the start. And so thank you very much for this very good decision, for this very good discussion. One topic that I'd like to, nobody raised it, but there are, well, rumors, nothing very concrete, but it seems that the IESB during the outreach period and in the responses to the consultation may have had some comments with respect to the need for them to develop a framework on groups. So it seems that this may already be covering something that some stakeholders at least feel that it is missing on the other side, and I'm saying this as a very unofficial and unconfirmed information, but it's what starts to being heard. And thank you very much, Mark. I think that with this you have a clearer in the understanding of what's the board's approach, and I'll give you the floor back.
Tempting though it is to say, we'll now just cover pages 145 to 243. Sylvia's now going to work through 5406, and we'll try and move, you know, as quickly as we can without constraining discussion through the remaining key sections.
So section 5406, thank you. This intend to address the situation when the firm plans to use the work of another practitioner who is not under the direction and supervision of review of the firm. This is not a concept that we propose here in the independent standards. This is already in ISSA 5000. Sorry, where was I? Yes. So one of the first thing that we addressed while introducing this session is to provide a definition in the glossary regarding another practitioner. So this is in a line, again, with the proposals with ISSA 5000. And one of the change since September to the definition of another practitioner, which is in the glossary, is that we define that practitioner as a sole practitioner, partnership, or corporation that performs assurance work relevant to the sustainability assurance engagement, and that is not under direction and supervision and review. So the basic change is that we define the other practitioner as a firm. so not an individual as we did in September. And in section 406, we provide independence considerations and requirements applicable to other practitioners of the firm and individuals from that firm who performs the assurance work. So there is the distinction between the two. Again, there is no significant changes to the concept of using the work of another practitioner. The gray box already summarizes the changes we have made responding to comments received from board members and other stakeholders. The key changes under the general section and the introduction that again we explains that this section applies when there is no direction, supervision and review, unlike the previous section in 405, and it provides a couple of examples to the situation or circumstances when the firm could use or might decide to use the work of another practitioner. We also included previously communication requirements relevant to the communication between the firm and the other practitioner, and it really determines the requirement for the firm to communicate the relevant ethics, including the independence provision, and also the requirement for the firm for requesting the practitioner to confirm whether the practitioner understand or understood these requirements and will comply or has complied, depending on when the other practitioner performed the assurance work with these requirements. The rest of the section, the independence considerations, it really determines these provisions that the other practitioner needs to consider. It's not just the other practitioner, it's the other practitioner, the the individuals from that other practitioner, and also network firms of that other practitioner. So these firms and individuals need to consider and confirm the compliance with such rules to the firm, so the firm can actually use the work of another practitioner. So these are the structure of this section, that there are communication requirements, and then after that, the requirements that would determine the context of this actual communication and what are the provisions the other practitioner need to comply with. I think I would just pause here and ask for any comments.
Thank you, Sylvia. Rich, please.
Yes, thank you. So this I have a couple comments. My first one is just one about maybe something we need to do either in the very beginning of this section or maybe just in the basis for conclusion. But I think we need to make somehow it clear that this applies to another practitioner who is providing sustainable assurance on a component when there is not DSR. And this section applies to another practitioner who's providing sustainability assurance engagements to a value chain entity. Because I do see a difference between that. And so that's my first comment, is I think there's a need for some clarity just to help roadmap for non-PAs a little bit. Secondly, though, I totally get that if it's a component, we want all the things that we've asked for here, which, as I read it, is not really different between whether we have DSR or don't have DSR. But when we get to the value chain entities, you're talking about a situation where another practitioner is going to assert that they have Part 5 independence relative to their sustainability assurance client. And I don't see the need for them to assert whether they know or have reason to believe about matters related to the group. And the reason for that is these are entities in which they are not within it's not just the control, they're not even necessarily investees of the entity. And they are providing a sustainability assurance report with regard to the matters that were relevant to their client. You're going to rely on that report. You're not going to alter the data they give you. You're not going to even have access to it, it would appear, because you don't have DSR. And so I don't know why we would would insist on the knows or reason to believe issue. And I think this has got an, maybe there is some element of independence we're leaving on the table. But the flip side is that is that enough of a reason from a public interest versus having lots and lots of reports that have scope limitations and disclaimers? Because when you think about large corporations with thousands of customers, I don't think you're going to get that kind of information back for every single entity that they're in the value chain of, right? In other words, if they have a very large customer base and every one of those customers is asking for the information in the value chain on the known or reasonable belief, I just don't think you're going to get it. And I'm not sure it's then therefore putting a disclaimer or scope limitation is in the public interest, because you're not really giving up much in terms of what you don't know. You've got an opinion from somebody who's going to say right in it, I complied with Part 5 of the IESBA code. They can say that right in their opinion, and you have what you need to know to do that. So I seriously think we ought to think about whether that needs to be in there. Now, maybe there's enough arguments that we need to put it in for ED and then consider whether to take it out on comments. But I do think that's going beyond what I think the benefits you get from getting that is not that great relative to the challenges of making that work. Thank you.
Thank you, Rich. Mark, do you want to take the questions one by one? Or?
Well, I think other than to say we'll certainly discuss those when we meet as the task force later. I think Rich asks a very fair question about what do we want to actually put out to consult to give us the flexibility to decide what is the best thing. And I know that we'll have opportunity to discuss the value chain point a little later, and it's what I take account of is the importance of not creating a situation where it becomes impossible for anyone to do any work because the independence requirements are so prohibitive. You sort of end up with a completely log-jammed, doesn't work at all situation. So we are very aware of that, and we'll take that into our discussions. So, and I know, Rich, you've also sent us some comments which are really helpful. So we'll revert to you on that.
Thank you, Mark. Sunam, please.
Thank you. On paragraph 5A1, page 147, it says, if the sustainability assurance engagement completed by another practitioner is not within the scope, the firm is still required to obtain confirmation. My question is about the phrase, firm is still required to obtain confirmation. I believe this phrase has been used with reference to IESBA or IESQMs, but here it has been used without any reference to them. Then my question is, what the basis of this so-called requirement in substance? And then what if making this paragraph as a requirement? That's first question. Similarly, in the next paragraph, it says, if the firm cannot obtain confirmation, the firm cannot use the work. I believe the similar expression or phrase was used by in the 380 in the morning in connection with the expert sections. So in this, I believe section, in this paragraph, my question is, what about, this is in substance a requirement, right? The firm cannot use. What if the firm shall not use? So I believe my question, two questions relate to drafting convention. Thank you.
And thank you very much, Sungnam. We will discuss this question within the task force, but the A1 and A2, they do not meant to be didn't meant to be a requirement. It's really explaining the consequences of the requirement, especially A2, that it's just the consequences. They cannot confirm the compliance with these rules. It means that the firm cannot use the work. It's not a requirement, shall not use. It's really, they cannot comply with the previous requirements. The same with A1 as well, explaining that in the context of the different sustainability assurance engagements, what's the consequences of the requirements regarding the applicable provisions or the applicable frameworks. But we will definitely consider, and we will check the reference that you just mentioned in the expert document to use these words consistently. So thank you.
Thank you, Sonam and Sylvia. Luigi, please.
Thank you. I have concerns with this section, but compare with the previous one where my concern were, I think, unsolvable. In this case, I think that the task force can do their homework in order to solve the issues that I see in this document that would result in the document not being in the public interest. And I'm explaining why. And unfortunately, this is also the reason why I have many comments, because I think there is something to do to fix it, but it is possible. First of all, as already I commented in September and I sent in my advance feedbacks, I believe that as it is written, it is a too high and unreasonable threshold to be met, at least for a certain part of entities that fall into this section. And the reason is that we are, let's say, the sustainability assurance practitioner would be prisoner, let me use this word, of whether the other practitioner will respond. And there could be many reasons for the other practitioner not to respond, because as already Rich mentioned, because they are receiving an awful amount of requests and therefore they will never respond, or due to the fact that they may respond that they are independent with respect to the entity they are assuring, but they also may highlight certain relationship with the sustainability assurance practitioner client, which on the basis of this text could prevent the sustainability assurance to use this word and therefore to have an issue. And or in another way, the other practitioner may be independent, may state that into the report, but will not respond for many reasons. And there are many variations to this scenario, so they are just example. And I know that Workstream 1 task force is aware of that because they responded that Workstream 1 is conscious that in practice, in most cases, it will be challenging to use the work of another practitioner. But if it is the case, why we persist with this approach and we are not trying to find alternatives to make it working? And I think that there are alternatives to explore. First of all, the one suggested by Rich, so differentiating the requirement between entities that are within the organizational boundary from the entities that are not, so the value chain entities. For the first one, we can, of course, ask confirmation. And I think that there are ways to obtain this information. They are within the organizational boundary of the group assurance client, and therefore, let's say, there are ways to obtain a response. And second, in this situation, we could also ask information about the sustainability assurance client, because they are part of this organization. So I'm fine with this approach. Instead, for the value entity chains with our third-party entities, independent, without any organizational links, it is not reasonable to ask them relationship and interest with respect to the sustainability assurance client, because it is not relevant. They are preparing information outside the context of an organizational boundary. Maybe they are preparing this information and this would probably be most of the cases for multiple users, and therefore not just having in mind a specific user. So why we are interested in knowing that, it is without any value, frankly. Another suggestion could be to consider the case where the other practitioner would issue a report with an attestation of independence according to IESBA Part 5 or something which is at least equivalent. In this case, why we cannot rely on this statement and make it easy for a sustainability assurance practitioner to use the work of these other practitioner. Elsewhere, if we keep the approach as it is, IESBA is de facto creating an issue and then are expecting other to solve the issue when we say that is that the assurance standard to address an issue that we are creating. So frankly, I don't think this is, as it is, fit for purpose, but I think that by using, let's say, a positive approach, it could be fixed, it could work, and I think it is the right direction to consider a differentiated requirement and section in cases where there are no DSR. It is, well, I agree with that. What it is not working is the fact that we are considering all these entities together without any differentiation and are creating a too high bar in order. It seems that we are preventing the sustainability assurance practitioner to use the work in most of the cases, which are just creating an issue for the public interest. Because, say, as already Rich mentioned, one of the options would be, let's say, modifying the report and there is scope limitation, which I don't think it is what we desire to have. Or the other alternative is to perform directly the assurance work, which could be impossible in the value chain and in most of the value chain entities. So we are basically creating an issue and, well, we cannot say someone else would deal with this issue. One example, well, I have many other comments, but I will stop here for a moment. But I have one example of why the differentiating approach may help. And it is really relating to the approach we are having, where we are inquiring whether the confirmation that another practitioner is independent. Let's assume that we receive this information, this confirmation, and then we are inquiring whether they have relationship with the sustainability assurance practitioner client. And let's assume that we receive information about this relationship. Are we expecting that the sustainability assurance provider conclude that the first confirmation is false, is untrue, simply because there are relationship ongoing and other interest with respect to the sustainability assurance practitioner client? It may be right if the entity is within the organizational boundary, but it is wrong if it is a third party. So I think that fixing these 2 points may solve a lot of issues.
Thank you, Luigi. We will discuss that in our task force meeting tonight. I suppose the one challenge we'll have to try and get our head around is that ISSA 5000 sets an obligation on the practitioner to evaluate the independence of any other practitioner. So in preparing the draft, we had sought to align with ISSA 5000, but we will have a look at the way in which it's framed to see whether there's anything that we can reflect on.
Thank you, Mark. Andy, please.
Thanks for that. And I'll sign into most of what Luigi just said, but I think what I also heard was, and this is the point I wanted to bring up, is if the other practitioner issues a general purpose compliant report that indicates that it is independent in accordance with our standards, then could that not be used in the evaluation of the other practitioner? Again, I'm not meaning to draft, but I think the the segregate, because we're starting with the assumption you can't direct supervise and review. But it is one thing with regard to companies that are owned by or controlled by the entity that you're reporting on. It's another when it's outside that reporting boundary. And gosh, it seems like if they issued a compliant A+ IESBA report, IAAS report with an IESBA representation, that seems like something I would take into account.
Thank you, Andy. Vanya, please.
Thank you. This is a topic that interests me quite a lot, and sometimes I think that we lose a little bit the sense. We are here at IESBA discussing the ethical side of the assurance that will be provided for reports that are reporting the value chain. And we are discussing that because the assurance standard to be prepared will require assurance for the supply chain. And this standard will be required because the standard for preparing reports require information about the value chain. And this requirement by the standards have actually two purposes. First of all, is the fact that the value chain counts, because the company cannot state that they are all good and the guilty of damaging society and the planet is on the value chain, and they are free of any kind of shame about that. So this is the first thing. And the second point is rather to stimulate these small and medium companies that are not required to report in any other way to actually have good practices that will, in a chain, evolve and affect everyone. So it is to induce best practice in small and medium companies. But this standard also requires proportionality. We are discussing the fact as if every single supplier and client will be reporting, and this reporting will be introduced in the company's report, and this report with everyone, this massive a lot of information will be subjected to assurance and then to the ethical requirement as well. And the proportionality is a fundamental point in that. So we will not be requiring information on every single supplier. And when we are requiring, the information that this supplier will be provided will be according to its business model. So if the company is small, the information they will be requiring and then will be subject to assurance will follow this proportionality as well. So I understand this kind of confusion, and we called attention to that in the last ASAF meeting at IFRS Foundation, and they are preparing a guidance for reporting the value chain. And I understand that when our exposure draft is finished, this guidance might be out. And then we'll have a clear view of what exactly will be expected to be provided when we are reporting the value chain. And I understand that this clear view will impact back both the standard for auditing, for providing assurance, and what we'll be discussing in the final version of IESBA code. So my comment is just not to be precipitated in taking an action, a position, when we do not yet have all the answers in this sense.
Thank you very much, Vanya. Mark, do you want to react now, or can I take one or two more?
Well, I was just going to say it's a very useful reminder because, of course, you know, the whole IAA, the whole ISSB reporting framework is, as Vanya said, you report material issues, and if they're not material, you don't include them in the reporting when it applies in the context of the value chain, and I think that's a very helpful reminder to all of us.
Thank you, Mark. Rania.
So yeah, I'm listening to the conversation, and I mean, I definitely see there's merit to all the arguments that are being put on the table. But I mean, and I definitely agree that we shouldn't. I mean, we have to align with the audit board. We cannot lower the threshold, but at the same time, it's very important that, I mean, somehow we come up with something that we make sure, I mean, we always keep in mind the public interest and serving the public interest, because ultimately, if our requirements, I mean, as has been said before, really raise the bar too high or are prohibitive, and we end up with so many scope limitations and qualifications, how will that serve? I mean, if that becomes the norm, then how will that serve the public interest? It might actually backfire. So it's very important that we don't put something that ultimately, you know, creates a different kind of norm. I think that's very important, just to keep that in mind.
Thank you, Rania. Luigi?
I have some detailed comment, which I believe are relevant. I will not speak about editorial matters, so I don't know whether I can start. First of all, paragraph 0.2A1, I think that this is one where it is required to clarify which entities we are thinking about, because it works if it is an organizational boundary entity, so that may become component. It doesn't work for value chain entities because it was defined that value chain entities could never be component. So when the task force proposed, if the firm is able to sufficiently and appropriately be involved in the other practitioner work, section 4 or 5 apply, well, it should be clarified that this is only for entities that could become component and not for value chain entities. This should be very clear in order to avoid, let's say, inconsistency between sections. And this is an example of what I said before. I think that there is still homework to do, but I think that the final stage would be probably fit for purpose. Then I will not speak about other comment I will provide you after this discussion. There are, where there are, say, let me find the right paragraph. Here it is. In paragraph 0.5, point A state the practitioner is independent of the entity on whose sustainability information the other practitioner performs. I think that it should be clarified what the entity is. Is just the entity? Is the entity under controlled entities? It is, let's say, probably should be clarified. The entity word is also recurring in many situations, and sometimes it is really difficult to understand which entities the text is pointing to. Like, for example, when there are examples of relationship between the other practitioner and the sustainability assurance practitioner client, sometimes there are in the example the term entity, and it is really difficult to understand whether this entity is well, the entity assured by the other practitioner or which entity within the organizational boundary. So I wonder whether it is possible to clarify this point. In paragraph 0.8, upon receiving the notification as set out in paragraph, a firm shall evaluate and address any threat. I think that here it is. Well, I was asking for a guidance to understand how to deal with that. But if you are able to differentiate the requirement, as I already commented, probably this may prove to be clearer, because if we are just requiring this information for the organizational boundary entity, it is clear what we have to do. If we are also including value chain entities that are third-party entities, I don't know what this paragraph means and how it should be applied. Well, I was trying to keep very short. You will see that there are a number of paragraphs, a number of comments highlighted in yellow as important, but I did not mention all of them for the sake of time.
Okay, thank you very much, Luigi. Mark, I believe that this does not, you are not going to react now, but you're just going to do the homework.
We'll discuss, we'll discuss this evening.
Okay, thank you very much. Begonia.
Thank you. Well, thank you very much. We thought that this another practitioner was meant to cover the value chain. So it's clearly something that we don't have understood the same. We have not understood the same, so perhaps need some clarification. And in our thinking, if it was covering the value chain, this should have made more clear. But you didn't see you didn't read equally, Luigi. So something is not clear. No, or maybe we are wrong, but we read it differently. So that's our point, that from the public interest perspective, it's important that this is clear for all the readers. So this is not clear. We also have thought that it's not obvious the difference between this another practitioner and external experts. Again, we find some sort of, well, new words that we don't know really, with different independence requirements, which may be reasonable or not, but introduce more complications. And something else, which is about the way it is defined, because it is said in the glossary that when the firm is not able to direct, supervise, so it's in negative. But then in the paragraph 406 to A1, it is said that when the firm is able to do it, then it can use the another practitioner. So, but the another practitioner is defined as a negative. So it's quite maybe you could look at that better, because if you define it as negative, then you cannot say that you can use the another practitioner, because the another practitioner is not someone that you can use by definition. Do you know what I mean? So this is a contradiction in the wording, but this is easy to solve. The other thing is more relevant, I would say, because we read it differently, and it would need some better clarifications. Thank you very much.
Thank you. And we will look at how we clarify that. The one thing I would say is that the approach that we've taken does follow what the IASB have used in ISSA 5000, which again is requirements that apply both in the context of entities within the value chain that are not subject to, where the assurance work is not subject to direction, supervision and review, and also in the value chain as well. So we probably have imported confusion as a result of that, but we will have a look at how we try and resolve that.
Yeah, thank you very much, Mark. And to your point, I think that this is an additional issue with which we are dealing, which is the need to make things clear and the need to be consistent with the IASB, which is being also a request from the stakeholders. So, but I think that the point is clear. If there is enough confusion, then we should try to to solve it. Andy, please.
Thank you, Chair. I just wanted to make another point for the task force consideration on this, tying a couple of things together that have happened about the issue of evaluating the independence of the provider with a value chain entity, just from the ethical construct of that, and materiality. Oh, I keep knocking that over. And the issues raised about how practical it would be and so forth, and materiality. It is probable that the intersection of the entity that the auditor's reporting on may have information that's material to that reporting entity, and therefore the auditor needs to deal with that and consider the independence of the assurance provider that it's coming from. But the value chain entity could be minuscule to them. So that's the issue, I think the practical issue that's being dealt with, that the value chain entity may not be able to handle that level of direct correspondence. And it's not because it's an immaterial item to the reporting entity, the one we're concerned about right now. It's because it's immaterial to the value chain entity, the one we don't have direct supervision and review over. So the solutions being discussed about, instead of getting direct confirmation for those entities, if you could look at the compliant report, that might provide an acceptable assessment of their ethical construct. But it's not because it's immaterial to the world, it's immaterial to that value chain entity with the owner of the report. But our current practitioner, the one we're dealing with, the one issuing the sustainability report, it's important to them. So if we make something important to them that they can't comply with, I think we've all heard that's not really our intent, to have that lack of reliability. So, and in my vision, I'm seeing that the practitioner can look at some report that seems compliant. So anyway, so I babble, but I wanted to give the task force my views on materiality relative to the reporting entity.
No, thank you, Andy. And again, something we will discuss. I suppose, the extension of your point is that we're trying to write something that covers really a quite vast range of alternatives, because you have different engagements where the value chain may be comparatively small compared to the entity, or it may be much, much, much greater. And, the importance of that value chain reporting may be quite limited in terms of its importance to the entity, or it may be absolutely fundamental. And we've got to make sure that we've got something that covers the range of scenarios that people will be asked to work with. And in some it works better, and in some it works less well. So we have to try and sort of land on something that is going to best deal with the public interest challenge.
Thank you, Mark. Christelle, please.
I think based on the discussion we just had here, I would support to have a separate section for the value chain to address all these specificities which are about independence, which are based on these comparison of the size of the type of relationship, etc., because it has nothing to do with the components, the boundaries, etc. And so it would allow to address more clearly the specificities of the value chain, and maybe in a more scalable drafting, or more scalable implementation also.
And we obviously do have section 5700, which is devoted to the value chain specifically, but it may be that we look this evening to the extent to which we can either consider where that's placed in the draft, or consider whether it's possible to have a scenario where 5406 focuses on entities within the reporting boundary, and 5700 refers to entities that aren't within the reporting boundary. But that's something that we'll think about tonight. But I think if we did that, we'd have to sort of change 5700 into 5407 or something to make sure that it was obvious what happened in those different scenarios.
Thank you, Mark. Luigi.
Thank you. And I just to clarify my position, I think that this section and the possibility for a sustainability assurance practitioner to use the work of another practitioner is in the public interest, and my personal interest, it counts not so much, but it is my personal interest, is to have this section working in order to allow the sustainability assurance practitioner to rely on the other practitioner report. So I am providing another comment in order for the task force to think about it. We had a long-standing experience of SOC report for service organizations. And so I think this is an experience that could also guide in how to deal with this matter of the value chain entity. When we have the SOC report, we are not inquiring the assurance provider about the relationship they have with the users, because there is no sense. Let's say this report could be used by multiple users, virtually an entire industry, in certain situations. So it is not really linked to this relationship, his or her independence. It is more linked to the entity, which is subject to the SOC report. And with this experience, we are relying on this report. Well, I know that this is not an actual example for the sustainability environment, but it is just a similarity. We are relying on this report in order to satisfy ourselves in our audit activity. So I wonder why we cannot adopt the same similar approach for the value chain entities, which has no link. I'm clear with that. I'm not speaking of every situation where another practitioner is involved. I'm thinking about entities which are third-party entities providing information for multiple users and without any links with the users. So in this case, they are truly third parties. And so I think that there are rooms here to think about a differential approach and to concern the fact that we may, the sustainability assurance practitioner could rely on independence confirmation included in the report, could rely on other means of communication. There is no need to inquire about sustainability assurance practitioner, client interest and relationship, and so on and so forth. I think that we should leverage on current experience we have in order to arrive at a situation which is in the public interest, is workable, and could provide a solid basis for the sustainability assurance practitioner to use the work of others.
Thank you, Luigi. Mark, we still have Rania. Maybe you take the two. Rania, please.
Yeah, I just wanted to add to what Luigi just said. I mean, I think everyone here wants to reach a workable solution. And to that end, I invite the task force or the working group to consider the fact that to consider the workability of this section in developing economies where the accounting profession and the assurance profession are challenged by also other constraints. And so, I mean, such a high threshold might really be problematic. So I think that's very important to keep in mind as we set that threshold. Thank you.
Like, I think both of those points go well together because I can't remember whether it was in one of our task force discussions or whether it was at the September board meeting, but I said, you know, if I were a betting man, I'd say that in 5 to 10 years' time, we'll have a SOC style industry to support sustainability reporting. The problem is we just don't have that now. And then the other thing, of course, was we'll have that in parts of the world, but it certainly won't cover all economies and all areas where sustainability reporting is carried out. So we'll have to look at that, but in terms of obviously recognizing that the code that we set is a global code and not, you know, not lean too hard into one set of needs or another, but the reminder is a helpful one.
Thank you, Mark. Laurie.
Mark, that's helpful. And I think I just wanted to emphasize this whole, I was kind of waiting till we got to 5,700 to talk about value chain, but we seem to have slid into it here a little bit. But I think the value chain with regard to suppliers is particularly challenging. And so I do encourage thoughts around this practicality issue is a big deal. And especially when you get outside of the space of component auditors, it gets a little more attenuated, a little harder to do. And I often think about, not that I would ever ask you to do this because it would be impossible, but the impact analysis on this type of thing, I wonder how much we would be touching and how much work for how much satisfaction that we might be getting, and especially on value chain suppliers in particular, but some of this other value chain stuff that's coming out of this section, which frankly, I hadn't really focused on. So I think if you can bundle those together and then think about, is there a differentiated treatment for the value chain stuff where it's not part of the component, what might that look like? I think that would go a long way toward thinking about the practicalities of the impact that this has cost benefit, right? In terms of what are you really getting?
I agree with that, and it's something we'll have a look at.
Thank you, Mark and Laurie. Ken.
Thank you, Gabriela. And just a brief comment. I think this has been very good discussion because it's precisely raised considerations of operability, which are very important in the context of putting up provisions out there for public consultation and collecting feedback. I would just caution, though, as Workstream 1 takes the feedback for further consideration, to have in mind that the concept of another practitioner really is an assurance concept. It is driven, in this case, from ISA 5000. It is not for the code to specify the nature and extent of the work that the other practitioner will carry out, and for that matter, whether materiality enters into play. Whatever context, whatever criteria is or used in ISA 5000 in this case to drive consideration of using another practitioner is for ISA 5000 to address. But the moment another practitioner is engaged to carry out assurance procedures, there needs to be independence. And this is where the board it comes into IESBA's court and for this board to address. So again, I would just caution about really entertaining considerations of weighing the materiality of whether of the work of the other practitioner relative to the broader context of the sustainability information that is being reported on. But that said, I think enough has been said about the need to really take a sort of close look at making sure that provisions are going to be operable.
I agree with that. A very helpful steer, Ken. The one thing I'm determined we avoid, though, is to funnel the code down the bifurcated argument of whether it's based on single or dual materiality, because we have enough plates to spin.
Okay, thank you. Thank you very much, all those who provided comments, and Mark and Sylvia. And I think that we can move.
We will move on. So there's nothing on fees, is there?
Yes. So 5,410 regarding the fees. There are no significant changes in this section, only some editorial regarding clarification for situations when the firm also provides both sustainability and audit engagement. And also in the gray box or in the explanation within the document, you will find a detailed explanation regarding the discussion we had on the proportion of the fees and what was the workstream one's views and responses to that. But there are no changes to this section. So
I'll not go through the next couple of sections because there's nothing in those either.
So
sorry, what I propose is, because there's very few changes in the next few sections, is we're going to go through 2 or 3 sections at once and then we'll pause, because otherwise we'll never get to the end of it.
And actually, the next section that we have changes, it's in the long association. So we can really compile quite a lot of sections regarding 410 on fees. We have no significant changes. We included the workstream 1 views on the proportion of the fees that we have already discussed in September. The next one is on the compensation and evaluation policies. Also, no changes. 420, gifts and hospitality, no changes. 430, actual threat and litigation, no changes. 520, financial interests, again, no changes. We deleted the references to the value chain entities in these sections because we moved that to a separate section. So that's the only thing that's why you can see some provisions highlighted in yellow. No changes to 511, loans and guarantees. There are some yellow provisions for the same reasons. 520, business relationships, same. And I think my computer just froze, so sorry for that. Family and personal relationships, again, no changes. 522, recent services with sustainability assurance client, again, no changes. Serving as a director or officer at a sustainability assurance client. Employment with a sustainability assurance client. I think the last one is the temporary personal assignment. Again, no changes. So I think we covered quite a lot of sections. So we would pause here to collect any comments on sections from 410. 5,410 until 5,525. So is there any comment?
Yes, Luigi, please.
Yeah, thank you. Well, there is just one point where I'm not in agreement, and it is not a surprise because it was subject to comment before, at least in 2 meetings and some anticipated comments. I really do not understand how we can consider the fee from sustainability assurance non-audit fee. After all this work we did, well, the task force did, and also the board did, in order to apply the equivalent principle, we are still treating the sustainability assurance as a non-audit services. It is really impossible for me to understand. Sorry, probably my mind would be limited, and I'm sorry for that, but I cannot understand why, frankly. It is an audit type activity under the independence perspective. It is still the audit. We are applying even the partner rotation on a cross basis with audit. We amended the extant code in order to consider this point, but still we are considering this activity as a non-audit. Well, sorry, I'm not able to understand, so I'm completely in disagreement with that.
So the reason for it, Luigi, was just that in the context of an audit, there is a statutory engagement that attracts a statutory fee. In many jurisdictions at the moment, a sustainability engagement is not a statutory engagement, and therefore we didn't feel we could parallel those requirements across. So that's why it's different. It's because one is statutory and one is not. But you know, we're very happy to sort of look into it further, but we can't really sort of make one statutory when it's not.
Sorry, if I can respond to this one. I don't think that the fact that one is statutory and the other no is really the basis for considering this type of work and non-audit. We are applying the same rule for audit and sustainability. We are triggering the partner rotation. Well, even other effects, but this is probably the most evident. And we are considering this simply because it is not statutory in some jurisdiction or in most jurisdiction other than audit. But I'm not able to understand why, frankly. And the other thing is, if we really believe that sustainability assurance may pose threats to independence with respect to the audit, why the audit is not posing the same threat to independence to sustainability. Frankly, it is another matter that I do not understand.
Thank you, Luigi. Chana, please.
The code defines audit as something done on historical financial statements. So this is not on historical financial statements. But I get Luigi's point that, you know, in a sense, there's some equivalence, sustainability assurance and audit. But for what Mark said, as well as how the code defines that audit is of historical financial statements, I think the classification is reasonable, but Mark, maybe we have another look at it today in the evening.
Thank you, Chana. Andy, please.
Yeah, so I'll try not to repeat what's been said, but I think trying to make sense of a principle basis or a rule-based standard is tricky. I agree it's not defined as an audit, but when we issued that standard, we didn't have this at the time. I really have to say, in substance, I agree with Luigi in terms of the independence required for this A-level independence engagement. So.
Thank you, Andy. Sanjeev.
I also agree with Luigi's point. I think just because, Chana, you made a point that it is defined differently in the code. Sustainability was not there 5 years back. With the changing times, we probably should look at it differently is what I think the task force may consider.
Thank you, Sanjeev. Christelle?
Yeah, just to say that I raised this concern, I think it was in September, and I support Luigi's a point. We are putting the same bar on all material aspects of assurance. And so the question of statutory, whatever, that's, it may be in some jurisdiction, it is not statutory and we don't care. I mean that's not what is important. What is important is the impact on independence. And so I would argue that it should be, there is value in the separation of the information. Yes, maybe. And so not confusing the two missions at this stage of where we are. In most circumstances, presently there is not an integrated report, but it will come maybe. But I'm still in favor of considering that it is really comparable to audit and it should be reasoned in that frame and not as other assurance type of fees like we had until now.
Thank you, Christelle. Chana?
So just to be clear, we are not talking about combining the fees, right? No? Yeah, you're not saying that. Yeah, okay. Because I mean, in some countries, as Mark said, you have to disclose the audit fee. Yeah.
Thank you for the clarification. Rich, please.
Yeah, I understand why the task force went this way, but I also I tend to support what has been said that by Luigi and Andy and Christelle and Chena, or I'm sorry, Sanjay. I wonder if we couldn't figure here's where I come out. Sometimes you're going to get this fee and it's going to be one bundled number. PA's doing both services. And then, I don't know how you deal with that for breakout for various local disclosure requirements, or even our own disclosure requirements. But I would think it would be problematic to suggest that if a sustainability assurance engagement got large relative to the audit, both of which require the same independence and both of which are under international audit and assurance standards, that we would say, well, you can't do the audit because the non-audit services are too large. I think that would be, so kind of, I don't know what the answer is, but I heard Chena say something like, can we find maybe it's more of a way you describe how you consider the relationship or something like that. If we can't just say it doesn't have to be considered a non-audit service for IESBA purposes. Thank you.
Thanks, Rich. And yeah, it's the fact that we're, I suppose, considering the threat. We're not saying you can't do it, but the very real consideration, for instance, I have at the moment is that if I used a UK example where you were the statutory auditor and you were invited to provide assurance over the sustainability information, that would be caught by the non-audit services fee cap because it's not required by statute. And so therefore, even if your payment is bundled together, there's still a requirement to separate it out. So it's a sort of legacy of a not very satisfactory situation. And we'll try and sort of navigate a way through it that perhaps focuses more on the threat to independence than the absolute nature of the numbers.
Thank you, Rich. Christelle, do you still want to speak? No. Sadia, please.
So I agree with the way the task force has landed on this. And I think it comes from, depending which jurisdiction you come from, whether you see audit and sustainability assurance as equal would play a factor on how you would see this being evaluated. I thought a solution would be to actually have a specific question in the EM asking, being clear that this didn't follow the same norms and that we've capped with non-audit versus other assurance, and ask for feedback and see how people would react, whether they think we should maintain that norm or actually equate them.
Thank you, Sadia. Rania.
Thank you. So I mean, I made my position clear on this in the previous meetings. But my question is based on what Mark just said concerning the threat to independence. And I'm just trying to understand. So the threat to independence is because of, the combination of the fees is too high. I'm just trying to understand. Okay, so wouldn't that be covered by the cap on the total fees? You get my... That's what I'm
not in that example, Rania, because the cap would only be based on your audit fee, not on your sustainability fee.
So can't we introduce a cap here on the total fees from that single client? I mean, because
well, the cap is a matter of law, not of the code. So
why not use that as an option? See, my point is, if you're providing non-assurance services, and then let's say you're giving advice, and then you are auditing, for example, then obviously your independence is impaired because then you are auditing something that you have given advice on. But in this case, as has been said around the table, both of those engagements require independence. And so I really don't see where the problem is, except for having sort of a client concentration or a fee concentration within that client, within that, because of that, the two engagements together. And so you are becoming financially sort of dependent on that client. And so maybe that could be remedied by introducing that sort of a cap. I'm not sure if that.
May I just clarify? The issue is not the fee concentration and the dependence on that client because of the large amount of fee, is the composition of the fees. That we are talking about two separate engagements. And given that there are two separate engagements, irrespective whether one engagement is an assurance engagement or the level of the independence, it could impact the independence of the auditor potentially, that it's already providing another service that is important to that firm because there is a large proportion of fees for that service that is different from the audit service. So it's not the dependence on the client, but the dependence on the specific separate engagement.
When that other engagement is you giving, providing an opinion that requires independence, you get my point. I mean, I sort of see, I think it's different when you're talking about two engagements that both of which require independence, as opposed to one where you are providing, for example, advisory services or a consultation, and another that requires independence. There I see the conflict. I mean, again, that's just my the way I see it. Yeah.
Okay, thank you. We have to be a little bit faster, because otherwise I see a big problem for tomorrow, if not for today. But Sunam, please.
Yeah, I can hear the arguments from both sides. In response to Mark's response, okay, what about using the expression, the phrase we discussed in the morning in connection with expert? We, such as adding to the extent not otherwise addressed by law, regulation, or other professional standards. I believe this phrase can be used in response to these arguments, I believe. Yeah, you can take consideration.
I think Sumna, maybe it's already there, because we are referring to the application of the guidance in 410 in part 4A, and it already includes the consideration whether if it's mandated by laws or regulation. So this is a factor to the evaluation of the threats. And again, the purpose is not to provide any kind of constraint for the provision of sustainability assurance engagement by the auditor, is just to acknowledge that there could be an impact on the independence, and for the firm to consider and evaluate the level of such threats and put safeguards in place is necessary. So there are not any kind of intention to constrain the provision of sustainability assurance engagement.
Okay, thank you very much, Sylvia and Sonam. I'll take these two last comments, I think. Christelle?
I struggle with this question of the nature, of the different nature of it is assurance in a general framework with the same level of independence required. For me, it's if it happens that you are an SAP and you get a chance to do the audit also, or the reverse movement, it's just the same situation as being the financial auditor of a group that has a huge business combination, and you are led to be the auditor of the so there is a breach of resources, of capacity. There are a lot of impact, but not the question of acceptability of the fees. I mean, this separation, I still struggle with it, but that's all.
Okay, Christelle, thank you very much. Well, just only one comment. Mark, I think that there is nothing to react immediately because you already said, but of course the task force will take this on board tonight.
We absolutely will, Gabriella, and I'm sort of long enough used to this to know that if everyone doesn't like what I'm doing, I'm usually in the right place. So we'll navigate a way through on the back of that.
Very humble position.
Can I propose we work through long association now, Gabriella?
Yes.
So in section 5540, the long association, no significant changes again. The markup that you can see in the text, the markup from part 4A is really addressing the premise or what the board and agreed on previously, that when we are considering long association, the firm needs to consider the provision of sustainability assurance services and the audit, not services, sorry, sustainability assurance engagement and the audit engagement as well when determining the threats related to the long association and when determining the time on and the cooling off period regarding the partner rotation. And the changes you can see in yellow since the September meeting is really just include some clarification to support that approach and including some examples on how to calculate the timing on period if the firm provided sustainability assurance engagement and audit engagement as well to the same client. So I would just stop here and see if there is any comment on section 540.
No comments, Sylvia? So seems that everybody's comfortable.
Start. Of course. Just before we start on NAS, one of the things that Rich flagged with me that we need to discuss tonight in the task force is that although we have sought to have equivalency with the arrangements that apply in the context of an audit, we also need to make clear with an overarching statement that when we're talking about independence for the sustainability assurance practitioner, it's independence in respect of the entity as well as the subject matter information. So that's something we'll discuss tonight and make sure that that's reflected. But I just wanted to raise that before we go through any of the detail.
Thank you.
Sorry, Sylvia, Rich has a comment.
Yeah, real quick, and you don't have to answer this now, but at the end of 548A1, the second bullet, it suggests that the engagement leader for this, and it's just oddly worded about how they would move to EQR. Is it clear you're saying they would move to the EQR of a separate engagement? And you don't have to answer that now. I would not think we'd say it's okay for the engagement leader to become the EQR on the same engagement in the subsequent year, because I don't think we suggest that's a good practice on our long association. But I wasn't real clear what we're trying to do. You don't need to respond now. You can just look at that.
If I understood your question correctly, which we are talking about the engagement partner, that's for the audit, and then the EQR for the sustainability assurance engagement. So not the same type of engagement.
Thank you.
So then we would move on to 600. And regarding the section 600, so just the general section on the provision of non-assurance services, not talking about the subsections now. I think there were no significant changes, only editorial changes and some clarifications. So I would just ask if you have any comments on section 600. Then I would, there are no comments, then I
Sorry,
would.
Rich, do you
Oh.
still want to make a comment? Okay.
Yeah.
Okay.
So the next one is section 601, which is going to be 5,601. So apologies that the document is not correct. Regarding the sustainability data and information services, I would like to just point out one change that we have proposed since September, and it's regarding the deletion of an exemption in 5,601.7, recognizing that in the context of the audit engagement, it was an exemption provided for specific cases that it's not necessarily relevant to sustainability assurance engagement. So we propose that we do not include this exception in part 5.
Luigi, please.
I'm not really sure that the deletion is the right thing, the right thing to do, because the circumstances may well be existent. We don't know, frankly, because it is too early, but simply because we believe it is unlikely, I will not change this provision in case it is applicable. It is a provision that would not raise any issue. So I prefer retaining this paragraph.
We'll certainly sort of revisit and discuss that, Luigi, but our thinking was that firstly, it was a carve out from the code, and carve outs are never welcome. And so therefore we shouldn't mirror it over into a sustainability engagement. And there was also quite a lot of discussion about the carve out really not being as good a response in the public interest as it should be. So that's why we decided not to bring it across, but we'll revisit that in our discussions later.
Thank you, Mark. Sadia, do you?
May I respond? Sorry. I agree that the task force could have a different view, but if we are applying the equivalence principle, I would suggest to continue applying it in a consistent way. So I would prefer keeping the consistency, which is the reason why I accepted certain position previously. So I don't see any reason to delete it, frankly.
Okay, point taken. But for consideration, Sadia.
So mine wasn't on the actual deletion, was just the way we say intentionally left blank. On this section, we've actually changed the heading of the subsection. So I'm not sure if we have to say intentionally left blank. And then also sometimes I felt like intentionally left blank could, not in the section, others. There's a reason why we intentionally left blank, and maybe at this point in time, we should explain it a little bit more. So the example that I came across was engagement period in the group, where we said it's already defined for earlier on. It would be nice if we say intentionally left blank, please refer to that section. So if someone was reading it cold, they'll be able to understand. I think it will help with understanding, not just now, but when it becomes implementable.
The reason we have, and we will explain that in the EM as well, because just the equivalence or between part 4A and part 5. So we are not rearranging the paragraphs in part 5, but we are following the numbering that we have in part 4A. So.
Okay, thank you. Luigi, do you still want to make any comment? Okay, thank you. So. No comments.
I think in the rest of the subsections, we didn't really make significant changes, but I'm looking to the task force members. The only one change that we made that I would point out that in section 610 regarding the corporate finance services, there was provisions including examples to corporate finance services where we included an additional example to due diligence services. And based on the comments we have received from the board, we deleted that reference. So it's in 410. But I think the rest of the changes are only editorial. 610, sorry, not 410, 610. But yeah, you cannot see that change because it was an addition. And so I just explaining that we responded to the comments received. So I think I will just ask the board if they have any comments on the subsections in section 600.
With reference to paragraph 603.4, I noted that you changed from the extant code from 5603.4.
Just give us a moment. Yes. 0.4.
Yeah.
The extant code point on the service, while you amended it to point the subject matter of the service. And this is not clear to me because what it is required to be assessed is the service, whether it is subjective or not, and not the item covered by the service.
I think so.
Yeah. Sorry, the basis for the change, Luigi, was that we had some text that we had put together and we ran it by the reference panel, and their recommendation was that we change the text to what we have here. So it did come from consultation with the reference panel because we wanted to make sure that what we were doing is proposing wording that was actually genuinely relevant to sustainability practitioners.
Yeah, but it does not make sense because it is not the matter under evaluation or under the services that really matters here. The type of work the sustainability assurance provider will do. So frankly, I do not understand these changes because it seems that you are under evaluating the services that they are doing.
Okay, Mark. I don't see any other comments.
Okay, well, we'll add it onto our list of things to discuss. And then I think, well, yeah, I think possibly with your agreement, Gabriella, we'll discuss the value chain tomorrow morning because I can't actually say I have the enthusiasm or strength to go through it at the moment. You can't go to 5,700 right now, Laurie. It's banned. It's an absolute prohibition under the code. So I think that if we say that we've gone through the NAS requirements, I think probably it will help all of us and it will help the task force in particular if we can come to the value chain fresh tomorrow. And it might also give us an opportunity to think about how we might leverage what we've got for 5,700 in terms of its positioning to help with that another practitioner piece, and whether or not there are things that we might want to bring out of 5406. Yes, 5406 into that 5700, but equally think about its positioning within the code. So if you agree, I would propose to pause here and use the session in the morning to discuss the value chain, because every discussion we've ever had about the value chain has taken longer than we ever thought possible.
For sure, Mark. Just noting that we are finishing the meeting 23 minutes before schedule. So maybe we could start 23 minutes earlier tomorrow.
It gives me 23 minutes to go and buy a bottle
I'm
of
just
gin.
kidding. No, I'm not going to do this to you. I think that we need to be fresh and not angry at the start of the morning. So yes, we take that suggestion, and we hope. I hope that the first part of the morning will be enough to finish this discussion, because we can't delay, and we are really following a very strict timeline and agenda. So yes, Mark, if you think it's possible, I'll go with your suggestion, which I think it's a reasonable and wise one. And in that case, unless, well, Rania.
I just wanted to say it might be helpful if you could share with us the relevant parts of the audit standards. I mean that are relevant to the value chain discussion. I think it would help us perhaps, better see where we are and what are the requirements. And as doesn't
ISSA 5000, the audit standards?
Yeah, I mean, whatever part we are trying to align with, I think it would.
There is no specific part, because it's really of the principles determined in the entire standards.
Okay, then perhaps, I think it would help us and maybe make your job easier if we understood exactly what we are trying, the independence requirements that we are trying to align with. I think that might be helpful.
Yeah, no,
Perhaps
that's
a few bullets.
Yeah, I'm not sure. There are a couple of paragraphs in ISA 5000 that speaks to value chain.
It doesn't have to be the paragraphs themselves, but perhaps just the main themes that would impact our discussion. It's like
No, I wouldn't suggest that the task force try to extract the main themes, as it were. I think we can point the board to as I say, the relevant paragraphs for the board to read and understand the approach taken in ISA 5000. But importantly, the approach with respect to the concept of another practitioner, because that really permeates both the organizational boundary issues as well as the reporting boundary issues.
Yeah.
So we can certainly identify the relevant paragraphs in ISA 5000, but I think the task, the workstream has more than enough to deal with tonight to have to.
That was going to be my point. Either they do the job in accommodating these comments, or try to work on ISA 5000. So I think it's not possible to do that both, but if you can direct the board for some of the paragraphs, that would be useful. So now we are just 15 minutes before shadow. So let's stop now. And I wish the two task forces a very good work. I think that Mark was trying to beat Laurie in the number of times that he said, yes, we are going to take that on board for tonight. So you are on competition. And I hope that you'll be very successful, and that you manage to solve part of these problems. Thank you very much for this very substantial and important discussion today. I think that we are in a good position to make some decisions with respect to the questions that have been raised. They're very valuable, by the way. I don't know if Begonia wants still to say anything, but I think that maybe tomorrow after the discussion, you will provide us with a PIOB comments. Thank you very much. Have a good rest for those who will rest or fun, and have a good work or both. See you tomorrow at 9.
Rania, just very quickly, if you download ISSA 5000 or just access it on the website, paragraph 51 in that exposure draft is the one that's on using the work of another practitioner. There's other considerations throughout that standard, but that's the paragraph that is using the work of another practitioner.